Ladies and gentlemen, welcome to the Midday Market Monitor. Today's a very special episode of the Midday Market Monitor because Nvidia is breaking through some pretty egregious records. So far today, they're up almost $500 billion on the day in a single day worth of stock movement since yesterday's close. It started out going quite low. There were some people that were able to buy into this stock around $203 per share yesterday after the reaction to their commitments on spending on memory was pretty egregious. What we didn't know is that we had to wait for the call to realize why those commitments were so high. The commitments were so high because they are believing that they are going to see growth and have unbelievable visibility. This is their words. They have incredible visibility into growing even much more than 70% into next year. Right now, that is due to extreme supply constraints and that they are going to do everything in their power to relieve some of those constraints. So that is leading Nvidia to have to get re-rated in the stock market. I know that this is an expensive company. We're looking at a company over $5.5 trillion, but if you're going to be putting up hundreds of billions of dollars worth of revenue, and then on top of that, you're putting up what could be next year somewhere along the lines of $17 of EPS, maybe even a little bit higher than that. The price to earnings on this stock for next year is extremely low. Some people could put that as low as 15 times based on today's prices. So pretty wild, but I can see all the Wigman people that are coming in. This must be Steve. Welcome, Steve. I'm glad you guys liked the effort that I was putting in to support my man Jensen. And hopefully while we're live, we can actually see the unbelievable 10% up in a day. I don't know if we're going to get there, okay? I obviously believe that this stock will continue to appreciate and hit new highs. I think before we end up seeing the next quarterly report, Nvidia will pass 250. We have a long way to go. There's a lot of appreciation that's still needed in order for it to continue to climb. But I'm just looking at what Wall Street is anticipating for overall numbers here. It's hard to deny that buying into this company, knowing full well that the build out is much longer and much more sustained than people are giving it credit for, let's just take a look. So I ended up putting out this tweet earlier, and this is quite important. The earnings upgrades are in, and I talked about this yesterday that this was going to happen. Okay, because you can't have midterm guidance be this blown out. Obviously, individual numbers that end up coming in higher, Nvidia said they were going to do 91 billion. They ended up doing 96 billion. These sort of numbers are, egregiously high. But those types of rates, whenever you're talking about the difference between next year's numbers being 570 billion for the year and now being closer to $700 billion, that's where the upgrades are coming from. Okay, you're not off by 5 billion there. You're off by over $100 billion for next year, which is more than what we did in this entire quarter worth of revenue. That cannot be underestimated. So what we ended up seeing is some analysts coming up here, and I've organized it in a way that we're starting off from the lowest ones, UBS 280 to 300, Needham Research from 270 to 300, and then all the way up to Raymond James, which just recently did an upgrade. They were at 330 about less than a week ago. They just upgraded that to 352, and then another upgrade to $515 per share, signaling a $12.5 trillion valuation. Now, you think I'm bullish. I'm calling for a $250 price target by end of year. That's my hope. And that would lead my my portfolio to obviously do very well. And the portfolio is looking really good right now. Greatly over 50% of my portfolio is now put into Nvidia. But hopefully the other names are also going to benefit. We don't get to Nvidia $500 share prices without memory also climbing up, without Lumentum and many of the other component parts, ASML, TSMC, all of these names have to benefit if Nvidia says that they are going to deliver 70+% growths. Okay. And that's where I think that the market is completely wrong. Nvidia does not get to go up 10% without those other names that are also major proxies at potentially even larger bottlenecks like Lumentum, like Micron. So that's where I think that the market is getting this a bit wrong. And I'll take it. I mean, I've got a lot of Nvidia shares, but this is an entire statement across artificial intelligence. So I know that a lot of people wanted, the AI trade to go wrong, and Ed Zitron has been going off, and there's been a lot of people who are very supportive in this. I think this is because people are worried about job loss. People are worried that they did not buy into these names early enough. But this is like what you're seeing right now with people buying into Nvidia at these prices is they've realized is like, you're either going to sit on the sidelines the entire time and watch someone else get rich, or you can try to be a part of, the assets that will be the major parts of this investment, which obviously Nvidia is the cornerstone of the AI trade. How much Nvidia am I selling today? Not $1. Not $1. Okay. I put no trust into anything this guy says now. Why? It's up 9.5%. I texted Amit and all the boys yesterday, and they said, "How are you guys feeling about the stock being down over the last little bit?" And I said, "Well, I'd rather it be up 9% than it be up only 2%." And here we are. And people do hate AI. I mean, it is very true. But I don't think they will over the long term. I mean, there's always been a large swath of people who hate technology in general, but then they still own iPhones and they still go on Facebook, and then they complain about capitalism, and then use all of the benefits and the tools that capitalism has created. So I think it's a lot of noise and not a lot of signal for Ed Zitron to be out there and talk about how none of this is working. It's just not what we're seeing. Okay. I'm in shock that 50% of his portfolio is in Nvidia. Brother, I've been saying it for years. Like years and years and years. I made a video in 2025 talking about how like this is all published, this is all on the record, about how I'm selling out of selling out of Tesla and rotating my second biggest position into my first biggest position. And then that's what ended up making that position size so large. So, and then I also got clowned on for doing that, saying how much I was going to regret it. Well, you tell me when. I don't know, guys. Like, I'm not even making large predictions about where Nvidia is going to go. I'm just listening to what Jensen's saying. I don't think he's a liar. And if he says that he has great visibility into these sales, why would you think anything else? This is not some new startup that's come about, and we believe that the CEO might be some sort of FTX like, fast under 30 type individual that's trying to make a name for themselves. It's nothing like this. You always have to be worried about those types of people. But you're talking about a 63-year-old man who's been building this exact same business for, 33 years? They're not here to put up false numbers today. Okay. I'm up over 100% in cake, a smoked Nvidia. Good for you, man. I'm not. I'm not anti other positions. I've got a lot of positions. But I think a lot of people really thought that the market cap would stop Nvidia from moving today, or that the earnings. I saw this post under Jose's post yesterday, and he said, it's extremely bullish. Here, let me see if I can find it. He said that it was extremely bullish that, where is Jose's post? That they ended up seeing visibility into potentially even more than 70+% growth, right? And that he's extremely excited about that. And one of the comments was like, why should I care if the stock doesn't appreciate on this news? And that is your alpha. Like, if a stock is going, if the story of the company and that's followed by real earnings, I'm not talking about empty promises here. I'm talking about real sustained earnings, profitable, free cash flow generative, like things that you can actually use to, increase shareholder yield, to return money back to shareholders via special dividends or buybacks, these sort of things. Then earnings have to align with the stock eventually. Doesn't have to today. In this case, it did. Okay. But like, there's a reason why Warren Buffett was one of the richest, if not, he definitely was the richest investor for a long time, is that he focused on fundamentals. And that's all you have to do. At least that's all I have to do. But I'm up 200% on Nvidia. How much is Nvidia up the last year? This guy's got to go. I'm not anti AMD at all. I think that they will be a major beneficiary of what Nvidia just said tonight, that they are supply constrained and that this is going to last extremely long, and that they have visibility into hyperscalers growing 1.3 trillion for next year. AMD is going to be a major beneficiary of that. So AMD is going to win. I think Nvidia is obviously going to win. They've got a much higher market cap, but boy, oh boy, are they doing well. And we might even pass. Oh my gosh, I didn't even realize. We might even hit 230 today. 229.99 is where we just hit. What's the deal with Micron? Well, this one's surprising. Honestly, I think if there's I trimmed out my cost base on Micron back when it was like, I think 1,050, something like this. Not the high, but higher than where it is today. And I'm wondering, at what point do I buy back in from my cost base? Not a huge purchase, but it was roughly about 30%. So just adding that additional 30% back, and then putting that back into Micron. It's at a much higher price. It would raise my cost base, of course, but the lock-ins that Nvidia is saying right now, Jensen literally came out and said the constraints on memory were actually way, way stronger than we had forecasted for. So it's not like they knew that this was going to happen. It's actually outdoing itself. The constraints on memory are stronger than they believed, and yet Micron is not adjusting to those comments. Maybe because the commitments are only for the next 3 years, but who knows? Maybe it's even longer than what people might even be saying, because over the next few years, maybe the supply constraint, because agentic artificial intelligence is much larger than they believe. Jensen said this thing, and people, I think, are brushing it off, but it's insanely true. That an organization like NVIDIA has 40,000 employees. They will likely have 4 million agents working for them full time. And we don't have the data centers needed to supply this level of growth that's to come. They don't have that today. They'll need it into the future. And the Vera Rubins won't be able to supply that. And the amount of data centers that are currently being constructed won't be able to supply that. And this is just today, not into the future. And there could be a level of euphoria that I think that the markets will pull back from. But did we hit 230? No, not yet. We're trying so hard. It's actually crazy. I was talking to Steve, and Steve's like, I don't know, man. Do we buy more? I was like, I cannot. I can't. I will look to actually, I'll have to start trimming Nvidia soon. I'm not going to do that before 250. Not because I don't believe that it's going to go even higher. I actually do believe in a lot of the estimates that Wall Street has that believes that this company is a $300 stock trading for $200. I do think that. And like, Chris, I don't know if you're watching or whatever. I'm happy to have you on. The idea that this company is going back to, one day be $1 trillion company, the way that they're diversifying, whether that's the acquisitions of Hugging Face or Nemotron or the capital supplier for a lot of these data centers for which they're doing revenue splits, this is not going to be a company that just sells hardware. Jensen is grabbing this entire industry by the horns. I truly believe that if there was similar companies in the same space as Nvidia going into this boom, they would not have been able to capture the value the way Nvidia has. I mean, they are truly all in, fully levered up to the gills, like really, really diversifying their business right now. And everyone's just worried about Rubin because that's what's making the money. But there will be sustainable recurring revenue streams that Nvidia is able to create that will not allow this company to go back down to $1 trillion. Now, I don't know if there will be times where Nvidia ends up having huge pullbacks as the question of the build out becomes, like people really question if that's going to happen. But yes, he said that we're going to have a over 80% drawdown on the stock. The Nvidia, Amit here said it well. The Nvidia of today will be vastly different and far more powerful in a decade from now. There will be recurring revenue streams for Nvidia in the years to come. Too late to buy? Well, I mean, it depends on what your outcome is, or like what you're looking for in the investment. I believe that Nvidia is going to be a $10 trillion company. I think that there will be the years that go by, and because this is not going to happen tomorrow. This is over the next 3 to 4 years. It's going to climb up to a $10 trillion business. This is my belief. It's not guarantee. There will be companies that 3, 4, 5x during those moments. So people will continue to look back on my investment in Nvidia and say, yeah, but I invested in AMD or Nebius, or as that other guy said, Cheesecake Factory. It's like, yeah, I'm not saying that this is the greatest the investment. It's just one that I have a ton of visibility and belief into. Okay. For it making up for such a large percentage of my portfolio, I don't want spec plays. I want like high chances of returns here. I feel like I'll be able to get that in Nvidia. The greatest story that we could have possibly have seen from Nvidia happened yesterday. Earnings are sustained for longer. They've increased that. Okay, I've put together for you guys a presentation. There's enough people here. We can go through it. Let's go through and do an entire earnings review of Nvidia's greatest quarter that we have ever seen. And by the way, far beyond my expectations. Greatly, greatly far beyond my expectations. Let's go through and have a look. Okay. This was Nvidia's Q2 2027. It's technically a calendar year Q2 2026, but that's just how they reported in case you see any of those numbers. It's not for next year. It's for right now. That being said, at the time that I took this screenshot, we were up roughly about 9.4%. Right now, we're up about 9.7%. So it's a little bit higher, 229.95. And this is off the back of a triple beat. Revenue beat Wall Street's expectations, not just Nvidia's expectations, but Wall Street's expectations by 4.4%, a larger beat than what they usually sustain. EPS also went up 6.22%, $2.22. That was a really good beat as well. And they also increased next quarter guidance. On top of that, we saw 106%. That's what $96 billion worth of revenue brings us, is an accelerated growth rate, which, mind you, even quarter over quarter was extremely high, of 105.9%. Re-accelerated from whenever China revenue came offline from data center revenue, and we took a big hit from that. We have since re-accelerated. This is really broken down now into three different categories. You have hyperscaler revenue in the data center side, AI, cloud, industrial, and enterprise data center revenue, like really big neo clouds and sovereign AI, all of that sort of stuff. And then on top of that, we have edge computing, which is essentially everything else. Okay, you have their OEMs, their automotives, and gaming, all of that stuff all put together. On top of this, whenever we take a look at the growth rates for the AI clouds and the sovereign AI and enterprise customers actually overgrew what we saw from hyperscaler customers. Now, the reason that you want to see that is that there was, for the longest time, you can see 4 or 5 quarters before that, the hyperscale growth was extremely high. And that can point to a lot of customer concentration. There was still, large customer concentration this quarter, but now because of customers like SpaceX, we're starting to see large breakthroughs from other customers that really weren't on NVIDIA's map before. So this level of breakthrough, mind you, even edge computing also doing very well. So continuous growth across all three segments of the business. This is not at just pure revenue and them resting on their laurels, okay? They are constantly reinvesting in the business to try to make sure that their products and the entire product suite is continuing to improve. So what we're seeing from operating expenses is that they're climbing. NVIDIA breaks this out into two different categories. Selling, general and administrative, so sales and marketing and G&A. And then on top of that, the really important one is research and development. Research and development took a really big bump up, and it's going to see an even larger tick up next quarter. But right now, it's about 64% growth year over year. However, that is large. It's slower than what revenue growth is doing. So they're spending a lot. But what we end up seeing is that SG&A ends up falling as a percentage of overall revenue, now hitting a new company low of 1.4%, even though they're spending more. On top of that, research and development, we're spending a ton more, only 7.3% of outstanding revenue. Just a couple quarters ago, that was 12.7%. And then even on top of this, while the stock is doing extremely well, their stock-based compensation is still doing well, even though we're seeing a ton of reports of people taking taking great headcount or hiring people for really high expenses. Stock-based compensation as a percentage of revenue ended up falling to another low 2.1%. And yes, you guys are correct. NVIDIA just hit $230 while we're recording this. Maybe this has to do with profitability. Profitability on operating profit. So after we strip out a lot of those expenses that we just saw, the SG&A and the R&D, we just hit another high in terms of operating margin of 66.2%, bringing in $63.7 billion of operating profit. On top of that, we end up seeing a rule of 40 between their adjusted EBITDA and how much revenue growth we're actually seeing. Another new high, 173%. This is after, we've seen it higher, but this was during the initial data center boom. So then it started to fall off, fell to 117%, and now re-accelerating once again, putting it in the top 5 biggest names, which is, the Microns and SK Hynixes and all the companies with extreme bottlenecks. You usually don't see a $5.5 trillion company in that mix. So this ends up continuing to flow down to the bottom line. What we end up seeing is net income, almost $60 billion, 62% net income margins. Unbelievable. Okay. Part of that, however, was a $7.7 billion mark-to-market gain, which really had to do with SpaceX, their SpaceX investment. But they've been booking a lot of gains due to that circular financing that we've been able to see. It's not just been allowing us to boost up revenue, but also the gains of those investments have also been able to win out really big. So they've been making billions and billions of dollars. Okay. Now, it's not all good news. And I'll be talking about some of the red flags in this story as well, but I wanted to highlight this as well. Total cash and cash equivalents hit about $99 billion, up roughly about $20 billion quarter over quarter. That so far is a good sign. However, they did also announce that they took out a $25 billion senior unsecured notes, essentially debt, okay? This brought up their long-term debt from roughly, and we're looking at total debt, so this is including their short-term debt, which is roughly about $1 billion. But this brought up their sustained long-term debt of around $12 billion to up to $38 billion this quarter. Now, whenever you strip out the overall interest expenses of this versus how much they're making on the cash and much of what they can do with treasuries on the other end, the expenses here don't even make a dent in Nvidia's overall, earnings. And you can see that in the net income guidance. But let's go on to guidance because this is just the hallmark. $108 billion was expected for next quarter. $108 billion. Now, there was a little bit of a hit here. Gross margin, only 78% versus 75%, but we're splitting hairs here versus what, the company is actually doing, which is growing at extremely high 90+% growth rates or 100% as we saw this quarter. Inclusive of this, we saw Outlook does not assume any data center revenue coming in from China. China now has loosened some regulations in terms of bringing in H200s for companies like Tencent and ByteDance. So there will be tens of thousands, if not hundreds of thousands, of those GPUs going out to China in Q3. Okay. That is not going to make a significant difference in this number, but it is fun to factor in the fact that, we're not even assuming any of this and we're already at 108 billion. That would, as Wall Street puts it, put us way ahead of the current guidance of 83.5% growth. This was what they assumed yesterday, was 104 billion is what they expect for full quarter. This has since changed, okay? The reason why it's changed is every single quarter, Wall Street has been significantly wrong in their ability to guide out for NVIDIA's overall growth rates. And this quarter was exceptional because we ended up seeing a beat on revenue that we haven't seen since Q3 of 2025. Every quarter before has either been in the range of 1% all the way up to 3.5%. This time, 4.4% beat on revenue. And then on top of that, we also saw a significant 6% beat on EPS. So this is why Wall Street's wrong, okay? They also said that with cloud industry backlog now greater than $2 trillion, this is, by the way, just hyperscalers. CapEx by the top 5 hyperscalers is expected to reach nearly 800 billion in 2026 and 1.3 trillion by 2027. This is hyperscalers. The hallmark of a hyperscaler really falls into AWS, Google Cloud, and Microsoft Azure, and you could also put in Oracle if you want. What it doesn't include is Nebius, Nscale, CoreWeave, SpaceX being probably one of the largest ones, and the myriad of lists. Like I could go down the entire list of IREN and Together AI and Mistral and, all of the names that are not included in this projection. Okay. They said, we also want to announce that a company that has been, pretty back and forth on whether or not Trainium is going to be their biggest expense in terms of their own custom GPU or ASIC that they want to sell. They're going to be deploying an additional 2 million of NVIDIA GPUs starting this quarter through the second quarter of fiscal 2029, which includes Vera CPUs. So the companies that are building out their own custom silicon, trying to replace NVIDIA, they've got a long way to go before they replace them. On top of this, AWS is also going to offer NVIDIA's Nemotron open models through their own platform, BlackRock, and SageMaker, while Amazon will adopt NVIDIA's Omniverse, Isaac, and Jetson Stack, which is for their robotics and physical AI suite. So this is a larger partnership than just purchasing products. This is recurring revenue and a deeper relationship with a company that has been trying to make their own CPUs and GPUs away from Nvidia. They can't get away. Okay. So now going forward, as we continue to look into guidance, I'm not expecting 108 billion. And to be honest, I'm guiding here for 110, but I'm not even a believer in that. I believe it's probably going to be coming closer to 112 or 113 billion, depending on the new Chinese deals that we end up seeing. But even at 110 billion, which I'll be conservative here to talk about, I am now assuming a 92% growth rate year over year on top of the quarter last year that grew by 62%. That is extremely significant, okay? On top of that, the next quarter after that to finish out the year, this is really important whenever we're talking about annualized guidance, is seeing the projection for the rest of the year. The last quarter is going to come in at what I'm assuming at about $125 billion worth of revenue, or assuming roughly an 83.5% growth rate. And mind you, depending on how we come in next quarter, this might also be very conservative, as my projections before for full year was going to be 105 and then 120. So I've had to raise them up by roughly $5 billion each. And even then, I think that I'm being quite conservative. Wall Street, as of yesterday, assumed 105 billion for next quarter and 118. This will also be wrong because they've already guided for their own numbers 108 billion and likely to continue to grow at what they said next year was going to be 70%, not what they expected was going to be 45%. Jensen Wong, sorry, this was actually Colette. Colette said, the surge of AI demand is driving a global infrastructure buildout, supported by an expanding and diverse set of growth opportunities spanning hyperscalers, AI labs, AI natives, enterprises, and sovereign customers. We now expect to grow revenue by approximately 70% in fiscal year 2028, which means calendar year 2027. Excuse me. They also said, this is a supply-constrained outlook, okay? So, if we take my numbers based on my 110 next quarter, which I believe is conservative, and 125, which I think is a little less conservative, but way within the range of possibilities, that really points us to a $411 billion quarter or year for full year 2027. On top of that, if you assume a 70+% growth rate, which is what they just called for just yesterday, what we're looking at is a $700 billion revenue year at a high 73+% gross margin. That's going to flow down to net income, and there's going to be a lot of asset gains. You know, their investments in Nebius, in CoreWeave, and in SpaceX. All of these names are likely to put up high mark-to-market gains, which is going to keep net income above 55%, which is what they've held it out for the full year of 2026 and 2027. Jensen said, we have a lot of visibility now, upstream and downstream. It is the case that we have never forecasted or never guided to a year in advance, even though our demand is much greater than 70%. Our supply allows us to confidently deliver 70%. We are going to continue to work with our supply chain to increase on that. So he's saying, if all goes well, if TSMC can bump up their ability to create new fabrications, Micron can end up working a little bit faster. All of these companies that we are going to push at the greatest end, can we actually end up exceeding that 70+% growth? Because we have customers wanting these chips. So this outlook of $700 billion for next year, he's saying this is what we can do at a supply-constrained level. It's essentially our conservative guide. That's just insane. Wall Street, as of yesterday, was guiding for $573 billion, only a 44% growth rate. There's a, you can be skeptical or splitting hairs if you're talking about 44% to 48%. Not too much is going to happen in the way of upgrades for companies that end up guiding only this far out. But whenever you're talking about the difference between 44% and 70% growth rates on a supply-constrained outlook, you are completely misjudging where this market is to be. And also, let's talk about complete visibility. Me and you are taking guesses as to where this total AI market is going to be headed. We can try to find snippets of visibility and channel checks here and there, and that's what Wall Street's trying to do, and maybe they have better tools. I promise you, Jensen has greater visibility than any of those analysts that are putting 44%. He is having direct conversations and direct talks with the customers that have to put in purchase orders. He knows it's going to be 70% because he already has the order slip. Okay. That being said, he said, we also see continued demand for our server CPUs, Vera. Okay. Approximately $20 billion worth of orders. Based on our customer demand and improving supply outlook, our preliminary expectations is that the CPU revenue is going to more than double in fiscal 2028, positioning us to be the world-leading CPU supplier. Okay, so they want to go from 20 billion in 2027 to 40 billion by next year. That's, with the 700 billion worth of revenue that they're currently guiding for. So that really brings me to valuation and why I'm so happy to be continuously holding this business. Right now, or at least at the time that I took this screenshot, it was 5.4 trillion. We're currently sitting at 5.5 trillion when I look up at my stock here. On top of that, we have a forward price to earnings, which is based on the old numbers that Wall Street is putting up, not the new numbers that we just ended up adjusting for, bringing up those growth rates to 70%. On old numbers, we're at 19.5 times forward PE. As the days go on and more Wall Street analysts end up revising those numbers to be more bullish as they see more of that build out happening, this could fall as low as potentially 15 times if the stock does not continue to move up. On top of that, while we did end up seeing a lighter than expected free cash flow margin this quarter, it is historically their worst quarter for free cash flow. Okay. They also did a lot of share repurchases and dividends, which I'll show off here in a minute. But forward-based, which is looking more annualized out and taking out some of those, one-time hits, we're looking at a 20 times forward price to free cash flow, which is in no way expensive versus the general market. And to put that into perspective, we can take a look at this based on the Mag 7. If we look at the trailing Mag 7 names, you have companies like Microsoft, which are sort of tying them in PE ratio. And then on top of that, you have Google all the way at the bottom, but that's based on mark-to-market gains of their investments in SpaceX and Anthropic. So not necessarily a clear sign of their overall real adjusted earnings. So that's why we look forward. And whenever we look forward, you see Google much higher, 25 times, but still great valuation on Google there. A lot of these companies are actually in great rates still on a forward price to earnings ratio. At the very bottom, what you end up seeing is that Nvidia is at 19.3 times or 19.5 times in the last screenshot as well, and Meta being some of the lowest names. Meta's not growing at 100% growth rates and even faster on net income because net income is growing faster than revenue. So this is actually looking to be, based on next year's valuation, potentially the cheapest Mag 7 name out of all of them. By the way, Tesla is stripped out because they're much, much higher in their valuation. Not that I have anything against Tesla. It's just in case you don't see Tesla there, it's because they would be in the hundreds, way, way above this overall chart. Outstanding shares also saw a really big decrease. You want this number to be as low as possible. It means that they ended up decreasing their outstanding shares by larger and larger amounts. And you can see by this graph in terms of the overall decreases in outstanding shares that they've been buying back more shares now than they ever have previously, which is actually harder to do. The more times that you end up keeping this rate lower and you end up reducing outstanding shares, the adjusted share price should go up over time because there's less of the shares outstanding that are representing the overall market cap. But Nvidia's stock didn't move as much, so they were able to acquire a lot of shares. They did this with $19.7 billion worth of buybacks, the highest they've ever done in history. And on top of that, they also did $6 billion worth of dividends. Okay. So coupling those two things together, they returned nearly $26 billion of capital back into shareholder hands, whether that was from a direct dividend or by lowering the outstanding shares. Now, I do want to talk about red flags because there were a few, like I talked about, the $25 billion worth of debt that ended up climbing up. But even that doesn't really hold a pin to the potential real concerns that people are having, whether that's customer concentration or overall inventory growth. Now, I know that this is a concern for some. This is not a concern for me. They have had few write-downs on their overall inventory, whether that's H20s or H200s. And we saw a write-down this quarter as well. I think it was about $400 million. Now, those could still be sold to China, but they wrote them down anyway. What we ended up seeing in terms of overall inventory here was a large quarter-over-quarter increase in inventory of 22.4%, representing $31.5 billion worth of inventory. They have to do this to get ready for Vera Rubin. They've done this in the seasonalities before, and why you see these large increases previously is because they have to do that for Grace Blackwell. So it's not necessarily a terrible sign, but whenever you start to line it up with revenue, you can see that these rates are getting quite high, okay? That inventory as a percentage of overall revenue, if they can't sell it, they're holding on to a lot of stuff that, obviously they don't want to be holding on to. They want real revenue. They want them sold. But it's because of that forward guidance that you can see that the reason why they're building up this inventory is because they don't want to be supply constrained. They want to sell this. So I would look at inventory not as necessarily a bad thing, but almost like leverage. If they are able to sell it, it's better that they have it than if they did not. It means potential larger future revenue and earnings into the future. They can't sell it. This is a major red flag, but it's more like a yellow flag than a red flag. Same with this as well. New commitments. We've continued to make strategic commitments across our supply, infrastructure, and our partner ecosystems to capitalize on the substantial growth opportunities ahead of us. Jensen said, we partnered with our extensive network of suppliers to secure critical components needed to meet demand for the next several years. Our commitment has increased from $119 billion last quarter, not year over year, last quarter, to now $279 billion. And you can see here, a lot of this primarily related to the procurement of memory. $92 billion for the remainder of the year, $87 billion in fiscal year 2028, and $88 billion in fiscal year 2029. This is a lot of expenses versus what we've seen previously. So if, for example, they can't keep up these sales all the way through 2029, this is one of those additional red flags, okay? If they can, and they've already adjusted their gross margin outlook to talk about securing this amount of supply, which, by the way, securing the supply in the future guarantees that they can have access to this and also control pricing. This is one thing that I think, people get wrong about securing this much supply into the future. You get to write, really advantageous pricing for yourself if you are truly good at understanding what your customer needs are over the next few years. The problem is this levers them up if they get the timing wrong, okay? If the orders don't come in for fiscal year 2028, if they don't come in for fiscal year 2029, you still have to pay the memory suppliers. And that's where you can almost double your losses. Not only are you writing down inventory, not only are you writing down your overall memory chips that would just be sitting in warehouses that you can't get off your books, this doubles your losses if you get it wrong. But if you get it right, this guarantees high margin. This guarantees chips going off the shelves. And it's one of the things that I believe that retail investors misunderstand the most is it's not just about having the best chips. It's not just about having customers that want them. It's about having them being able to be delivered on time and at a fair valuation. And this is where NVIDIA does the best in terms of thinking ahead. That way you can actually give capacity, give chips out at great prices, on time, and ready for the next order. This is why I'm super excited to continue to be an NVIDIA shareholder. I've not sold a single share, and it still makes up for over 50+% of my overall portfolio. And honestly, it's going to be climbing into egregious rates if we continue to have these 9+% days. But very, very happy with this overall quarter. It was, without a doubt, their greatest quarter that we've ever seen. And honestly, I'm just an overall bullish investor right now because we've seen so many companies come out with what I believe to be some of the best quarters that we've ever seen, because we are in this sort of roaring 20s-esque market where companies like even Salesforce is seeing increased amount of overall revenue and overall growth because of artificial intelligence. There's a lot of spend, but with that spend comes a lot of new productivity gains and new earnings for companies. So onward and upward with the S&P 500 with NVIDIA, and I'm very, very happy with this Q2 and going to be a long-term shareholder, at least all the way through 2028 and potentially 2029. That's my full review on NVIDIA. And yeah, I look over, I see one comment that says bulls blinded by greed. Everything that every stock I bet on is due to greed. Every single investment I've ever made is because I want to make some money. Okay. I missed it. Do it again. Okay, guys, ready? I'm kidding. But I'm curious where you guys think I went wrong on my assessment of Nvidia. No, I'm not selling a share right now. The Hugging Face deal, I think I need to do another potential video on. I think that that's extremely important, but it's not, I don't think, as big of a deal as what people are making it out to be. You know, it's a $12, $13 billion acquisition, which can seem extremely high, especially for a company that's making like $150 million in revenue. But it's once again to secure their spot in the ecosystem. Yeah. Noob question: when do you trim a position? What tax lot do you sell? Lower cost versus more expensive? Well, I mean, dude, it's extremely subjective to your situation and also where you're from, what country. Like, there's got to be a lot of decisions there. To be honest, I don't. I use a pretty, well, not amateur brokerage, but just in Canada, we don't have a lot of tools. So I don't have tax lot sells. I just sell, you know, my position. So that's a little bit sucky for me. But like we can't do. It was like Robinhood, if you think like, you know, 3 years ago. No, but not even. It's probably like a year and a half ago. But yeah. Am I going to be following Marvell's earnings? So yes, I'm going to be having Amit on and Neil on as well. We're going to be listening to, actually, I should text them. I think we were going to say that we were going to listen to IREN, but are we doing IREN or Marvell? But this is the same stream. I'm not stopping the stream all the way till 6 p.m. So today's going to be a long day. I will have Amit and Neil join me later, either for IREN or Marvell. Obviously, we're going to be covering both the numbers, Sentinel One, Rubrik, which is actually leading me in the draft right now. Take a look at the draft, by the way. Fierce competition is coming after my my number one spot right now. Take a look. We can break down a little bit, but Chris has an unbelievable winner. So I'm doing well. We're almost up 14%. Steve is up 6.2%. Matt is up 3.8%. Chris is down 8%, but he has quite the winner. You can literally see the huge bump here because he picked Viva Systems. Amit down 16% and Jason down 18%. All right. With that, we have Rubrik tonight. So I'm going to see if potentially we can continue to clutch out, you know, it being our largest position, up 51.9% in the draft. On top of that, Palantir up 44%, Microsoft doing very well. But really, I just think it's because I have a lack of losers. 9 out of the 12 names that we were able to pick are in the green. That's, you know, really what's helping me here. Steve has 2 amazing winners. So Salesforce up 65%, Zeta up 58%. I can't compete with either one of those. But then after that, you know, it's a lot of red and small winners. So, you know, having a lot of that consistency. But honestly, Steve could absolutely come back. You look at his portfolio: TSM, Broadcom, Oracle, CoreWeave. You're telling me, and Meta, you're telling me that what Jensen just said is not going to pump those stocks? I can't believe that for a second. You know, those are levered plays of what Nvidia is doing. So, if like we have a long rest of the year, although I'm first place right now, there's some scary competition coming up behind me. Matt's getting a little bit beat down because that SpaceX short. He was up like, I think like 40 something percent. That's been having a little bit of a drawdown. The rest of his names are doing quite well. ASTS a little bit of a drag, but he knows what he owns, and he's got Micron as well. I think that's going to do well. Chris, I mean, for the most part, his portfolio is in the red. He's got one name, ServiceNow at 44%. I mean, that's not bad either. That's phenomenal. But Viva is up 85%. I'm not counting out Chris either. He's got IREN. He's got HUD 8. He's got a major, like a large amount of companies that could benefit from, continuous gains in this AI trade. Amit as well. He's got a lot of red names, but these are names that move. Nvidia is actually his biggest winner, up 8.8%. Okay. But so far, we're holding out and hopefully trying to break off from the pack. I mean, trying to. By far, I've taken the biggest lead that we've seen so far in the draft in general. It's early days. Kyle says, what are your thoughts on ASTS? I thought it was I think it's a great place to buy. Kyle, I really appreciate the donation. Thank you so much. Seriously. That being said, I really don't have any opinion on ASTS. I'm not very rounded in terms of a lot of the names that I buy. There's really like three main areas that I focus on, at least for now. And honestly, that's changed over time. So I'm sure I might end up becoming a large space investor into the future. I mean, it is the future. But right now, that's a lot of artificial intelligence, fintech, and I kind of put e-commerce in there as well. So fintech and e-commerce, and then ad tech. So you're looking at the Googles, Meta, Amazon, Reddit, a lot of those types of companies. So in those sort of 4 or 5 areas, if however you want to subsector that out, that's really what I'm focused on. I would be like literally Jim Cramering you in a way to tell you that I have an opinion and what to do with ASTS. I couldn't even tell you what the name of the rocket is. I'm sure it has a name. What do these YouTube jewels do? They put little things on screen. Yeah. I think the S&P 500 is not just for the year that I'm that we're up against. Remember, the S&P in the draft started. So Steve said that he's going to change that. And in fact, I want to invite Steve on to talk about Salesforce. I want to hear a little bit about this name. This name is up roughly about, wow, Smartbird AI is up 27%. What the heck happened? Did they just announce their first deal or something? Salesforce is up nearly 22%. CrowdStrike up 19%. Hyperliquid up 19%. Figma up 14%. Palo Alto Networks up 13.5%. Rubrik up 11%. It is a bull market, ladies and gentlemen. Wild. We ended up seeing a lot of names. I think HPE is down. Or is it HPQ, I think? HPQ. They're down 4%, ended up showing off earnings. That ended up bringing them down. It looks like we actually have come back up a little bit from that initial fall off. What is happening with Smartbird? We're getting a little squeeze here. For those of you that don't know this name or might not recognize it from the recent huge spike that it had, but this was a shoe company that started on Shopify that ended up turning into a GPU reseller. They said, hey guys, we sold off our shoe business, which is what made us a company to begin with, and we are buying GPUs. Sid, you don't understand how much ball knowledge I have. Okay? You guys try to get me to say Ligma and Updog and all of this stuff, and I already know what's Updog. Okay? I'm too young for you guys. Okay. That being said, Smartbird went from up 30% to up 20% in the matter of, for real, seconds. Yeah. Sorry, I'm thinking of this stupid meme. All right. Okay. Let's check out what's happening with the bird. All birds is no, that's not new. Ooh, this might literally be. Okay, the CEO is potentially making an appearance on CNBC, and this might be a Wall Street Bets play before she's on the TV. Let's see if we can find that if possible. Okay. It's just unbelievable. Okta up 30%. CrowdStrike up 19.5%. I get it. This is looking a little toppy, a little euphoric. A lot of this is based on earnings, though, like really good earnings that ended up coming in. It is fun to watch. I mean, that's for sure. The only people that like red days is Michael Burry and Ed Zitron. And I promise you, those are the worst people to meet at a party. Okay? The real lads in chat, the lads and the gals in chat, we love green days. How many of you guys own Okta? By the way, I do know there's definitely some people in chat that are paying attention to this name. Memory stocks had the best earnings, yeah, but maybe not as sustained as the software names. Like, that's why I think Salesforce is up so much. It's not that it had like the best earnings, but it's that nothing is really impacting their overall growth. And if you can go back to believing that they can see this level of growth for the next 10 years, 20 years, that gives you like you believe that you have more visibility into their overall earnings, then you have to re-rate the stock. Tanner, are you sure that you can handle streaming more than 1 hour a day? Bluebird, I got this. I got this. You got to believe in the skills. Okay. You would be blown away if you knew that I'm not even losing my voice. I wanted to show you guys this. So 6 months ago, I said there is a non-zero chance, meaning I was not even super confident about this. I was like, there's a possibility that we end up re-accelerating revenue growth to over 100% if we come in the high side of analyst expectations. We ended up seeing, I was forecasting 80 billion for Q1 and 95 billion for Q2. Okay. We ended up beating both of those estimates by over $1 billion a quarter. So we saw 81 billion, 81.6, and then 96.2. So beat by 1.6 billion, and then beat by 1.2 billion the next quarter. Wild. What wig am I going to wear today? What are you guys talking about? Like, I don't even know what wig man was or whatever. Trump just stole your lake. I saw people like, I wonder what Tanner's opinion of this. I was like, I don't care, dude. I don't even remember the last time I saw Lake Ontario. It's practically like a poison vat that no one goes into. Can Marshall be paid now? No. No, what's the point of whenever you start making real money that you have to start giving it away? Marshall's doing this for exposure, guys, just like Tevis was. It's my money. This guy's pretending like he wasn't dressed as Andy Warhol last night. That's funny. I wasn't dressed as, that was Jensen. Okay. I still haven't heard back from okay, let's do a poll. What do you guys want to listen to tonight? IREN or Marvell? Let's check. Earnings tonight. We're going to do a poll. IREN or Marvell? Or Rubric? Oh, gosh. Okay, wait. 1 sec. I'm going to end the poll. 1 sec. Earnings call tonight. IREN, Marvell, Rubric. Okay. Cast your votes. Cast your votes. The amount of people that for real told me yesterday, why did I dye my hair and what did I, like, why would I do that? Absolute craziness. Okay. We have IREN at 54%. 55. Okay, I think that's settled. Out of 3 different names, 56% comes in for IREN. Cast your votes. I'm sorry, but the chair for real is bothering me at this point. Okay. Let's go back. Salesforce up. Oh, crap. I'm supposed to send the link out to my buddy here. The great and powerful Stephen Fiorillo. Yeah, it was the second that I took off the wig, the stock literally like I went to the bathroom, pulled the wig off, came back, and it was just a rocket candle. Like it was just a god candle. I couldn't believe how well timed it was. To be fair, it lined up with Colette saying that they were going to do 70% next year. Wasn't necessarily all me. Figma up 14. Strategy is up 11. What the heck's happening with Bitcoin? Bitcoin above 80,000 and Ethereum is up above 2,500. Guys, I'm telling you right now, if crypto freaking skyrockets and we have like just an all asset freaking rally. Sorry, my guest is here and I'm freaking out. Steve, if we have an all asset rally, crypto's running, stocks are running, Nvidia grows above 250, I'm going to take a long vacation.
Can I ask you something?
Yes, sir.
How can stocks run if they don't have legs?
Okay, so what did you think about Nvidia earnings? Because that was, poof.
Okay. I don't know if I should bring
Did you used to do those old jokes whenever you were a kid? Like, hey, is your fridge running? Well, then you better go get it.
I'm just wondering if I need a pillow or not because, sleepy time's running away with the draft.
No, you're doing really well.
By the way, I knew you were going to wear a black leather jacket yesterday.
Mm-hmm.
What I did not know is you were going to get a wig.
What wig?
What are you talking about? You had a wig on yesterday.
You mean whenever Jensen came over?
Okay.
Yeah, I had the face paint, which didn't really show too well. So
it looked green.
It was green. It was Nvidia green.
Nvidia green.
I had the disco ball going in the background. I had a siren that I won't blow till it's 250.
What happens when it hits 300?
I don't know. What do you want me to say? I'll do exactly what I'm doing now.
Yeah, I can't wait to lose this bet.
I'm going to be sitting in I'm going to be sitting in this exact same room. Nothing's going to change.
Have you seen the new numbers for
what
EPS?
Yeah, I forecasted them.
I understand you forecast them, but did you see the new numbers from the street on EPS?
No.
I don't know if you should see them or not, because you may just take the rest of the day off because they're that bullish.
I saw someone report that next year is supposed to be like $17 of EPS, something crazy like this.
They took this year to 927, next year to 1462, and 2028 to 1936.
Yeah.
So when you account for the share increase today, you're looking at 12 and a half times forward earnings.
And how much revenue is this on, though? I want to see what the consensus revenue is for next year.
Revenue projections are not what they should be. Next year's very light.
Yeah. So what do you talk like? This is all BS. It's going to be even more. You know what I just did? I just put up my video, or I just recorded my video for Nvidia. I'm projecting 700 billion next year.
I don't think that that's unreasonable.
So, which is, I mean, it legitimately is unreasonable, but it's going to happen.
Why is it unreasonable?
Well, it's just insane, to go from 2023 at $27 billion to $700 billion over the course of a 6-year period is just insanity. And Wall Street's just completely wrong. I think next quarter, and I'm being super, super conservative here, 110 billion.
Well, you were right this quarter. You said around 105%.
So I think it'll be closer to about 113, but I'm saying 110 to be conservative right now until we get more information.
Yeah.
And then 125 for next quarter.
I've never seen anything like this.
No one has.
I got banned. Ed Zitron blocked me on X now. And he went on the Diary of a CEO.
Yeah.
And I listened to the first 30 minutes of it. This guy, here's the problem. The guy's intelligent. He's well-spoken.
Mm-hmm.
You can't take anything away from him in that regard. Like, you can't knock his intellect. You can't knock any of that.
There's a lot of smart bears.
But I don't believe he knows how to read an income statement or a balance sheet. And he keeps, now the new point against all of this is that it's fraudulent.
Yep.
And
it always goes down to that.
And with OpenAI and Anthropic, it's all they do is lose money. What they seem not to realize is that there's a big difference between issuing bonds which converts the long-term debt on the balance sheet, and doing an equity raise on shares. You don't have to pay back the equity raise. It's an equity raise. There's no debt. So yes, they can burn through $100 billion or $150 billion and not care, because it's not debt that has to be paid back, and they're not paying interest expenses on it.
Yeah, I've seen a lot of these bears that honestly, I do think that they can read balance sheets, but I think that they know the person that they're talking to may not be doing the math in front of them.
Maybe.
And so they go and talk to these people who are not experts on the other side. They talk to people who are just there to listen and learn. And like, so, you know, they're not going to be confronting them. They might have these easy questions, but I saw this report. I think it was either Martin Scarelli or Jim Chano, some of these guys that have come out against CoreWeave, and they were like, "Oh, so now it takes $51 billion to put up $2.5 billion of revenue." And I'm like, you know that that's not true. Like, you know that the debt is for the future, and the revenue that they just put up was from the past. This is what they're like. They're doing this because they have a very exciting future, and they talk about it like the companies that are raising debt today is for what they're putting up today. And it's just like, they know that they're telling lies. They know that this is not true, but it's a good story, and it's getting Ed Zitron very popular right now. Like you have to realize his bank account is going up.
Oh yeah.
He's getting a ton of views, a ton of subscribers, and like paid subscribers on his reports. Coming out and saying they're fraudulent is making him extremely successful.
But I mean, it's intellectually incorrect, though.
I know, but no one, he blocks the people who challenge him, challenge that.
And I'm fine with people being bearish. Nobody has to invest in these companies. Be bearish. That's fine. But to say that the problem is that they're not profitable and they're spending all this money, it's not a fair analysis, because they're raising capital from people who want to be shareholders. They're saying, give me equity in the company, take my cash and build. There's no payback. There's no interest on the debt. They're not going to the bond market. And somehow they're glancing over this and not discussing this. They're acting like they're spending all this money and the revenue is trailing by so much that it must not be a good company and it must be fake, without the idea of, yes, instead of going to the bond market and having to pay the money back and pay interest every quarter or every month or whatever the terms of the deal are on an ongoing basis, they're tapping the equity market. They're getting shareholders. They can burn all that money and it doesn't matter, because guess what? They don't have to pay it back. So when they're done with that build out and the numbers inverse and they become very profitable, all that money actually drops to the bottom line and can be used for buybacks, can be used for a dividend, can be used for acquisitions, because guess what it doesn't have to be used for? Paying back the debt. And it's mind-boggling that they are out here trying to make a case that these companies are unprofitable without understanding the structure of those companies.
Yeah. I've talked a lot about the AI build out, and obviously, you know, it's much easier. It's actually funny. I find myself defending a lot of my actions whenever they're going down, but whenever Nvidia's up, I'm like, yeah, I mean, it did what I wanted, what I thought it was going to do.
But here's my favorite part. Did you watch the interview yet?
Of?
The CEO with Zitron?
No.
So he started bashing Amazon and bashing how much they're spending. And he started bashing these companies that they're spending all this money, but they refuse to tell us how much they're making on AI. And I'm like, well, Jeff Bezos handpicked Jassy. Jassy built AWS.
Yeah.
Who the hell are you? Who the hell am I to tell him he's doing it wrong?
Yeah.
You don't work at Amazon. How could you possibly know? And here's the other thing, which makes me even more solidified that this guy has never worked in tech. Now, he says in the interview, he's worked in tech for 15 years, but he's on the PR side. You've never been a tech guy. Okay. I don't care that you work for video game. You're not a tech guy.
Yeah.
He doesn't.
My girlfriend was on the PR side for a venture capital firm. How that's for real. How much do you think she knows about venture capital? Like,
So my problem with the whole analogy with Amazon is, how would you know where or what is driving revenue? And you need more data centers because cloud is actually expanding. It's not just AI, it's both. So you need more data centers for it. And all these companies are layering on AI products. And AI can be the difference of gaining a contract or not getting a contract. You have a couple of companies that are similar, but one has more AI features and a better roadmap and can increase productivity. There's a good chance they're going to win the RFP that they're competing for. And the AI features from these companies drive more adoption. You see it with Copilot. You see it with the Microsoft 365 licenses, with the upcharging. Like, he refuses to actually go over these points. Like, he makes it seem like these companies are burning trillions of dollars on the data centers.
but dude, like, if you believe he's a bad actor, why do you get so, like, I don't even know why we're talking about him. Like, who cares?
I just think it's dangerous that there's no checks and balances on this. Because think about how many people,
free speech.
I get it. I just think it's dangerous. It's just like the SaaS is dead narrative that, oh, it's going to be vibe coded away. It's a bunch of people that don't know what they're talking about.
Which is what I wanted to talk to you about.
Okay.
What the heck is going on with Salesforce? What I haven't been able to see the quarter. I'm just going on Fiscal AI. I'm scrolling through some of the numbers.
Sure.
What makes
it was
this
a great
quarter up 20+%?
Look, it was a great quarter. They 11% year over year growth. Revenue came in at 11.35 billion, and they had the remaining performance obligations 33.5 billion. It grew 14% year over year. Now, the GAAP EPS grew 119%. Non-GAAP grew 103%. There were some investment gains on there, but once again, this is a company that is still growing. It is a company that has never seen. Can you bring up a chart of just the year-over-year revenue for Salesforce? Yeah. It's a company that has never seen revenue decline on a year-over-year basis. It has always grown. And we're in a situation where, are you sure that that's quarterly, I think?
Oh, you want annually?
I want annual. On an annual basis, this is a company who has never seen revenue decline. It is still a growing company, is extremely profitable, and you got to a point where it's trading at 10 times free cash flow. At some point, the numbers matter. And the biggest misconception has always been SaaS is dead because it's going to be vibe code away. Like, a lot of people legitimately believe that. The problem is, none of them have ever negotiated one of these contracts. None of them have ever gone through these implementations before. You know, we were looking last night at Workday, and I had Claude bring up, for a 4,000 person organization, how long and how much the implementation would cost. And I'll bring it up so I have the evidence of what it is. And I'm going to bring it full circle back to Salesforce, because Salesforce is not as involved as a Workday implementation, but it's similar in the premise. And what I had asked it was, hold on one sec. Shit. All right. There we go. For a 4,000 person organization, you're looking at a total first year commitment between $2 to $5 million, and the project typically takes 9 to 18 months. Now, I can tell you ours took 16 months, and we were about 4,500 people. I'm not going to say how much it cost, but I will tell you that these numbers and time frame is accurate for a Workday implementation, at least when we did it. Okay. Salesforce, you have a big migration and implementation. You sign a 5-year agreement. When you are done with that 5 years, after you spent almost 2 years implementing, and you put everybody's time on implementation, and you spend millions of dollars to implement, got news for everybody. No CEO wants to hear that people want to switch software. And it's even less likely that you do unless something is going wrong. And the idea that you can just vibe code away a product, great. You have a contractual agreement. These are not year-to-year contracts. These are typically 5-year contracts because of how expensive they are. And you can't vibe code away a contract. You just can't do it. Also, with a vibe coded product, you have no compliance. You have no SOC 2 reports. Like a homegrown product does not have any of that, which auditors need. If you're going for bonds or trying to issue debt, you need all that stuff. Your insurance companies want it. You need a lot of stuff for a lot of reasons with credit agencies. Now, once again, people don't understand that. So when you get a company like Salesforce that's still growing, trading at such a low valuation, and we've seen it happen before with PayPal, similar story, but Salesforce isn't a broken company the way PayPal ended up being. Now, the valuation on PayPal still doesn't make sense, but the whole entire SaaS ecosystem, it wasn't just one company, because you saw Visa, American Express, MasterCard all do well as PayPal. It was a single exposure. The entire gamut from ServiceNow to Salesforce to Workday to SAP, they all got clobbered. And the reason they got clobbered was actually fake news.
Yeah, I just don't know if, like, I don't know, man.
I'm not saying
say,
that
like whenever I take a look at cost of revenue, what's going on with gross margin here as well? Like, are these concerns at all?
I mean, I'm not really that concerned when you look at the free cash flow and they're buying back shares and growing the dividend. And now look, that doesn't mean that a company can't come out and build a better CRM system and compete. Obviously that can happen. What I'm saying is Johnny and Danny in IT are not going to vibe code a CRM system that a real company is going to use. Maybe a 10-person company is going to use it, but a 1,000-person organization or a 50,000-person organization, it's not happening.
So then, what's called? I think the next thing that I really want to sort of look at is valuation then, because, you know, there's a lot of companies growing at 10+% growth or 11% growth.
Yep.
That's good, but it's great if it's extremely cheap, or it's terrible if it's extremely expensive. I know Salesforce leans on the cheap side, but like, can you talk to the valuation really quick and why it's a buy over something like, I don't know, a software name growing much, much higher rates, like a CrowdStrike or something?
Yeah, sure.
Or a ServiceNow?
It becomes, and this is where it gets into opinion more than factual, right? So everything I said, I believe is factual because I actually negotiated the contract and I understand how the industry works. Now we're going to get into opinion, where you got to take it with a grain of salt. And if we look at Salesforce, bring it up, Q2 numbers just came in, and you got 11.3 billion of revenue, operating margin of 20%, free cash flow 87% margin, 1.1 billion this quarter. And if we look at them just by themselves on a trailing 12-month basis, and we look at the actual valuation, they are trading still at 13.5 times free cash flow. They are trading at 13 times
trailing, right?
Operating cash. Yeah, trailing. You know, the price to net income is 21.2 times. I would think for a company of Salesforce's caliber, this is still after the run achieved valuation. Now, when this was trading at 160, 170, 180, this was a screaming deal because you were trading at 10 times or under free cash flow, which did not make sense.
Right.
Now, if you look at a CrowdStrike, that's the one that you...
Or a Palantir.
We could do Palantir. We could add that in. So let's add in both of them. And let's look at how they're trading. And this is where you get many different layers that we got to look at the forward EPS and everything else too. But right now, when we look at the revenue, Salesforce, and let's go back to market cap real quick and we'll just take a snapshot. Salesforce has just got back to over 200 billion. CrowdStrike is a larger company and Palantir is a larger company. And this is where I would disagree with a lot of people, because I would say, okay, Salesforce is doing 44 billion in revenue. CrowdStrike and Palantir combined are doing less than 12 billion.
Yeah.
And then we look at the margins. Palantir's margins are incredible. Salesforce's margins aren't bad. I mean, gross margin 77%, operating for 21, net 22. Not horrible, not nearly as good as Palantir's, but not horrible, better than CrowdStrike's. Palantir's ROE and ROIC is amazing. So you got to give them a huge premium because of that.
Yeah.
CrowdStrike's ROIC is negative.
Yeah, for real, all I'm seeing here is Salesforce compared to CrowdStrike makes CrowdStrike. I mean, everyone already knows it's expensive, but it makes it look egregious.
And it's also like, this when you get the sector and all the other stuff that's outside of the numbers. But you look, and this is where
you say this all the time: $1 of revenue is $1 of revenue, $1 of profit is $1 of profit.
And when you're talking about a company that's the smallest one out of these three, but they're doing $12.4 billion in EBITDA, and the next bigger one is 2.7, it's hard to make an argument that Salesforce should be a smaller company than either of these. On a net basis, they're triple Palantir's net income. The idea is to create a business to generate profitability, and companies should not be punished for already growing. They should be the floor and the standard for the market cap, because they've already gone there. They've already gone through the Palantir growth phase. Now, it hasn't been as aggressive, but back in the day, they were growing like a weed. And for them to do these types of numbers and still grow top line 11% is incredible. And the margins are good. And you look at free cash flow trailing just over $15 billion. So should you pay for CrowdStrike? Maybe. But I mean, you look at the actual multiples, paying 146 times for CrowdStrike's free cash flow.
Yeah, do you have forward, though, on this too?
I only have on the current numbers. I have the forward EPS numbers.
Okay.
I did not build my system to do forward projections because I do not want anybody saying I'm cherry picking data, because it's my own system, right? So I can't, the analyst community only comes up with EPS. They don't give you these numbers, so I don't put it in. But you look at what you're paying for today, CrowdStrike has to grow their free cash flow by so much just to get to where Salesforce is today. Oh, what? Salesforce isn't going to keep growing? Yes, they are. At least that's what all the projections show. So we look at where they're trading right now on a forward EPS. And Salesforce still trades at 14 times forward. Palantir at 54 times, I don't think is that egregious. It's certainly more egregious than it was 2 months ago, but that's why I got bullish on Palantir 109 again, because I said the actual numbers don't make sense anymore to be neutral, because there was so much EPS growth baked in that paying 30 times forward made sense to me. But I mean, CrowdStrike's numbers don't make sense. CrowdStrike is one of the best performers in the market over time, and it's catching a huge bid because nobody is spending less money on cybersecurity, and everybody is hardening their cybersecurity defenses, and they're expected to grow a lot. But should they be, take Salesforce out of it, should they have a bigger valuation than Palantir? Hell no. Not if the analyst community is correct with the forward projections. And I would say Palantir is going to grow a hell of a lot quicker than CrowdStrike. So no, I think CrowdStrike's valuation is BS. I think it's crazy. It should not be higher than Palantir.
Yeah, that's pretty crazy considering the margin profile and the growth.
Yeah. Palantir is a unicorn. And if we're going to say Palantir is the standard for growth companies, I don't know, CrowdStrike should trade 30 times forward, maybe.
I'm seeing some selling off on Nvidia. I don't really see a story right now. It could just be some profit taking. So I wouldn't be too concerned. Anthropic's valuation is now expected to exceed $2 trillion by the end of this year.
Jeez.
71% chance on Polymarket right now. That's pretty wild.
I can't wait for them to go public.
You're going to buy at $2 trillion.
Yeah.
Did you see the comments that Jensen made about Anthropic and OpenAI during the call?
I did.
Said they were going to be the greatest technology companies ever in history.
I know. And people think it's fake.
I don't think that they're fake, but
you don't. Did I say you? I said people.
No. I was just going to say I don't think they're fake, but I do think obviously Jensen is going to talk up his partners.
Sure, but
and
there's
literally
certainly a chance that they are.
So where on the list of the earnings upgrades, what would you put the forward price for NVIDIA next year to be? Are you even on this list in terms of where the analysts are? Because there's not one under 300 on this list. Where are you? 12 months out. What does Steven Fiorillo see?
So for next year, what do we think they're going to do in EPS? 15?
That's you to decide.
All right. So the street is saying next year they're going to do 14.62. Let's say the street's wrong and they do 15, which is probably cheap. That means that it's
probably 17.
Yeah, that means it's trading at 15 times earnings with the greatest growth profile we've ever seen from a company.
Ever.
And yes, companies have grown at quicker rates, but not at this scale. That's why this is the greatest growth. I don't see why Nvidia should not be $275 today, right now.
Yeah.
I don't see why. It's very hard to understand why at this growth rate, if you're going to give Palantir, you're going to give CrowdStrike, you're going to give those types of companies those multiples. NVIDIA is doing something that nobody's done and probably nobody will ever do again. And it's likely to continue for several more years. And the math just works because even if we say they were going to fall to 50, let's say they did 400 billion this year of revenue and they were going to fall to 50% growth next year, that's 600 billion, which is over 300 billion in net income at their margins. And then the next year, if it fell at 25, talk about now 750 billion in 2028 with 450 billion in net income. Plus you layer in all the buybacks. I mean, I don't see why NVIDIA is not 325 next year this time.
So real quick then, Anthropic should be going up to those types of levels. That's exciting.
Yeah.
Why hasn't it?
What do you mean? Why hasn't Anthropic?
Sorry, why hasn't NVIDIA gone? I thought you said NVIDIA is going to 325.
I said that I think that it should be 325 next year.
Yeah, why hasn't it?
Well, you asked about why Anthropic hasn't.
I'm disregard what I just said.
Okay.
Listen to this
I
question.
want to be clear because we were talking about NVIDIA and then you asked why Anthropic wasn't.
Sorry, why hasn't NVIDIA gone to 325?
I think that it is strictly percentage of the S&P. I still hold it. It's a stupid theory. Nothing else makes sense to me.
But it's based on earnings. So like can NVIDIA just buy back those shares at 15 times or, potentially next year or the year after if they continue to grow at these rates? Can they just buy their way out of what the market's not willing to pay for?
They just bought back $20 billion worth of shares in 3 months. They're now Apple of buybacks. And they're going to get bigger than Apple of buybacks.
Mm-hmm.
So yes, they can, in addition to actually growing organically, they can also artificially grow earnings at the same time and create a super cycle of earnings growth over the next 2 years, because this is a company that's likely to buy back more than $100 billion of stock on an annual basis now, while they're still growing at rapid rates. So I think the answer is yes, that they'll be able to scale and compound earnings quicker, which should drive the share price higher. I mean, there is not a single reason, because there is no evidence that the party is going to stop, the music is going to stop, and revenue is going to decline year over year for NVIDIA anytime soon. Yeah. Even if the growth on CapEx stops and starts to decelerate, as long as it doesn't go negative, you actually still have forward acceleration and more money being spent. And Jensen already said he's got visibility. I mean, when have they ever guided for 6 months out? Never. Never, ever.
What's called? I just want to highlight this from JJ Smith here. This isn't true. I'll just to think about it this way whenever you look at a market cap versus how many dollars actually need to be in it to push it. Figure AI is a robotics company. They had small amounts of funding before their most recent round where they raised $2 billion. So they raised $2 real billion at a $40 billion valuation. There was no $40 billion to begin with, but $2 billion came in and paid them that rate. So the amount of money that made them a $40 billion company was $2 billion. You don't need $1.25 trillion in order for Nvidia to grow to that overall market level. You need the last person to pay for one share to be $350, and then for everyone to say, hey, that's what this company is worth. So there's a big misconception about how much a market cap is versus how many dollars are actually circulating in that name. A $10 trillion company does not require $10 trillion. And the other way around is if everyone was to take out their money, there's not $10 trillion in there. If Bezos said, hey, and he has been in a selling spree, but I'll say someone who hasn't sold historically, like an Elon Musk. You could say he's a trillionaire. Good luck finding $1 trillion worth of cash if he starts going on spending sprees selling Tesla and SpaceX. That money doesn't exist. So there would be mass selling. Although companies are at these valuations, they're not actually the market cap is not full of, it's just whatever people most recently were willing to pay for it at that percentage of the company multiplied by how many outstanding shares there are.
Yeah, it's what the company is worth. And you look at the numbers out of Nvidia. I mean, I went through everything in my article and put it out last night. It's long if people want to read it. I'll throw the link in, but I mean, I think shares are very undervalued. So, and the numbers changed today after I wrote the article. I wrote this last night. It's like 3,000 words, very long, but I went through every single number. I went through every critical success factor for them. And I'm on a different side of this. I think that Nvidia is being unfairly treated because of how large the market cap is right now. And I think it's very hard for people and the market to have something represent more than 10% of the S&P.
Why is if Nvidia is, they increased their outstanding commitments from 119 billion to 279 billion, primarily for memory. Why is memory down?
I couldn't tell you. I've been trying to figure that out all morning. I thought Micron and SanDisk would have been up today. It makes no sense. You would think that we talked about this privately. You would think that Micron is a direct beneficiary because they are. That's the supply constraint is memory. And they are the number one company. It does not make sense to me whatsoever.
And Jensen specifically said this memory constraint is way larger and lasting way longer than he thought previously.
Yep.
So, while he might have brushed it off and saying, hey, most bottlenecks are done but for between 18 months and 3 years, he's saying this one is blowing past expectations. So, I mean, he's telling you, he's giving you the green light to buy, and yet the stock is down on that news.
Which is an opportunity, in my opinion. And I said it earlier.
You sold higher than this price is today. Are you jumping back in?
I don't remember where I sold. It was in the 900s.
Was it?
I think so.
Okay.
I'd have to look. I actually don't remember. It could have been 880. It could have been 940. I really don't remember.
Okay, because I remember calling you whenever I sold out of my cost base, and I was above 1,000.
I was not above 1,000.
Just above 1,000. I think it was like 1,050.
Yeah, I was. I believe I was in the 900 somewhere.
Okay, so are you getting back in similar price? A little bit, like it's technically better, right? You've had time appreciation. Yeah. They have more earnings now. Closer to new capacity coming online.
It's hard because I want to start position SpaceX. I don't want to sell anything. I got to put new cash in the market. And I'm not sure because Micron's now looking enticing. And then we got Anthropic coming up that I want to buy. I'm just not sure how I want to deploy capital right now.
I'm sorry, I'm going to go off on a little thing that this guy said. Yes. I mean, I don't know about you, but I read this sarcastically. Yes, we should believe what rich CEOs tell us. I don't know. Maybe he's not being sarcastic. I don't know. But like, for real, I am a huge believer of what Sundar and Jensen and Mark Zuckerberg and all of these people tell you. They're telling you which direction they're going to go. You know,
these people also probably think the trillions of revenue combined from these companies is fake, and that's all fraud. I mean, wait, are all these CEOs wrong?
All of them. They're all going to jail together.
Like, is it like people are making Enron comments on my stream, and it's like, why are you guys saying Jensen and Nvidia is Enron? Why? Like, oh, you think Amazon and Microsoft and Alphabet and Meta and Oracle are all spending money with Nvidia because they want to or because they're not getting anything for it? Nvidia builds the best chips. They recognize it. They're buying chips from them. How is that fraudulent? The fraud thing doesn't make sense.
Yeah. Or the people that talk about circular financing or any of these things, they watch one like Hank Green video and they think they no, it's all circular financing. I'm not willing to listen to another opinion, even though they are marking investment gains and sales.
Can I go off?
Learn what an economy is. Like,
can I go off?
Sure. Be polite, no swearing.
Okay. Before I go off, we're going to give an example. I own a office supply company. Tanner owns a janitorial company. Okay. If I sell Tanner office supplies, and if I contract Tanner's company to clean my warehouse, that's not circular financing. It is two separate transactions where I am spending money with his company for a service, and he is spending money with my company for a service. That is not circular financing. That is a circle of business. Now, when you circular finance, there's a very clear path. I'll tell you what NVIDIA is not doing. They're not issuing bonds to these companies. They're not issuing debt to these companies and being a bank. They are taking an equity stake. You will not find NVIDIA's cash going into a company going on the balance sheet as debt. It is going on the balance sheet as cash because the company is selling them equity. What these companies do with that cash is 100% up to them, and that is a secondary transaction. And if they are spending it on GPUs, that is how they spend the money. Two separate transactions that have nothing to do with each other. And if Jensen didn't want to own the equity, he would not have bought equity in the company. The circular financing thing is not circular financing, and it does not make sense. Oh, so let me get this straight. NVIDIA shareholders don't have all these companies on the balance sheet of NVIDIA? Of course we do. They're all there.
Yeah, Reckless in chat said, but bro, that's circular. Yeah, I mean, yes, it is literally circular.
It's not circular financing.
Yes, but what I mean, yes, money goes like this.
Sure.
Of course. But people make that out to be like it's a negative thing. Money has been
business.
Money has gone from Nvidia to CoreWeave hands, and CoreWeave has given money to Nvidia. If you want to look at it that way, you are taking the most surface level approach and you're not looking at the details. Like, if that's the argument that you're putting up and saying, this is why these companies won't win, good luck to you in your investing ventures. You'll never make it.
Bring up George's comment. Steve is explaining step by step how he's getting scammed, but he's still in the matrix. This is insane. I love it. Pretty sure I'm up more than 100% on my NVIDIA position.
But yeah, I mean, it's just spherical. It is. But like that, it's It's more than that, you know? You're getting equity and they're selling products. Like, what are you doing with Nvidia or other positions in your own portfolio? You are buying those stocks to put in your portfolio, and they are buying nothing from you in return. Are you just anti companies that have venture portfolios and make minority stake bets? Like, look to Google. They just marked $100 billion worth of gains based on some of their venture bets to SpaceX and Anthropic. And then if they also want to go and sell SpaceX and Anthropic, Google Workspace and a lot of their ad credits and all of these things that they can end up selling to those businesses, does that make it bad? Or is Google winning twice? I would bet greatly on the fact that Google has made great investments and is signing long-term partnerships with companies that they have venture bets with. That's all NVIDIA is doing here. Stephen Fiorillo made a great article before. NVIDIA is becoming the Berkshire of technology. That's what they're doing. They have so many customers lining up to buy chips. Like they said, they're completely supply constrained. So now they're saying, all right, everyone slow down. You can wait in line, or if you want to offer us a little something extra, maybe we can get you some chips and, maybe we can bump you to priority access. We want access to low valuations in your company. We want a return on the data center split of revenue, which they're doing with some of the smaller companies. Or, what they're doing with SpaceX. Not only did they make a venture bet with that business, and that investment's already up over 100%, but then also they're saying, hey, we're going to buy CPUs from you, GPUs, like we'll just be exclusive to you guys going forward. Why are those bad deals?
I also think it's crazy that people think they know how to spend these companies' capital better than these companies. Oh, so Amazon and Alphabet investing in Anthropic's a bad idea? They're up on the investment. What do you think is going to happen when they go public? Like, that investment is going to be worth 3-4x. It's just, people don't understand business 101, and they probably should.
And for real, there's been so much negative sentiment on artificial intelligence. And if you look back at like early days, GPT-3, when a lot of the investors, or I'll put myself in there, I was obviously very excited, and they call us like techno bros or whatever, they make those comments or whatever. Those people are using artificial intelligence today. They'll act like they aren't, or they'll act like they won't buy anything that's supported by artificial intelligence, or they'll get mad at movie creators that are using artificial intelligence in their movies. It's happening everywhere. And like, you're going to pick going forward what type of products that you're going to want to buy. Same thing with like buying craft items versus going to Walmart and buying something that was created in China. It would be very nice to buy local, okay? It's going to be a lot cheaper to buy from Walmart, and Walmart has one. They're the publicly listed business out of the ones that making craft junk at your, local store. So I would just be careful to not be on the wrong side of history because you believe that somehow this is going to hurt economies or hurt jobs. Like, we're not seeing that in the numbers. I'm not an advocate for people to lose their jobs, but because I don't even believe it's going to happen. But I am going to be a user of future technology. What are you showing me here?
Just bring it up real quick. So I'm not going to play it, obviously, but Diary of a CEO with Ed Zitron, okay? If you don't listen to it, but you just listen to one part, okay? It's 16 minutes, 9 seconds into 20 minutes. It's less than 4 minutes. Is the spending of AI companies justifiable? He went on a rant saying it's not justifiable, et cetera, et cetera. And he cited Amazon and Google. Once again, who is any bear or any bull, myself included, to say what is justifiable? We don't work at the company, and we are not making the decisions on how they're going to expand their revenue. And that's where the bear case really falls apart, because they're trying to make arguments that Amazon spending $150 billion in CapEx isn't justifiable. Well, says who? Are you running the company? are you looking at their data showing what their customers want or what you need to do to compete and succeed and drive more revenue? Because if you're not, shut the hell up, because you have no idea what you're talking about.
Gentle.
I said hell, it's not a curse.
I know, but you're getting aggressive. The Market Bandit here says, you guys' arguments are super valid, but I think NVIDIA's valuation just comes down to market cap and 12 to 18-month outlook and questions if growth can sustain.
Growth can't sustain. It doesn't need to.
Yeah, I don't think anyone's calling for 70+% growth rates long-term, or else I wouldn't say 10 to 15 trillion. I would say frickin' this should be a $30 trillion business. You know, I think that growth ends up going down to a healthy 10 to 15% growth rate over the long term.
Sure.
And that's what we're buying for. But the base of what it's growing 10 to 15% on will be much higher than where we are today.
And think about this. If Tanner's number is true, if they get to 1 trillion revenue and then that happens, which I think it's going to be longer, what's 10% of $1 trillion? It's $100 billion. Like, that's still an incredible amount of growth. That's an additional 50 billion in net income that can buy back shares.
What Chris obviously said that he believes that Nvidia, he said this on the channel. It's not like private. Yeah. I'm not sharing anyone.
Well, he went down the rabbit hole last night and I had to stop him.
He said it's going to be $1 trillion business in the future. Did he reiterate on that?
What?
He said Nvidia will be $1 trillion market cap in the future.
He did not. No, he did not say that today.
Okay. He did. No, he did say that weeks ago.
A while ago, he said it.
No, I mean, he said it on my channel weeks ago.
Yeah, Froggy, why would you trust me watching your toy poodle? I don't want to watch your toy poodle. Like, why would you trust me?
But so what did he say yesterday?
Well, you can go back and watch it. I sent Matt a message to see if I'm crazy or not. He said he doesn't believe that we're supply constrained.
Let's see if we can get him on.
He went down a very big rabbit hole with a lot of things. So,
yeah, I mean, it's you know, it's one of the things with the bears. Like, if you just tell me, if you just say, hey, the numbers are fraudulent, what they're saying isn't true, and the sky is actually yellow, it's like, I can't, if you don't believe in the numbers, then I can't argue with the numbers. Like, you're not allowing me any wiggle room here.
And that's all we're going by is the numbers. Like, we're not, Tanner and I both know, not that we understand, but we know growth will decelerate. Like, this is not going to be kept up. Like, yes, expect growth to decelerate. It's going to happen.
For every business, by the way.
Yeah, not just every business.
Every business.
So, I don't know what the Bears want. I mean, once again, there's no indication that this is going to stop anytime soon. So, I don't know.
New GTA 6 trailer?
It's tonight, right?
Oh, is that tonight?
It's on Netflix. I don't know what
that's
time.
the Netflix one. Yeah, I didn't realize what that was. So they're making like a How We Made It type movie or something?
Yeah, I'm going to watch it.
Matt gifted 10 memberships, said take your shirt off. Matt
on. He was part of the conversation last night. He can tell you all about it.
No, it's coming out at 3 p.m. Eastern Standard Time, Steve. It's coming out in 7 minutes.
Okay.
Matt, I turned down a $10,000 offer to take my shirt off. For you, though, Matt, off camera, I'll do it for free.
Oh.
It's too much for you?
Tanner just didn't say if the camera was going to be on or not.
I said camera off. It starts in 4 minutes.
So I think the real question is, at what point? I mean, if you go to tip ranks, they're at 325 now for the average price, 12 months.
Yeah, it was 10K. Whenever whenever they offered me 10K, it was Dookie Pie. Markets were up. Okay, I think like Nvidia was near an all-time high.
Have you seen Dookie Pie at all?
No, she comes in and out.
Recently?
No, I'm not. No, I mean, like, she has like these stunts where she'll come on, or stints where she'll come in for like 4 months and then leave for like 8.
Oh,
come in for 4 months. But yeah, the markets were really up. So I was like, no, dude, I don't need that. And then we were down and Nvidia was like $168 a share. And I was like, where's Dookie? I'm ready to take my pants off. I need some dang money.
Anthropic's planning to release
Comedy.
their IPO prospectus right after Labor Day, September 7th.
That'll be good.
Get ready. I can't wait.
That will be good.
Yeah. Moral of the story, I don't think that AI is stopping anytime soon. Super bullish. Can't wait for their next quarter's results. And I think Nvidia goes higher. I really do.
Where do you think IREN is going to go after tonight?
I don't really care about IREN.
I know you don't.
I don't follow it. I don't care. I think the CEO comp package is stupid. Can't get involved.
It's cheap, though.
Maybe it is.
I mean, comparatively to other prices that we've seen, like historically speaking, it's much cheaper than where we were before.
Look, when you give that type of package with no ties, you just got to stay there. No performance. Hard to support that.
Did you see the Palo Alto CEO and what they said?
No.
Nikish of Palo Alto said, NeoClouds will be acquired in 2 years for less than today's fundraising valuations. Then he also said, Nebius is at a different tier. He called them like a Neoscaler or whatever. But
sure.
He said NeoClouds will be acquired for less than what you can buy them today.
Okay. We'll see. Like, I doubt it, but okay.
We're going to be live for IREN. I'm going to be, someone said, what about IREN? Well, I'm going to say he's going to not like that name. But we're going to listen to their call. Let's see what their previous moves were last quarter. It pumped like crazy, but I don't know what it was the quarters before that. And it was a huge double miss last time. I mean, just insane. Missed on revenue and EPS by over 30%. Both of them, top and bottom line. Okay. The moves on the stock over the last couple of quarters, post-earnings, 7.7% last quarter, 5.1%, negative 6.8%, up 14, down 2, up 0.5, up 30, up. Dude, they're more green than not on earnings. Does that make you want to do a little earnings play?
No.
Steve-O?
I'd rather buy call options naked on freaking Micron.
No, don't say this.
Yes.
Their actual earnings have been falling.
I mean, I already have CoreWeave and Nebius. I don't need all three of them.
Nscale is looking to go public soon. Maybe that'll be one that you might want to consider.
Maybe.
Did you see the Anthropic deal that they ended up signing yesterday?
No, I did not.
So Nscale is a smaller NeoCloud. They're owned and supported by Nvidia for a long time, but they're small. I think even smaller than IREN.
Oh, Zeta 3015. We're back, baby.
There you go.
We're back.
But what was I going to say? Nscale just signed a $45 billion contract. $45 billion. That's probably like more than triple their freaking market cap of Vera Rubin deals for the next 6 years with Anthropic. Decent pricing on the chips, nothing crazy.
Sure.
Okay.
Not interested, but I am interested in SoFi getting back to 20.
Uh-oh.
We're over 19.
What are you seeing in SoFi right now that's got you excited? Also, why did it dip this morning? I saw a lot of people talking about that. I didn't see any news.
I think they can get an S&P this year. I think earnings are going to continue to grow. I think Noto's sandbagging. And I just think it's a company that is going to be a multi-year compounder on earnings, and eventually the share price will follow.
Yeah, I mean, any company that's expected to continue to grow revenue for over 30% for the next 3 years is a pretty easy hold.
Yeah.
And like, for real, has been a pretty consistent price. Pretty consistent, like linear growth. We've not seen like the stagnant growth or explosive growth like we've seen for Robinhood. You know, during extremely good times, Robinhood just shows up. During bad times, they can completely flatline or even go down. SoFi, even during bad times, will just continue to make more revenue than they did the quarter before. Like clockwork. Bang, bang, more growth. And each and every time it lowers the valuation. But there's been a lot of raises in the entire, like, I saw that this company, which everyone talks about what they SPAC'd at, the company's market cap whenever they SPAC'd was like $8 billion. The market cap today at $19 a share is $24 billion. It's crazy how much dilution that there has been on this stock for assets that for the most part have not worked. Their acquisition strategy has not been so good. Galileo, Technisys, a lot of these companies, I'm sure they're down on those overall investments. Definitely Technisys.
If you look at it as infrastructure, though, and investing in the company rather than revenue generating, are they really down? Could they have done what they've done without it?
Yes.
Maybe. I don't know.
I mean,
I'd
it's
argue
a cloud-based core and leisure. You don't think that there's other services that offer what, I mean, maybe you don't know this, but there definitely is other companies that offer what Technisys offers.
I'm not saying there aren't other companies. What I'm saying is that SoFi has been able to deploy what they want, when they want, and build it how they want. And I think that was the big advantage to acquiring them. Because sure, you're right. They could have just outsourced to a different company, but owning the infrastructure gives them true autonomy with how they built.
Bro, this is legit. I just watched the whole Netflix thing. I'm just skipping through it. It's like a 28-minute or 26-minute trailer.
I'm going to go watch it.
I don't know why people are so excited about this game.
Can't freaking wait.
It looks whatever.
I can't wait. Listen, Uber, don't be surprised if Uber goes haywire in Q4. Uber Eats is going to kill it when everybody's stuck at home, losing their lives to GTA 6.
Uber Eats is the proxy for GTA 6.
100%.
Donald Trump did tweet about Micron. By the way, I saw some comments about that. I just checked. Great news. Micron, one of the hottest companies in the world, just announced a massive $10 billion investment in new research labs right here in America. That was actually a bit ago. They're keeping us at the absolute forefront of AI and advanced computing. Combined with their previous tremendous $250 billion commitment, they're creating over tens of thousands of great American jobs. Which is definitely true. Those are high-paying jobs. We are bringing critical technologies back to the United States because of our great policies. Companies are investing trillions. I've made it clear that America will lead this way to a new golden age of science. The results speak for themselves. During my administration, companies are investing trillions of dollars because they know the United States is the best place in the world to build, invent, and grow. I mean, and tariffs, but all right. Congratulations to Micron's fantastic CEO, Sanjay. We are strengthening our economy and winning big. The golden age of America is here. Make America great again, United States President Donald J. Trump. I'm really surprised with the amount of retruths. That's kind of crazy. Or retweets for them. How many people have Truth Social accounts?
You and me do. I don't think many people do, though.
I don't think I do. I mean, maybe it logged me in, but I think I'm just viewing as a guest.
Oh.
I don't think I do. Maybe I might have signed in with Google or something one time and it just auto connects me. I don't know.
All right. Well, I'm going to get going.
Yep. You enjoy your video game trailer.
You enjoy Nvidia getting closer to 250 and me losing the bet.
We both hope for this.
We do. And I'll
Yep.
talk to you later.
See you later, brother. Thanks for coming on.
All right. Later.
Trump's trying to pump his bag. I mean, genuinely, I hope he's right. I think Micron's going to do quite well. Matt, also, if you have some time, I've got to burn another 30 minutes or so. I would love to hear some of your thoughts on the quarter, some of your thoughts with the great and powerful Chris Patel, where you are on this AI trade, if you have a moment. I saw people saying that Netflix went down, but I hopped on perfectly fine. I don't know if it's because of where I'm located or whatever, if maybe those servers aren't down, but I literally just scrubbed the entire thing. It's for real a trailer. Okay. And then on top of that, I will be joined by Amit Kukreja, Neil, Couch Investor, for IREN earnings. We did a vote. IREN clearly won out. So we'll be listening to their call, but don't worry. We're still going to be going through the numbers for Marvell, for, Rubrik. I've got Rubrik in, wait 1 sec. YouTube partners with Amazon for easier creator shopping tags. YouTube and Amazon have integrated the retail giant into the YouTube shopping affiliate program, allowing eligible US creators, to tag Amazon products directly in their shorts, videos, and live streams, announced by the CEO, Neil Mohan, on August 27th. Eligible US creators. What the heck's that about? I got to move to America. They're stopping my gains. Not that I have a product, but maybe if I wanted to sell wigs. Yeah, exactly. Tag the wig. Exactly what I was thinking. Tanner merch when? I just wanted to have a shirt that said low testosterone or low T or something like that. There's been not too many. Maybe a Yuck My Yum shirt. People seem to get a kick out of that. I can't believe you guys have never heard Don't Yuck My Yum. Rubrik is up 11% without earnings. Yeah, that's because some of their, it's going to be hard to continue that pump. I mean, I think some people are already anticipating some pretty fantastic gains. I might be a little bit more exposed to the downside. I use that phrase every day. Move your janitorial business to the United States. What am I cleaning up? The Bears? The Nvidia Bears? Just don't harsh my mellow. I guess that's the equivalent to don't yuck my yum. Okay. Maddie Money went completely quiet whenever I asked him to join the show. Matt, where are you? Let's talk. Let's hang like bros. Okay. Yeah, I mean, Rubrik could just continuously find new highs. I need it for the draft to keep going higher. Only $22 billion market cap. And we continue to push new highs even right now. Like literally just a few minutes ago, we just hit another all-time high on the company. It's just been doing extremely well. Very, very exciting. Okay. Well, one sec. I'm talking to Chris Patel. I said if he wants to come on, let me know, but Steve already left. Okay. I do want to hear his thoughts. That's a phrase that I'd expect someone to say with low T. No, bro, come on. Okay. IREN's expected revenue this quarter is like bottomed out. So I don't know this company. I don't follow it extremely closely. But historically speaking, I mean, I believe that they are going to sign large deals. We still were expecting the Cluster Max 3 ranking, which hopefully ended up bringing them up. But we haven't seen that. Like, wait, Cluster Max. For anyone that doesn't know, the Cluster Max ranking is Semi-Analysis, a company that is known for reviewing and is a little bit of a consulting business for cloud names. And what they've done is essentially put a ranking list in order on a lot of the cloud names. This includes hyperscalers, neoclouds, the whole 9 yards. And the way that they've ranked this is to say, CoreWeave, they believe, and they put a lot of work into this, and you can read the full review. It's completely free at clustermax.ai. CoreWeave is the number one space, whether that comes to security, latency, pricing, time to set up the clusters, access to the highest level chips. They are number one. Next to them in gold, Oracle, Nebius, Microsoft Azure, Crusoe, and FluidStack. FluidStack supposedly also looking to go public here soon. So those would be great ways to get more visibility into this space, is if names like FluidStack and Nscale and many of these names end up going public. Now, as you can see here, unavailable, as they say, where they put it sort of under this not recommended, but they just can't recommend it because they don't have access to these companies' stacks. You have Mistral and Firebird and Humane and Nscale and many of these other names, right? SK Telecom has their own cloud business. So those companies, they really just don't know how their performance stacks up. On the underperform side, these are companies that they have tested and did not like. Sharon AI, IREN, White Fiber. Okay, these are some companies that are public that, you know, we have access to purchase. Akamai is also there. And they're not really liking these names. So this is a very, very big or important report. The last update that we saw was April of 2026. The next one that we're going to see was supposed to be August 1st. That's when they said that their deadline was. We're a little bit past that. So I don't know when we're going to see it. What I really hope for is that Nebius ends up climbing up to platinum as well. They've made some pretty good advancements. And then hopefully IREN also makes it on the list as well. I mean, they are on the list, but actually gets ranked somewhere in here. All right. Wow, this GTA trailer is unreal. I literally just scrubbed it. It looks like a game. Semi-analysis is rigged. Rigged for who? Rigged against IREN? Is that what you're saying? You think maybe they didn't pay them enough so they get a bad report? The game looks like a game. Yeah, I mean... Okay. So Hopefully the ClusterMax 3 ranking ends up coming out and then IREN gets a big tick up. If they do, if they start making it on the list a little bit higher, I believe that the stock will appreciate on that news. Because then, you know what? Anthropic and many of these companies, they look at that list. The purchasers of where do we set up our data centers, they look at those lists. And they go, ooh, not recommended, IREN. Okay, well, I'm not going to pay you top price. CoreWeave, they will pay top price. Hard to believe that they studied every company. Raven, so not only did they study every company, in order to be on the list and rated, you have to give them access to a cluster so that they can run all their reports. So every single company on that list is not just studied, but they have actually been actively working with those companies. So yeah, they need hours of GPU allotment in order to just even make it on the list. And many companies like Google TPUs and Trainium and these sort of companies have not given SemiAnalysis access to benchmark those chips. But SemiAnalysis is a very, very big company. This is a multi-$100 million business. Like, this is not some small organization. This is not like some tiny research firm. They're huge. But yeah. And SemiAnalysis absolutely does not have beef with AMD. No, Dylan Patel has said nothing but amazing things about AMD recently. Dylan Patel being the CEO of SemiAnalysis. Which AI data centers do I hold? CoreWeave, Nebius, Microsoft, Google, Amazon. What else? I think that's pretty much it. I have some other AI names that obviously I'm betting on. Like Meta, but they're not testing. They're only for internal use. But yeah. Matt's busy. He's at the office. I don't have a position in IREN right now, but just like last time whenever we were watching it, they ended up signing that deal with Nvidia. Stock spiked. You look at the other neo clouds that are getting deals right now. Just insane prices on a per watt basis, per megawatt basis. CoreWeave, huge earnings surprise. Nebius, huge earnings surprise. Now it's IREN's turn. I just can't imagine that they are so different in terms of the types of deals and the conversations that they're having. And like, I don't know, we'll listen to the call, but if it pops on earnings, I'm not going to be surprised in the slightest. Okay. Nvidia seeing a little bit of a drawback from being above 230. We're now at 226.40. Up 8% still. Okay. Up 8%. Let's check out CNBC really quickly. I also got to get a little lunch. It's going to be a long day. The investment committee weighs in on Nvidia. Let's listen to a couple of the lads talk about Nvidia really quick before we have Amit on and Neil and all those guys to further talk about IREN and some of those names.
Green across the board, sort of figured that would be the case, but there are some interesting market moves that we're going to get to, as much for things that aren't moving on the back of what Nvidia delivered. So the number that jumps out to everybody is the 70% guide for revenue growth in 2028. The street was at 44. Why? Because it's kind of hard to see out to 2028, but Nvidia is attempting to do that. It usually never goes out that far for obvious reasons, right? It's a tricky proposition to try and do. The suggestion is that it would have been even higher if not for supply constraints. Gross margins were in line. That was a question too. Our question is not so much about the print. Everybody knows it was amazing. But what does it mean now for the stock? Down 8 of 9 days going in. It's having a nice move now. 16 target hikes Ray J, they go to 515. That looks to me to be the highest on the street. They were at 352 because they were blown out of the water by what they got. Strong buy, they say $1 trillion in sales by 29 seems possible. So everybody owns it. Josh, we'll start with you. What do you make of what we got and what the stock's doing now?
Okay, so a couple things jumped out at me. We'll start with what you just said, which I think was really interesting. Jensen said they have never forecasted out a year in advance, but they have more visibility now. Why do they all of a sudden have more visibility? It's an installed base that is so gigantic relative to what we were talking about 2 to 3 years ago. We know not only what, the amount of data centers all over the world that are starting out with NVIDIA GPUs, but what the replacement cycle will look like as NVIDIA upgrades, which they're doing on a ridiculously rapid cycle. And these chips don't last forever, especially if you're using them for training, burn out really fast. The amount of inference that's happening, it's not like, all right, we built the data center, we bought 200 Blackwells, we're good for forever. We think maybe you're good for 3 years, 4 years. So that's where that visibility is coming from. I thought it was key. Two other words that are the most important words out of all of the remarks that I heard. One of them is visibility, but the other one is fungibility. And this is really critical. One of the knocks on the stock over the last year, or one of the overhangs, was this idea of competition coming from application-specific integrated circuits, coming from all of their competitors doing different things, getting by with TPUs, with Trainium, et cetera, et cetera. They announced a massive deal with Amazon, making it very clear that the GPU will always be central to that particular hyperscaler. And they talked about the non-hyperscaler revenue, the ACIE. Every model, every region runs on NVIDIA. They can do compute rent. They can do sovereign clouds. They can do the AI labs, the Neo clouds. The fungibility of NVIDIA compute, the platform itself, is the primary thing here. And I thought that was a really interesting thing for Colette to focus on, and then for Jensen to double down on during the Q&A.
Malcolm, your take on what you think this now means for the stock itself.
Yeah, one of the things I was looking for, I told you yesterday when I was on Closing Bell that I was looking for was proof that NVIDIA has figured out a way to become less reliant on Meta and Microsoft, its two biggest customers by a long shot. And Josh mentioned for a second the non-hyperscale revenue. I think that was an important point because they just started breaking that out as a separate metric 3 earnings periods ago, and they already have shown that they've taken that number down from 59% to 55%, which doesn't sound material until you consider this is a $5 trillion company, so every 1% move matters. And so I think it says something to the street that we have figured out a way to sell our chips to whoever is available to buy them. Not only that, they've also been investing for years now in growing their next customer to come and unseat those hyperscalers. And I think we're seeing that that's finally starting to pay off.
I feel like when we had this conversation yesterday that you had a reasonable amount of skepticism in your voice and in your head in terms of believing that they could accomplish what you think they may have actually accomplished last night. Is that fair?
It's fair, except it's not that I didn't think they could accomplish it. I didn't think they would accomplish it this fast. So them being able to decouple themselves from those two core customers goes a very long way. There's another piece that I've been tracking from NVIDIA since before I was even a shareholder, which is the level of their receivables versus their inventory. And over the last 4 quarters, that number started to shift from that 2-to-1 ratio that it was that has been dominant in this streak they've been on for the last 3 years that made me really like their standing. It started to disappear. This last period, they just reported numbers that show that it's back. So we're talking about something like $63 billion in receivables versus $31 billion in inventory. So once again, this company is all sold out for the next 12 months. That again gives me more confidence in the company's ability to deliver and not be so reliant on just 2 companies.
Okay, so let's leave that chart up. Put that guys back up before me, please. So, Snipes, do you think this is now finally that moment where we see a considerable stair step up like we have in prior instances on that chart after going sideways here for a bit to give this stock that next meaningful leg higher?
I do, and it's a lot of what Malcolm and Josh just mentioned. They have strategically widen the tent, right? So if we think about the hyperscalers, which are the most profitable companies in the world, that business grew 13% sequentially, 102% year over year. But if you think about NeoCloud, Sovereign, Enterprise, those companies grew 25% and 138% respectively. They're growing twice as fast. I know it's a much smaller segment, but when you widen the tent in the manner in which they are, this is the opportunity. This is where all the chickens come to roost. And this is the opportunity and inflection point, I think, for NVIDIA. So I like what's happening here. I also think about what's going on with private equity, the $500 billion investment that obviously Jensen architected, which makes semiconductors an investable asset, right? Financing becomes far more available, which I think is just going to grow this space even more for the entire ecosystem. So I like what's happening.
Okay, I want to address the issue of returning cash, okay? I thought Josh used two words that perfectly set us up for that part of the conversation. Installed base. Can you now look at NVIDIA as having the most important, durable, meaningful installed base like Apple has on the consumer side, NVIDIA now has on the enterprise side? And will that mean that this company will think about an Apple-like buyback? Maybe not this time because they didn't do a shock and awe buyback decision, but they may very well think about doing that in the quarters ahead, to which Jensen Huang said to Jim Cramer last night on Mad, he does expect buybacks to go up. He said the stock was, quote, a tremendous opportunity. How would you entertain the idea of an installed base and then returning more cash to shareholders in another Apple-like moment?
I'm going to use what Malcolm said because he said it first, and I'm going to copy him. Like we said yesterday on Closing Bell, you hinted about this when you started talking about Apple yesterday. If you take a look at how you run a business, what Jensen has done, like Apple's done, they've created the annuity. You have the base of business. You look at that chart, it is a fantastic, amazing long-term chart. Josh is a better chartist than I am. You talk about the stair-step pattern of the price increases, number one. Number two, I talked about it yesterday, consistency. I'll add that from the visibility and fungibility. The consistency of this company is amazing. Now they've created the base, and if you saw the way the stock was trading right after the earnings came out, down, right? We'll sell the news. And then all of a sudden he started to talk, and he re-examined and re-put forward his consistency, not only from a deliverable of the product, from the earnings, from the gross margins, but now, Scott, he has already told you that they're going to be a consistent buyer of their shares. For us, a long-term shareholder and a long-term investor, we really like that.
I almost got through my foot-long sub here. I'm working my way through. I want to put on one more video. I got a long day of streaming here, so you guys gotta bear with me. This is my lunch, okay? So, someone said if I use DoorDash has been the absolute worst. I think I've only used them twice, but both were terrible experiences. They got my order entirely wrong, and then they offered me like $5 in return after spending $40. So they're just an awful business, and I hope they go under. But Uber Eats, can't go wrong. To the people in chat who are saying that I have to drink liquids when you eat, no. Shouldn't drink when you eat. Drink after. Okay. Let's see what else. Nike's problem, Salesforce stock. Let's see this. I kind of want to watch this. Good area for a buy. Let's have a listen.
Mark Benioff says it is time to put fears of what they call a SaaS apocalypse to rest. Is he right? Joining us, Jay Woods, Chief Global Strategist of Freedom Capital Markets, CNBC contributor, and new author of an article just out. You're talking about the gap, and we just had Mark Newton on, who's a technician, about sort of, I guess, filling the gap. And a lot of these software stocks got crushed. Now they filled those gaps. What is that move, Jay, telling you about the sector, about these stocks?
Yeah, you've had a great show of technicians, so I'm happy to join the party. But that gap gives us so much information. Coming into this week, Salesforce, if you look at it on a daily basis and a weekly basis, it was at a major inflection point, major resistance point. On the daily, this 210 area got to it 3 times, couldn't get above. It's been in a downtrend since December of 2024. And what did it do? It crushed it on the earnings front. It gapped higher, and that gap is any trader's dream, because now we have a floor from which we want to build with. If you were lucky enough to buy it on the opening, or God forbid, own it before this gap, we got the price confirmation we've been waiting for. I'd rather see price confirmation than gamble when we have an inflection point in a stock. And now we use that gap as knowledge. It broke above the weekly 200-week moving average and a major resistance level at 240. I thought maybe it would slow down there, but now if it pulls back, we have an area to buy. And where have we seen this before? Guess where? In the software space. Microsoft, Snowflake, Palantir. They were all in severe downtrends during this apocalypse, as it's been called. And what did they do? They finally had earnings where they reacted positively. The earnings have been good, but the reaction now is favorable. Yeah. And I think that interview that Jim Cramer had last night was a seminal moment that we can put an end to SaaS apocalypse. We'll have winners and losers, but AI is not wiping out this trade.
Well, I hope we can put the term SaaS apocalypse, which is on our screen around a bed, because I don't like it. About 8 people know what it even means, and nobody cares, and it's hard to say and whatever. When you get on the subway in London, the tube, they say mind the gap, because they don't want you to like fall in and get your foot stuck. What does a gap signal in stock charts?
Yeah, gaps are opportunities. It's gap and go. And now from a risk reward point of view, you want to use that gap as your stop. It's still not too late to buy it. And on a long-term basis, you back this out 2 decades, it held a major uptrend. I think Salesforce is back like some of these other software names, and it's a good time, not too late to get in if you have the patience. You may have missed today's move, but the long-term move, I think these stocks are back.
Salesforce. Okay, I got to put something on really quick. Now it's time to drink. That was my lunch. We're good to go now. But new Anthropic video that we have to check out here.
News out of San Francisco.
Brian, this one is about Anthropic. The AI giant is moving further into robotics and hardware ahead of its IPO. They just announced a new set of what they're calling standards. It's for other companies. It's designed for medical devices. They talk about robotics, manufacturing. They built what is called a standard interface, so vendors can basically just take this out of the box. And it's not an AI model per se. It is a way for the underlying tech to basically speak to some of the hardware when they're building it in a much simpler way. So Anthropic's team gave us this analogy I think is helpful. It's like a USB cord. So it tries to standardize things between devices. You can think of it almost as an electrical port. So the port means that any device you want to use can just be plugged in. It's a way to really try to simplify this. One early partner they mentioned is Genentech, so early drug development there. They have devices in a closed environment as part of that. They are starting with medical and manufacturing, but again, a lot of potential upside, and it does come as Anthropic tries to diversify and grow into new areas ahead of its IPO. Also, some personnel news as part of this that does fit into the strategy. It looks like OpenAI's head of robotics, who left earlier this year around the time of the Department of Defense controversy, she has now joined Anthropic and is working on robotics. This is Caitlin Kalinowski. It's according to her LinkedIn. So before OpenAI, she was also head of Meta's VR team. So would take that as another signal of Anthropic's ambition here, pushing into hardware selling.
Okay. That was a good little video review. We have the great and powerful Neil and Amit Kukreja joining us in the next 12 minutes or so. So that should be quite good. Hopefully, you know, it's, I was talking about this with Marshall. Every year that I've been investing, I've been investing for this large boom that I believe is going to happen. It wasn't always AI. Sometimes it was crypto. Sometimes it was self-driving. Sometimes it was an EV boom. Sometimes it was some other technology. But I've always been focused on these sort of bottleneck, large constraints, these booms. And as we are in this midst of this AI boom, there's talk about where do we end up, you know, getting to max capacity. But then right around the corner, like with clear visibility, we have robotics. And that might be 5 years away, might be 8 years away. I don't know. But we're getting close, and we're making advancements that are so fast that I think the likelihood that someone is going to crack the code and really blow the doors open on physical AI in businesses, in personal life, consumer like physical robotics, that is going to be so useful that you can either charge flat rate, high revenue robots, or potentially even subscription based. You want your AI walking around, pay us a monthly rate. I think that these things are going to come. I think that these things will be high revenue businesses for the companies that end up getting into this space. But it's just sort of funny that any time that I feel like the sort of boom is going to be over and everyone talks about like, okay, well, what does steady state look like? After AI happens, what is steady state? And I'm like, is there even going to be a steady state? Steady state? I don't know. I don't even know what the next advent is going to be after robotics. It might be a space economy. And the early investors are looking forward to that 10 to 15 years from now, but maybe it's a space economy and then some form of robotics and agentic AI and all of these things all up in space and trying to collect minerals and bringing them down to Earth, or potentially bringing humans to Mars. Like, I don't know what the types of investments I'll be making in 2040 or 2050 or something crazy like this. But it is exciting to know that there's going to be constant innovation. That makes me very excited. And truthfully, this is just on a mindset thing. You can either be extremely optimistic and wrong, or extremely pessimistic and you're right. I sure hope that I'm optimistic and wrong. I mean, that would be the worst outcome. But like, I couldn't imagine being in a world where what I'm hoping for, what I'm betting on, is a worse world, a worse outcome. And yeah, Amit's coming on. But it's just crazy, the mindset of investing, how pessimistic it can be from time to time. I'll never be that way. DoorDash is a different story. I mean, I've had one bad customer service situation, or maybe it was two. I don't even think that they'll do bad. I just think it was bad luck for me. But still, I'll never use them again. In the general theme of investing, I believe humans are going to be living better lives. I think that there will be a lot of money to be made, a lot of abundance. I don't think about things in a scarcity mindset. I think about things in a large abundance mindset, which has gotten me in trouble from time to time, as people think that, what I'm potentially taking their stuff, or like we're competing for the same sort of thing, rather than thinking that there's enough to go around. Even AMD versus Nvidia. Like, I hear people get so negative about Nvidia because they have stakes in AMD, and it's like, they're both going to win. They are both going to do extremely well. But yeah. What do you expect from Rubrik? Honestly, I don't know Rubrik very well. I've only done like first impressions, looking through some of their numbers initially whenever I picked them for the draft. What I was picking was an overly sold cybersecurity name that was in the recovery space. So I wasn't, I don't have a deep dive or an expectation for tonight. I hope they do well. Okay. Do you feel like a trader? Wait, where was that? Do you feel like a trader for investing in American companies, even though they are trying to invade Canada? No, I've never been a Okay, so I want to actually ask, how many people here are from Canada? And then I want to know what it is to be a Canadian. Because I agree with country pride. But then that country better have an identity. And I don't know, like, I ask people, you know, what's the identity of Canadians? Extreme, you know, strong, patient, nice. Some people will say maple syrup. Like, I mean, like, I believe in all those things. Sure. But like, a lot of those things I think are beliefs of Americans too. I really think there's so much overlap. I go to America and feel like I'm in Canada. There's definitely some differences. I mean, I'll go to a superstore and or like a fast food joint and ask for a large, and then they bring out a bucket, and I'm like, what is, like? There's definitely some scale differences in terms of the, you know, the drink sizes are large. But aside from that, I mean, what is Canadian identity? I don't feel like a trader for investing in winners. I think that, you know what, if the greatest stock market and the greatest innovators in the world in the country that I believe has very similar beliefs, I wouldn't call myself a very religious person, but I think the religious beliefs across, you know, Canada and America overlap quite well. Like a lot of those things, the societies are pretty very like quite similar. I don't look at it like Canada versus America. I look at it like Western values, and America is, especially in the areas that I'm investing in tech, Canada doesn't even have a space. We have Shopify, and I'm invested in them. So, and I'm not saying this to be anti-Canada or anything, but like if they made great companies, I would invest in those great companies. But there's been too many times where they've stepped in the way with a ton of red tape and said, hey, actually, you know, fintechs aren't able to come here. There's areas where they've sort of taken the more conservative or safer route in terms of the regulation. And that's been at the protection of few and at the price of many, you know? Yes, of course, people like during very, very small, not small incidents, but like during the great financial crisis, we came out pretty unscathed because we weren't really a part of that because of good regulation that stopped us from getting into these types of bad loans. And, you know, FTX wasn't even here because they didn't show us their books. And, you know, like that, we stopped from having too many customer concerns here in Ontario. Like there's some times whenever the problems happen that you can kind of avoid those with strong regulation. But then the 99 other times, whenever I see, you know, Robinhood have free trading and SoFi offering huge percentages in their savings accounts and like just massive amounts of benefits in consumer finance across the board and business, especially in the business account side, because big banks just rule that in Canada. I look to America and I'm extremely envious because you guys have allowed banks and allowed businesses to take on more risk. And Keith, you don't have to agree with me. Go somewhere else. Like this is completely my opinion. I'm not even talking from a fact-based perspective. I'm just saying I don't think I'm a trader for investing in American companies. I'm just betting on the I'm just betting on the areas that I believe are going to lead me to a better return. And there's the part that's non-negotiable is the Canadian stock market has not returned great gains. Like just from an earnings standpoint, it's actually been like one of the worst stock markets. The returns per year, I think, are closer to like 8%, not closer to 11, 12% as of recently what the S&P has been putting up. Okay. Amit and Neil will be here in the next minute or so. We have IREN earnings tonight. We have Marvell. We have Rubrik. We have Affirm, Sentinel-1, Workday, Alta, so many of these different names. If we're ready to go, I think we have some guests in the background. Ladies and gentlemen, please, let me search my background here. Welcome the great and powerful Amit Kukreja.
What's up, man? How are you?
Doing very well.
This is a fun day. Biggest market cap increase in Nvidia's history.
It's a big one. It's crazy the shift in my mood whenever we were dropping. We were like going down to like 203. At 230, I'm walking with such a strut in my steps. My chest is puffed out. I feel like a different man. Same earnings.
Yeah. Well, I mean, going to 205 yesterday was kind of ridiculous. I think it's just doing what people thought. It's still below where it was last week, but it makes sense, right? It actually makes sense. And so I know it's selling off a little bit right here into the close, but I mean, it's nice, bro. $480 billion of market cap added in a single day. That's bigger than Microsoft a couple weeks ago, bigger than April 2025. And looks like the street's actually giving it the love that it deserves.
You're quiet at times. I don't know if this is the mic doing its thing, but came in quiet a little bit there.
Okay, that should not be the mic. Should be better. Let me know if it still caused that issue.
Okay.
Okay, cool. So we've got IREN, we've got Marvell. I think those are the big ones. Is it decided? IREN is what people want to listen to?
IREN, clear winner. Clear winner. So I did the poll. It was like, I think 60% IREN, another like 30% Marvell, and like 10% was Rubrik.
Rubrik, you have Rubrik in your draft. It'll be a big one to see that one with software as well.
It has moved a bit. The draft is getting kind of crazy, man. The Steve's coming in with really, really hot picks. Honestly, I'm worried about you as well. You've got a lot of names that if the outlook for Nvidia is true and they believe 70+% growth, I'm pretty sure AMD is going to do quite well. SanDisk, Bloom Energy, Google, a lot of those names, like they're likely to all do very well.
Yeah, I think you're running away with it right now because you've got a decent chunk of software exposure, which is doing really well. I don't know if the names that me and Jason and Chris picked are actually going to reach the levels they picked when we actually did the draft, which is why we're in bottom place right now. But it is what it is, right? Like NVIDIA is going to have to really execute on their growth, and then Bloom, SanDisk, Google, all of those guys are going to have to follow. But the obvious opportunity this year outside of the semis over the past couple months was software. And thankfully, a lot of us actually bought a lot of those software names in our real portfolio. Zeta hitting 30 today, Shopify 155, Palantir finally green year to date. I mean, just a massive, massive move for software today. Ironically, the software Salesforce, the software move is happening on the day of the best semiconductor company's earnings, which is kind of
wild.
Right.
Okta, I think, is up almost 30% is what they might close out here today. Salesforce up 23%. Is that one of the hottest days that we've seen on Salesforce in like the last 10 years?
Yeah. Well, best since 2020.
Oh, wow. Okay. Yeah.
No.
I didn't see why Smartbird was up. I don't know if you saw anything on that.
The freaking AI company?
Yeah, just in the middle of the day, it just shot up. They're up 16%. I don't know if this is some Wall Street Bets thing.
Yeah, I see zero headlines on this, but it has to be something. So we have IREN, Marvell. I'll put a poll right now in my chat of what people think outperforms. I think for IREN, the obvious question is, can they get a deal? For Marvell, I think, Jensen said they're going to be a $1 trillion company. Google bought 7% of the company. The optics space is obviously very important. So I think they will need to execute. The problem is they're reporting on a day where software is having the most motion. So I think Rubrik might have a good chance of leaning into that motion, although it is up a lot going into the print. Do you have any thoughts on Affirm? I know you follow that company from a fintech perspective.
Yeah, I mean, I've not kept up with Affirm in a while. Klarna, I think, got destroyed recently. They said weak consumers, but some of that was European customers as well. I don't know where Affirm's going to come in at, but they definitely have separated themselves from a lot of the other BNPL names. I don't know. If I had to take a bet, they're likely to beat their numbers just because Affirm is, I think they have a lot of execution credit. They seem to be doing much better than their other competitors. But the comments from Walmart and the comments from Klarna has obviously got to give some concern to the name. If you want to put up your list as well.
Yeah. Let me just share this real quick. I think you might have talked about this already, but for those that are just joining, you did have Trump obviously try to pump Micron here. I mean, this news is 4 days old. So the fact that he's posting about it today means that, he's trying to give it a little bit of a nudge right here. I am surprised so much of the semiconductor supply chain is taking a hit today, or at least not making a move. It's just weird. I have tried to come up with some theories for why it shouldn't be that weird, but do you have any perspectives on why the memory names are getting hit after what Jensen said? It's almost like the street's not believing him, or is it just software is running so much something needs to go down and that ends up being memory?
No, I mean, I looked to that comment that he made during the call, and he said something along the lines of, I have to be honest, this memory constraint is lasting longer and was much larger than we initially anticipated. That, if you remember back to some of the interviews with Jensen, he said every bottleneck, doesn't last more than 3 years. And now he's saying with this memory bottleneck, actually, this one might be a little bit different, and the stock is down. So I have a position in Micron. I took out my cost base a while ago, which was like roughly 30% of my position. I'm thinking about putting it back in. Just potentially, not doubling down on my position, but just potentially adding to it while we're still under 1,000. If we end up growing by 70% next year, like Nvidia says, I just don't think that there's a possibility that many of the different components, photonics, memory, and all these names are going to stay extremely depressed. Not that they haven't already gone up, but their earnings have justified that. So I don't know.
I agree. It is a bit weird here. DRAM is not at my entry price yet. I was kind of hoping for it to be like in the low 50s to buy again. But I mean, if they actually take it there based on some of this price action, I would be a buyer as well. I don't think I would be too afraid to take a shot at it if it gets down to that multiple compression. Zeta right there, 30.28, massive day. Congrats to those in data. Zeta, that's up 7%. Nebby is still green on the day, which is nice given that it was red in the morning. Palo Alto Networks, the cybersecurity stuff is a little crazy to me how much these guys are up. I mean, Palo Alto Networks is now trading at almost 300 times earnings.
Yeah,
I get it. It's important. I don't know if it's that important for that multiple, but I think there will be an opportunity to get those names at a cheaper price. But, to be honest, a lot of the semi names had crazy multiples and the software names have been dead all year. So the fact that a software cybersecurity name is getting a good multiple, why not?
Well, what about some of the commentary that the CEO ended up talking about the neoclouds?
I don't think he's talking about CoreWeave, Nebis, and I think he's talking about these companies in the private markets that are raising at $2-3 billion valuations just to supply compute, like Allbirds, for example, which is effectively neocloud. I think he's saying that's not going to exist when we have actual supply-demand imbalance back in check.
Yeah, he did say latest rounds or something like this, like indicating he's talking about private companies.
Yeah. But I mean, he is right. A lot of these smaller neoclouds, they're not going to be able to be competitive with the bigger ones that are out there. Elon just tweeted, I expect SpaceX revenue, did you see this? To be 3.5 trillion at around or during 2033, by 2033.
Sorry, could you say that one more time? What? How many trillions?
Why did he just randomly tweet 3.5 trillion by 2033 SpaceX revenue is what he just posted.
1 times 6-year forward sales or less than.
Okay, someone tweeted a Morgan Stanley estimate and then he commented. Okay.
I mean, yeah. His long-term price or guidances have not always been on time.
3.5 trillion. Nvidia's going to do how much this year? It's like 450 or something?
Yeah, 410.
410, okay. So Elon's saying in the next 7 years, and Elon this year they're going to do 50. So it's going from 50 to 3.5 trillion.
But what will Nvidia do if that ends up being the case?
Oh, that's the question, right? That is the question. BTC 80,000. That's been holding it as well, which is nice to see. That Bitcoin has been. Where did the chart go? Yeah, it just like disappeared.
Yeah, crypto's moving. It was like a little bit of an all asset rally earlier today. I was feeling a little bit good. Nvidia might close up 9%.
Dude, today's been a good day. Today's been pretty much everything. Even some of the semiconductor names that are kind of flattish, they're still a little green. Like,
it's literally what I texted you. I was like, nah, I'm excited for it to be up 9% rather than 2% because it's been down all week. And we might end up closing up 9.
We might, and this would be when it was at 229.50. It was the best day in history for Nvidia. I still think it's pretty much the best day. Let me just do the math real quick. Even if it closes right here, it would be up. Yeah, it would be the best day. 442 billion in market cap added.
What's the last record?
440.
440.
Meta 571. Micron getting a nice candle right into the close at 933. Let's see if that can actually go green. Again, Marvell and IREN, I think, is what most people care about today. We got a bunch of other earnings. IREN's at 5 p.m. We'll be listening to them. I really don't care which one we listen to. I'm okay with either or, but I think a decent chunk of you want IREN. So we can listen to that. We have Workday in the software space, SentinelOne, cybersecurity, Rubrik, software, Affirm, FinTech, Ulta with makeup. The other makeup names have done really well. And then IREN and Marvell, I think, I think IREN's also at 420, so there might be a little bit of a delay. Marvell, we should get pretty soon.
I think we just play it by ear. If IREN's down 2% and Marvell's up 13%, or vice versa, we just choose whichever one is has the best report that might end up saying something fun during the call.
I'm totally fine with that. Totally fine with that. Netflix. So did anyone? There's a bunch of people streaming the GTA 6 like first look right now. Rockstar Games even tweeted that you're allowed to stream it with their permission, or without their permission if you add commentary. Take-Two right there has been kind of stuck all day. Got a little bit of a bounce right 5 minutes ago. Now it's kind of right back down from 237 to 233. But who knows? Maybe that's kind of the next name that could take off, even from a meme perspective. People just bid it up to bid it up. But if there's real good earnings growth from GTA 6, maybe that's part of the reason they can get a bid. Palantir 186, nice 5% day. Broadcom back to 370. I didn't even see Broadcom all day. That's been a sleeper. Been making a nice little move. Robinhood up 1%. I mean, overall, I think it's been one of the best days in 2026 for the overall market, getting some momentum across the board.
Yeah. Do you think that Nvidia deserves to be up a Palantir overnight?
After those earnings? Yeah. Yeah.
It's just pretty 100%. Crazy to see at this scale, though. It's like just wild.
I did not say vice versa. I said vice versa. I did not say vice reversa. Tanner, can you say the word strength?
Strength.
Okay. Anyway.
To be fair, I said vice versa, but I did it on purpose because I love getting your chat fired up.
Oh, I was like, there's no way I said that. I was like, but yeah, you say the G in strength, so congratulations. You say it like the rest of the world wants you to say it. Yeah, no, Nvidia deserves to be up this market cap. I mean, these are unbelievable times we are living in. Unbelievable numbers we are seeing. A growth trajectory of 70% when the street thought it would be 40. Like, that alone should have this thing up even more than it is today. And, Tanner's been preaching the thesis. Tanner's the reason I got even into Nvidia last year at around 120, 130. So you've been dead on. And it's just a question of if the street's really going to take it to that 250 level by end of year. But it seems like it's possible.
Yeah. There's the upgrades from Wall Street, though, are quite intense. I don't know where you fall on that in terms of the price action for next year. I think a lot of people think that the valuation should be much higher than where it is, but they just have a problem with it being a certain percentage of the overall S&P 500. That seems to be the barrier. A barrier that I don't know if I've ever even contemplated in the history of investing. In my last year, or 10 years, I don't think I've ever thought, hey, well, this company would make up too much of the S&P 500.
Right.
But
well, I mean, it is a problem.
A lot of analysts say $300, $350, $400 is where it should be 12 months from now.
I mean, look, I agree with them, but the analysts can say whatever they want. At the end of the day, the market's got to be ready for Nvidia to be that big, and it's probably not ready yet, especially with all the fears of inflation, Iran war, rate hikes. But I think eventually we're going to get there. Rocket Lab getting a nice little pump going into the print, 2%. We got 20 seconds until the market closes. We're going to get the results. For most of these companies, I think IREN, there's about a 20-minute delay. But once we get the results, we will give them to everybody. Thank you all for being here. It's been a relatively strong day across the board. One of those days where it reminds you why you invest in the first place. And happy that everyone is here with us as we end out the day. Thursday, August 27th, 4 p.m. The stock market is now closed. All right, we are done for the day. I don't know where Neil is. Jose can't make it because he had something. Neil didn't give us an excuse for why he couldn't make it.
I just realized you don't say anything at the market close. You don't say like, close your laptop. You say wake your ass up during the day. There's not like a
close your laptop.
I don't know, bro. What do you do? All right, go back to sleep. The market is now closed.
If you have something good for me to say at market close, I'll say it. I just, in the morning, it's like, wake your ass up. And after the close, it's like, all right, we got to see what we get, Take a nap.
Yeah.
Close your positions. Close your
Time to go put on some Bohemian Rhapsody and relax for the rest of the day.
I was listening to it while I was walking to get a manicure and pedicure about an hour ago.
So I sent Amit a text and I said, hey man, I don't know if you've listened to Fleetwood Mac or not, but like, do you think that's a flex?
What do you mean? No, it's not a flex. It's just like, look, nails look nice. That's all it is. My feet feel great. Like, that's all it is. Anyway, Marvell 242.65, as that is up 0.5% after. Okay, we got Autodesk. We have Autodesk. Tanner, you can share the screen.
Sorry, brother.
Autodesk is down 1%, actually up 0.5%. EPS 330 versus 262, that's a beat. Net revenue 2.05 versus 2.01 billion, that's a beat. Operating margins 41 versus 39.3, that's a beat. Billings 1.85 versus 1.81 billion, that is a beat across the board. Stocks down 1.6, it was up 6% today. So this one might give a little bit of it back given the run it had. Workday, which almost got acquired a couple of weeks ago, that's down 1.2%. EPS 275 versus 261, that's a beat by 5%, up 24% year over year. Revenue up 12% year over year, as that is also a beat by about 3%. Actually, revenue is flat. It came in line. EPS is a beat by 5%. Revenue up 13 year over year. EPS up 24% year over year. Workday pumped a lot a couple of weeks ago, so it might be priced in, but that stock's now down 2%.
I don't have a firm's numbers yet, but they're up 1.7% in the after hours so far. Kind of ran into the close a little bit, but no numbers as of yet.
Yeah, don't have Marvell either. My chat on the poll, we are looking at 49% of you say Marvell, 40% say IREN, and then 4% say Affirm, 8% say Rubrik. Don't have any of those numbers either yet.
This is for pump?
Yeah.
Pump or dump?
Yeah. Well, like which one would outperform? So 49% say Marvell, 40% say IREN. IREN, we don't have it yet. That's up 1. Marvell's up 1. Don't have any of those. Workday's down 4. Autodesk down 6, giving back the entirety of the move today. Rubrik's not up yet, but that is down a little bit.
Marvell and IREN are like tied right now. It's kind of funny seeing the pre-numbers reaction.
Do you have a take on which of those two could do better?
I mean, the neoclouds have done extremely well after earnings. Even the the stock reaction, let alone the pure numbers. Both CoreWeave and Nebius put up extremely good reports, whether that was better depreciation schedules, Ampere's going out 9 years, longer customer relationships, or short-term deals being extremely well priced. So I have a good feeling about IREN. That being said, we're not really expecting things to pop off this quarter. It's sort of next quarter where I think the revenue is about to inflect.
I think that's fair. I think that's very fair. I think if they announce a big deal, it could run even further, but yeah, probably will take that kind of extra evolution of contracted power capacity. I just think because the other neoclouds have moved so much, they've got to give us something here for people to be excited.
Yeah.
I mean, last time they ran to 70. They stayed there for a few minutes, but they did run to 70. So maybe there's something that could get it moving. We still don't have any of those numbers yet. Marvell, I think we got it. Marvell Street wanted 2.71. We came in at 2.74 billion. Stock is flat. EPS 33 cents. Adjusted EPS 94 cents versus 93. That's a beat. Stock's up 3 now. That's a quick flip from red to green. Revenue with 2.74 versus 2.71. Gross margins 53%. Net income 308 million. The guide is 3.1 versus 3.0 billion. So they beat on the guide. They beat on EPS. They beat on revenue. Not massive beats, but they are beats. And Marvell right there up 1.72%. Ulta is guiding up to $29 a share for the fiscal year EPS versus $28.80. So they're beating on the guide. Alf and Estee Ladar also had some really good earnings.
Rubrik's top and bottom line look great so far. I don't know if you have those numbers just yet. Stock's up 6.
I don't have Rubrik yet. I have Sentinel 1. That is down 10. That's a beat by 14% on EPS, 8 cents versus 7 cents expected. EPS is up 100% year over year. Revenue's up 21% year over year, 291 versus 290. That's a beat by 1%. So you have a beat on the top and the bottom on Sentinel 1. It pumped today with the cybersecurity names. It's now down after hours. Rubrik, wow. They beat by 400% on EPS. 20 cents versus 4 cents expected. Oh my gosh. That's up 12%. Revenue 427 versus 387. That's a beat by 10%. EPS is up 767% year over year. Revenue's up 40% year over year. Gross margin 78%. Wow. I mean, that's a big one from Rubrik. The stock got to $40 in the SaaS apocalypse. I mean, a lot of these names just, you know, they're not being vibe coded away. I think that's the story here.
Sentinel won the complete opposite. This is why I am not a fan of buying the second names or the catch-up trades or something like this. There is real execution differences between CrowdStrike and Sentinel One. They service similar customers, but even as CrowdStrike had all the outages and the whole Uber Eats, coupons and everything, that whole fiasco, that was Sentinel One's opportunity to take over, and they didn't even budge. They weren't able to get sales teams out there, offer, I don't know what the problem was, but Sentinel One, they're just not selling the same. And this is the problem with buying catch-up trades.
No, I think that's fair. There's a whole bucket of cybersecurity names. The two that are really winning are CrowdStrike and Palo Alto. And, you have to be really confident that the catch-up trades, there's space for them for the market to care, So that is a fair point. Ulta beat by 6% on EPS, 655 versus 619. They beat by 2% on revenue. Revenue is up 9% year over year. EPS is up 13. We don't have IREN yet. Ulta, these makeup names, dude, crushing it.
Mm-hmm.
It seems like that part of the consumer is not struggling when it comes to buying makeup.
Yeah.
Ulta right there, still green.
Lulu's doing poorly. The makeup names are doing well.
Yeah, I think Lulu has earnings next week as well. Marvell's down 1. Trying to get some deeper analysis on Marvell right here. Not sure what the street isn't happy about. Let's try to pull up their website. Marvell did beat. It's a very small beat, though. It's not really a massive print. CEO, Marvell delivered record second quarter fiscal 2027 revenue, up 37% year over year. AI-related bookings remain exceptionally robust as we expect our revenue growth to accelerate further through the remainder of this year. Given the strength, we are again raising our revenue outlook. We are seeing broad-based strength across our data center portfolio, including strong demand in connectivity and a significant acceleration in our custom business beginning in the second half of fiscal year 2027. We look forward to showcasing these drivers in our event next month. Yeah, the numbers look great. They're just not massive beats. The stock also did run from 206 to 250 recently.
These rubric numbers are fantastic. They said they raised their outlook. Growth came in at 38% year over year. ARR came up 33%. Like you talked about, adjusted EPS more than 5x'd the Wall Street expectations, but that guidance came in higher than expected. Free cash flow on that guidance came in higher than expected for full year and next quarter. It just looks like a slam dunk across the board. CEO said we are in the early innings of the AI acceleration opportunity.
Yeah, and Rubrik is identity-based security, right? No, I'm getting that mixed with Okta.
Well, there's definitely some identity stuff, but I think it's like data recovery.
Yes, they're in the cyberspace, but they're not like endpoint security. Data protection, backup, cyber recovery. Well, this is if this is tangential to Mythos and they have good numbers, I mean, it makes, and this thing fell 50%. Yeah, you've got a nice name right here that's getting moved. IREN, I think we got it. Stocks down 1. Revenue they beat by $2 million, 137. Stop laughing. 137.
Well, I got the numbers too. It's just dashes.
Adjusted EBITDA, they're guiding for $245 million. Where's the EPS? It's not even.
Yeah, like how do I read this?
They were expected to lose 61 cents. This happened last time, bro. Last time, their EPS is calculated in a weird way. So we were like waiting for like 30 minutes to get the actual EPS. Bitcoin mining revenue, 578 million. No one cares about that. Until I hear about a deal, none of this stuff matters, to be honest.
Yeah.
And I don't see anything about a deal yet.
I'll bring up the IR page, see if something comes up.
Yeah, I see nothing there either. Affirm and Shopify launched Shop Pay installments in Australia. Okay, so you got some BNPL coming to Australia there.
Yeah, they have a huge relationship together. Affirm and Shopify.
Rubrik down 3% now. Obviously, this name had a big day, so giving back some of the gains after hours is not that crazy, but it's down 3%. Nebius and Micron down after hours. Wow, everything's kind of getting hit out. Even Ulta losing all of it. Marvell down 3%. Workday down 4%. Autodesk down 5%. Nvidia's down a little bit.
Yeah, Rubrik's down 5%.
Yeah, that I don't know why, but they were up a lot in the day, so I could understand them going down.
Yeah, it was I think it closed at an all-time high.
Yeah. IREN, okay. IREN signs new multi-year AI cloud contract with leading frontier AI lab. I don't know if that's a new headline or they're talking about 2026 capacity is sold out. IREN says $4 billion of ARR contracted for 2026 capacity, $1 billion of ARR operating today. IREN new multi-year contract with leading frontier AI lab. What the hell does that mean? Like, what's the lab?
It's probably Anthropic. But they had a deal with Anthropic, right?
But also, why wouldn't you say that? Like, why are they being secretive about leading frontier AI? Like, am I crazy for asking for the name of the company they're signing a deal with? Because if I am, I won't say anything. But like, what is going on?
Yeah, it must mean it's not as might not be as frontier as possible, you know?
Like, genuinely, am I crazy for saying we need to know the name of the company that you're getting a $4 billion deal? Like, is that insane? Is that asking for too much? Because if it was Anthropic, I feel like they would want to say it, or OpenAI. It's up 1%. We still don't have EPS numbers. Yeah, I'm still not getting any deeper coverage here, guys. Nothing's on the website either.
It was a little while, though, last time, right? I think it was like 440 that we ended up getting the real results.
That's true. They probably have an NDA. I mean, if that's what we want to go with as the reason, okay. I just don't get why Nebius and CoreWeave don't have all these NDAs either. You know, like this, at some point, the CEOs are getting a ton of shares with zero performance attached to it. Like, they need to show something that gets shareholders to be excited, not some mysterious company they signed a deal with. Like, not even trying to pick on them. I'm just like, I feel like it's not crazy to ask for this. I ran up 1.3%.
Wow, dude. Rubric from 121 to now under $100.
Why though? Like, you know, I was talking about in the morning, software is not really where the risk reward is anymore. So it's fun to, you know, see it go green and think everything's okay. But Rubric was $40, right? So it's made its move. And now the risk is that it was $42 in April. So the risk is a lot higher than the reward here. You know, any little thing that either goes wrong or the street doesn't like, 120 might just not be easy to justify. Meta, that's down after hours a little bit. Nvidia's down after hours. We have Gap earnings. They beat by 8% on EPS, 52 cents versus 48 cents expected. Gap is down 2. Revenue, they missed by 1%, 3.65 versus 3.6 billion, 3.69 expected. Revenue down 2% year over year. EPS is up 20% year over year. As Bitcoin loses 80 slightly. There is a short float on IREN of 30%. That is fair. So the shorts have been in this name. Let's get some more coverage on Marvell right here. And then we'll keep going.
Of 274, so slightly higher than the street. Same for Q2 non-GAAP gross margins. Data center revenue also slightly ahead at $2.17 billion. Management says AI-related bookings remain, quote, exceptionally robust, and they expect their revenue growth to accelerate further through the remainder of fiscal 2027. And so given that strength, the management said they are again raising their revenue outlook for both fiscal 2027, fiscal 2028, compared with the guide provided last quarter. So on that guide, Q3 EPS guide came in at $1.10. So it's 3 cents above the street. And for the midpoint for revenue at $3.15 billion, so also a little bit higher. It's the Q3 gross margins that came in a little light at the midpoint, and that could be why the stock is selling off. The company also teasing that their next big long-term strategies are actually going to be shared on October 6th, their investor day here in New York, as opposed to perhaps this earnings call that is upcoming. So maybe less of a catalyst than what the street had been hoping for this name. That's why shares are down about 2%.
All right, Christina, thank you.
Yeah, Marvell, it was just a little priced in. I mean, nothing's wrong in the numbers.
Yeah, I'm still not seeing anything on IREN. I am looking through Rubric's quarter. I don't know why. I don't know if the market's just turning sour a little bit right now, but everything across the board they beat, like margins, the top, the bottom line, free cash flow. Like, it looks like a slam dunk. And expectations were already pretty high. This came in higher than expectations, like even Whisper numbers. So,
what multiple do these guys? Are these like, is this stock really expensive? It trades at 15 times. They're not profitable. So there's no PE.
They're not full year profitable, but they are, they did put up EPS.
Yeah, I don't know enough about the valuation other than the stock is up double in 2 months. So any small thing the street's upset with probably could be a reason why it's down. Numbers look great though, as you said.
Yeah. Yeah, they are at a new all-time high, but back in June of 2025, this company got pretty expensive, roughly almost like 6 quarters ago or so. So there has been a lot of growth since the last time that they've grown, but they sunk from essentially what was 103 or 104 at their last high, all the way down to $42 per share. That was the opportunity to buy in. They gave us a huge opportunity to buy.
IREN, so cloud revenue is now 70 million versus 33 last year. Revenue 137 versus 135. They lost $684 million. 450 of that was non-cash impairments. They lost 61 cents a share versus negative 55, so they did miss on EPS. 2026 capacity sold out. They're saying they signed a new multi-year AI cloud contract signed with a leading frontier AI lab. 4 billion contracted ARR for 2026 capacity. What does that mean? 1 billion operating ARR today.
Well, it means that the last month they can run for a full year if they end up getting those deals again, assuming that they're long term, that they'll make over $1 billion of profit on the active power that they already have.
So they have the capacity to do 4 billion in ARR, and they're kind of saying they will do 1 billion in ARR.
Yeah, but we're not doing $1 billion right now because the contract needs to go through. They're saying like last month times 12.
Okay. Then they said new 2.8 billion GPU financing funds 90% of associated GPU capex.
How is Gap up 6%? That can't be right.
No,
everything's selling off, and the one thing that missed revenue is up. Up is down, and down is up.
Yeah. No, that's fair. Gap's up 11. It's looking like the market's kind of going to safety and discretionary versus tech after hours, given how good of a day tech had.
Rubrik's down over 10%. It erased all the day gains.
Yeah, I have no idea. I don't know this company that well, but that is a little ugly. 22 billion market cap, down 11% after hours. IREN's up 0.84. I just really don't understand how they can say we have a contract with a leading frontier AI lab. They're not even telling you the amount of money that contract is worth. New multi-year AI cloud contract signed. How, like,
yeah.
Like, am I going crazy, bro? Or is this like, this feels like a fucking scam? Like, I'm sorry. Like, what is going on here?
No, it's true though. IREN doesn't feel like the other neoclouds. Like they're not posting the growth. They keep pushing it off into the future quarters. I'm pretty sure next quarter is supposed to be quite an inflection point, but they are definitely different. Their board does not look good. What's Mike Alfred doing on their board? You know,
I'm not going to comment about that, but yeah, that is a little concerning to say the least. I mean, it is a bit weird, some of the public affiliates with this company.
Yeah, like what's a neocloud doing on sports jerseys?
And I didn't even hate that much because Golden State Warriors, tech, like I kind of get the synergy, but no one pays 50 million for that, bro. I've talked to some of these people that have bought sport jersey brands. 50 million is a very excessive multiple. Like those really go for like 10 to 15 million. So for them to pay that much, I would imagine either they're using that 6 billion ATM to just take shareholder capital and dump it into this shit, or they're really confident that they have a lot of deal flow, but we're not seeing the deals. And then the CEO gets millions of shares for doing nothing. Like literally he has to do nothing and he will get compensated for it. And I get it. He built the company, all that stuff, yada, yada, but it's, you know, it was a Bitcoin miner that transitioned. And so I don't really see where the value has accrued yet to shareholders unless they bought it at $3 when it was a Bitcoin miner.
Yeah, yeah.
IREN CEO's quote, "We started IREN with a simple observation. The digital world can scale almost instantly, but the physical world cannot. This year, that founding thesis became tangible. Exponential AI consumption growth has fueled demand for compute capacity well beyond the available supply of infrastructure. IREN was built for this moment."
I do genuinely think that the supply constraints are so large that you don't even need to be an excellent executor right now. Like all companies will win. And that's why I still think that IREN might not even be priced too expensively. They haven't really moved the way that other neoclouds have moved in recent moments. So,
no, the stock is cheap. The stock is cheap. It's part of why I have a small position. Like it's cheap. No one's arguing the valuation's excessive. It's about, at this point, if we are this compute constrained, why are they not signing massive, massive contracts or at least forget signing put out an LOI that like you're going to sign this contract.
Yeah.
Even if it's not signed, like that in and of itself will get the stock to pump. If you say, hey, Amazon's ready to sign, we're just, $15 billion deal, we're negotiating, but like they're very interested. Like, I don't get it. I do not get it.
ClusterMax has your answer. I mean, that's true too. They rank very poorly amongst the other neoclouds.
Yeah, I don't get this. IREN CEO, we have spent years assembling what is difficult to replicate: power, land, data centers, compute, software, and people. This is only the beginning. We are continuing to contract future capacity with a deliberate strategy, building a diversified base of counterparties and preserving room for higher value managed services and software. Site optimization is also increasing the revenue potential for every megawatt. I mean, look, if the story is they need another year because they're building out the infrastructure, the terms, the vendors, distributors to really monetize effectively in 2027, then that's not a horrible story. It's just confusing given it's been the same story for about a year now with no meaningful change.
Yeah. You still want to listen to IREN?
I am indifferent. I think we should do a poll, whatever people want to listen to.
I still think I want to listen to, I mean, obviously, let's do a poll. I still want to listen to it because it's part of the space that I'm still heavily invested in. But, I mean, I would not be a slouch on looking at Rubrik, but I'll listen to that on my own time. You can't ignore companies that consistently beat like every metric across the board. That's like, Palantir did that for too long without me buying in, even at an expensive valuation. Rubrik has made a name for itself doing that. Probably the last 6 to 8 of the last quarters that we've seen have just been constantly way, way bigger than expectations. Those are the companies that compound.
No, I agree. I mean, I think the majority of people still want to listen to IREN. So, and okay. Marvell's also down as well. It's not like Marvell's up 10% here. Rubrik down 10. IREN basically flat. Let's just listen to Nvidia again.
Rerun.
No, but guys, am I being too harsh? Like, I genuinely want to know, because I'm not here to pick on companies or bully on them. I'm trying to be as objective as possible.
Yeah.
And like, I don't know. I think it's fair to kind of question some of these things. But then again, I'm also not the biggest IREN bull. I don't know everything about this company. It's just a simple thesis on, hey, when CoreWeave and Nebius are growing like this, can this also be similar for another major neocloud?
Okay. Yeah, we're going to do IREN, guys. I think that's decided, right?
I think that's decided, but also everyone, this has such a big retail following, which is why I once again am asking the question. Please tell me if not telling us the number associated with the deal or the name of the Frontier Lab associated with the deal is asking for too much. Like, I just want to know, is that like, as a retail investor, the people who are here are retail investors, is it too much to ask for those two things? How much money are you getting on a deal? And who is the deal with? Because if that's too much, then I will not ask for those important pieces of information again. Is that FUD? If that's FUD, let me know. SanDisk is down 0.5%. CoreWeave down a little bit. Build-A-Bear, by the way, I didn't know Michael Burry was long Build-A-Bear, but he was. Apparently, he was long Build-A-Bear, and he bought more today. So he's short Nvidia in the greatest revolution we have seen in humanity for technology, and he is long Build-A-Bear, and he bought more today on the 30% dip.
Hey, I mean, maybe there's money in it. There's value.
Maybe.
It's a high value pick.
I couldn't believe it, bro. It's like he's long. I didn't know he was long Build-A-Bear. Like, you're short a company at $5 trillion growing 100% with 75% margins, and you're long stuffed animals. I I didn't get it. I did not get it.
Yeah, I don't know. You know what? It's one of those things that happens right before bears are just extremely wrong, as they start turning their arguments away from this won't work to this is just pure fraud. And you've seen it from Ed Zitron, from Michael Burry, that they are now conceding that the numbers are just not real. It's like the last frontier, the last hill to die on. And if it was one company, this is what I've always said. If it was one company, fraud could be a possibility. Whenever it's every single business, fraud starts to be less and less likely. That Sundar and Jensen and the entire list, Andy Jassy, and the list goes on and on and on. All of them are putting their reputations on the line and lying on their earnings calls.
Yeah, I have the IREN press release. I'm going to pull it up right now. But I was listening to a little bit of this new Zitron interview. He said the only thing AI is good for is tech support. And the interviewer was like, you really think there's nothing else? He was like, literally the only thing it's good for is like when I need to figure out how to connect two screens together so that I can screen share. And I'm like, okay, this guy's just trolling. Like, I get it. He's just trolling.
He's not wrong. It will be good at tech support.
It is pretty good at tech support, but there's also some other stuff that he's just like, no, everything else is nothing there.
Oh, wait, hold on a second. We are getting joined by a very special guest. Ladies and gentlemen, please welcome the great and powerful couch investor.
Thank
Neil,
you very
fashionably late.
Fashionably late. I will tell you later why I was late. It was worth it.
All right.
So what's happening here? Stocks moving up, down, left, right?
Okay, so Neil, you have not heard anything about IREN yet, have you?
No, I only checked the stock to see if maybe there is a delayed release or not. Stock is flat right now, so do we have something?
So let him tell you.
Let me read you the details, and I want you to just give me your raw reaction to it, okay?
Okay.
So missed on revenue, or beat revenue by 2 million, missed on EPS, but the revenue EPS stuff doesn't really matter that much for them. These are the 4 highlights. New multi-year AI cloud contract signed with a leading frontier AI lab. 4 billion contracted ARR for 2026 capacity, 1 billion operating ARR today. 2026 capacity sold out, and they have 90% of their funding for GPU CapEx with $2.8 billion. IREN CEO says, this is our moment. We were built for this. We have spent years assembling what is difficult to replicate. And this year, the founding thesis became tangible. That's it. That's the earnings.
Okay. Thank you very much. See you all tomorrow.
So my question is it crazy to say they're not telling us the name of this frontier lab or the amount of money they're getting from this deal? Is it crazy to say we kind of need those 2 details if that's the only real tangible piece of news we're going to get on this earnings?
Yeah, I was just about to say, do we think they're going to say something during the call? But there's no way they say it in the call and they don't say it in the press release.
Did they say how long the deal is?
It's a multi-year deal.
We don't know the duration. We don't know the size. We don't know who with. All right.
What's considered? Did they say it's frontier? Yeah, leading frontier AI lab. Yeah, I don't know. Like if it's OpenAI or Anthropic, you would name drop. You would name drop these things, especially now. So
yeah, but frontier is a weird word. Like, I mean, there is really 2 names in frontier, but then you catch people saying Grok's frontier, MetaMuse's frontier. Like, there's like frontier-esque names, and I have a feeling it might be one of those names. However, wasn't there conversation about Anthropic exploring data centers in Australia?
Yeah, but didn't they sign something with Sharon AI?
Sharon, yeah, but maybe they went with a couple.
Maybe, but clearly Sharon AI disclosed Anthropic, and here we get no one. It is, I don't know. The stock being flat is quite interesting.
Affirm right there. I'm not sure why they have such a big beat on EPS. That's got to be some unrecognized gain. Stock is flat, but they beat revenue by 5%. Signed a deal with Shopify to expand in Australia for BNPL. EPS is up 2,000% year over year.
I won't be surprised if that's some SpaceX early mark-to-market gains. Honestly, the amount of companies that beat earnings this year, like EPS was adjusted because of SpaceX returns, was incredible. And Max Levchin, not many people know this, the founder of Affirm, was the original PayPal founder.
Yeah.
He was a part of PayPal before Elon was a part of PayPal. So maybe they, who knows? I'm speculating before I know the answer. I'm going to go read it.
1.4 billion income tax expense. Okay, so taxes are why EPS was this big of a beat.
Like a rebate, you mean?
Yeah. Essentially. Gap is up 12. Rubrik's still down. Marvell's down. IREN's basically flat. Workday's down 6. Workday had a good earnings too. I just think this one also pumped a little bit too hard a couple weeks ago with the Silver Lake buyout.
Oh, wait. About Rubrik? Already reported?
Yeah.
It was an absolute slam dunk and they're down.
Okay. So price to perfection up too much makes sense.
Yeah. Okay. They did run to 121 and now those people are wondering what they just did to themselves.
Chris says recent 3-year agreements generate more than 20 million revenue per IT megawatt with active negotiations around 25 million. IREN estimates approximately a 2-year payback on recent deployments.
25 million per megawatt is extremely, extremely good pricing. That's what they're saying.
2-year payback is also pretty decent too, right?
Oh yeah. It would be a 2-year payback on 25 million.
Yeah.
Each gigawatt, roughly 50 billion. So if you're doing 25 million per megawatt, times that by 1,000, you're at 25 billion a year. 2-year
Could
payback.
Potentially improve as well as pricing goes up. So.
Yeah.
Interesting. Only one Nvidia call out, and that's just the exemplar cloud status.
Which is also really good.
Yeah, but it's not something new. I think I've seen many people speculate that they would have announced maybe an extra deal with Nvidia or extra, like a lot of expectations, and I think they just delivered an okay quarter, but clearly not something that would push the stock up 20-30% like we've seen with the CoreWeave or an Nebius.
Yeah, I just think we were covering a lot of like the bearish things that we saw in the quarter and the cloud exemplar status that we saw. I don't know. You're right. It was like 2 months ago or 3 months ago or something. It still is a really good sign. Especially considering the cluster max rankings. Those are the types of things that would really, really help, dismiss a bear case.
Yeah, and I mean, look, none of us here are short IREN. So someone's like, you guys just hate IREN. I mean, asking questions is what retail investors have to do. And if we don't have transparency, all you can do is ask those questions.
And we don't hate IREN. We love this sector. But when we look at Nebius and CoreWeave and then we see IREN, there is clearly a huge difference in quality between these three companies. So whenever I see the Mike Alfreds of the bunch tweeting out ridiculous things on X about this company, which I still cannot believe that this guy has not been let go by the company.
Someone actually called him out on it yesterday, and he deleted his post because they said
the Van Eck guy.
Yeah, he's saying he's engaging in conflicts of interest. Like, it's just a weird. I don't know anything about the guy, but it's just a weird look publicly, and it's always going to get people wondering what's going on with management.
Amit said, "I won't comment on it, but it is concerning." Which is
no, I'm not commenting on the guy's character or who he is. I don't know anything about him, but it is concerning when a board member is posting things and then deleting things, and there's conflicts of interest being thrown. Like, same thing with Open Door. I think Open Door is a bunch of garbage because their board directors are challenging anonymous Twitter accounts $100,000 bets on if the market cap of the company they're on the board of is going to be bigger than Shopify in a year, which, by the way, he lost the bet. And I hope that guy sends $100,000 to the person he bet against. But like, if you're the Open Door CEO, you're going to let a board director make a bet with an anonymous Twitter account about the market cap of your company. Like, it is unbelievable that some of this stuff happens. And what did Open Door stock do? Nothing over the past year. And I think that's part of the reason why, right? Like, if there's not good execution and there's really weird behavior by management, that stuff matters.
Funny enough, it is till this day my fastest 10x investment ever. This Open Door thing. Although I only put 1,000, but a win is a win.
Yeah, I mean, look, people who bought it at 50 cents and ran it up to 10 is amazing because someone online said it would go to 82. But the hype died down really quick, and as much as board directors tried to get the hype to come back, it's not there. So, and it's because Open Door hasn't executed. So I think with IREN, it's more so about trying to see, are they executing? And if they're not, it kind of reflects why the stock has been stagnated.
Gap up 11% on a miss.
Did Marvell already report? Or
Yep.
Oh, okay.
It was good. It was just not a big beat on the top or bottom. So
yeah, I mean, this is no Wednesday night earnings day. Seeing Salesforce, almost every single company was either up or down double digits, or, you know, in Nvidia's case, they didn't go up or down 10%, but they were fluctuating by hundreds of billions of dollars. You know, smaller names, not as drastic beats. I guess rubric is definitely priced to perfection, but I definitely think that was the quarter this day. I mean, the stock reaction's pretty stark, but their numbers were actually like truly fantastic.
Yeah, but you know, it's they're down almost 11%, which means they're back to, let's check, yesterday's prices.
someone said, but it takes years for a thesis to play out. That is correct. And during those years, you need to see if the company is executing. None of this has to do with the stock. Like, if the stock was up 10%, I would still be saying, well, what is this frontier lab? Like how much money are you getting? Like, are people just buying it for the hell of it, but there's nothing, like, this has nothing to do with the stock price. This has everything to do with, okay, if a thesis is going to take many years, which is what it should take for most companies, then we need transparency in the process of those years having a thesis play out. You need to see the growth converge. And there are some really good signs, like the megawatt capacity and the pricing power that they're starting to generate, obviously the land capacity that they have, but the lack of deals here, I guess, is the question. Now, again, if you're super bullish IREN and you know they're going to get like $50 billion of deals in the coming years, then it doesn't matter. One quarter, who cares? But it's been a string of quarters now of, you know, not really getting much.
Calls at 5 o'clock, right?
IREN, yeah.
The lab's name is Frontier.
It's the airline.
Yeah.
Chris says you should write a letter to the board. I don't care enough about the company to write a letter to the board. Like, you know, shout out to Erwin. He has a very heavy position in Rocket Lab. He has wrote letters to the company before when things weren't going the wrong way, because he has a very, very, you know, he's a dedicated shareholder. I'm just trying to analyze this. I don't know if it's enough to write a letter. I don't really care about what's happening at its core. But if enough people do, then, you know, there's going to be pushback, and eventually the board's going to have to pay attention to it. Then again, the board has a lot of freedom based on their comp structure to not really care about anything.
I mean, can I ask you a question? You don't have to answer it. I don't know if this, like, if you know anything about it, but have you been following, or do you know anything about Hark?
Yeah, Brett Adcock's new AI company.
What's going on there? Supposedly they announced a multi-year partnership with Nvidia, gigascale compute capacity on Vera Rubin platform.
I think a lot of companies announcing deals with Nvidia and not really showing anything for it are not anything special, to be honest.
So you're not you don't care about Hark?
I do not care about Hark. I've heard explanations of this competing with the frontier labs. I'm very skeptical that it will. And I really don't like companies signing partnerships with Nvidia for the hell of it, which is what I feel like a lot of companies have been doing recently. That's a private company that we're talking about, by the way.
Yes.
Yeah, I saw that announcement today and I was just like, what is this? Like, I just, like, it's hard to be a frontier lab. It's hard to make a model that people use. So when new players come into the space and they sign deals, but like, of course they're going to sign a deal with Nvidia. Nvidia is going to give them the GPUs, right? They're going to pay for the GPU. But like, does that mean there's anything useful there?
Yeah, why does he do it? Is the Figure guy, right?
That's correct.
Yeah, that was my question. It's just like two major startups at the same time.
And isn't Figure using, what is it using, OpenAI? Or?
They're not using OpenAI anymore. They cut off their OpenAI relationship. So I guess they're building hard to be able to use internally in Figure. Figure I'm bullish on because I think robots are very exciting. There's a big TAM, but I don't know if a new AI lab needs to be a separate company inside of a robotics company.
Unless you're Elon, but then again.
Yeah, and look at X, right? Like it's taken a lot. They had to freaking pay $60 billion to Cursor just to get people to really start to care about XAI. So it's not easy.
Yep. What's that other robotics company that got a lot of hype?
Apptronik?
No, X that OpenAI wanted to acquire. X1, 1X.
Oh, that's
Neo
what
robot.
SoftBank's looking to acquire.
Yeah. Okay. Yeah.
1X, I think.
Yeah, that was also everywhere when that first video came out. Like, oh, it's going to be amazing. You can even buy clothes for the robot, and yet here we are.
Yeah, SoftBank's looking to acquire them at a $6 billion valuation,
which is a down round from the 10 billion. I think the hype on robots is real, but it's way too early. It's not happening in the next 2 years.
I don't want to say this, Amit. I don't know what's happening in the background. I think you might have shares in it, but Figure's going to have a down round. That company got to such an egregious valuation so quick. Like, how did it even get to 40 billion so quickly? It's unbelievable.
Well, let me just say you are 100% wrong about that. I can confirm they will actually have a up round pretty soon, to be honest. Let me just say that.
I don't know how they got from, $2 billion valuation to 40 in a 3-month period.
I'm not justifying the valuation, but all I'm saying is it was a year, actually. It wasn't 3 months. It was a year. But they are definitely not raising a down round. I will say that. Okay, I'll pull up Marvell, guys, but in 15 minutes, we got to go to IREN. So we'll listen to it, but we'll leave in about 15 minutes.
Before I discuss our results and outlook, I want to briefly highlight 2 management transitions that occurred during our last quarter. First, Willem Meintjes stepped down as Marvell CFO in mid-June. I deeply appreciate Willem's steady hand, leadership, and tireless commitment to transforming Marvell over his decade with the company. And I greatly respect his desire to spend more time with his family. To ensure a seamless transition, we simultaneously welcome Dan Durn as our new CFO. Dan brings more than 3 decades of experience in senior finance roles across semiconductor and enterprise technology companies. And having most recently served on Marvell's board of directors, Dan comes into the role with a deep understanding of our business and strategy, as well as a unique appreciation for the significant growth opportunities at Marvell ahead. Second, in July, we began a transition in our investor relations leadership. After 8 years with Marvell, Ashish Saran will retire from the company in April 2027. I want to personally thank Ashish for his leadership, partnership, and countless contributions to Marvell. I also appreciate the thoughtfulness and care he has brought to planning this transition, including helping us identify the right successor. A transition in our investor relations leadership. After 8 years with Marvell, Ashish Saran will retire from the company in April 2027. I want to personally thank Ashish for his leadership, partnership, and countless contributions to Marvell. I also appreciate the thoughtfulness and care he has brought to planning this transition, including helping us identify the right successor. On that front, I'm very pleased to welcome Ross Seymour, who comes to us from Deutsche Bank, where he covered the semiconductor industry for more than 25 years. Warm welcome to you, Dan and Ross. Now let me move on to our results and outlook. For the second quarter of fiscal 2027, Marvell delivered record revenue of $2.739 billion, reflecting 13% sequential and 37% year-over-year growth. Revenue and non-GAAP earnings per share of 94 cents both exceeded the midpoint of guidance. On our last earnings call, we increased our sequential revenue growth expectation for the third and fourth quarters of this fiscal year to double-digit percentage growth, up from our prior outlook of high single-digit growth. Since then, our outlook has continued to strengthen, and we now expect revenue growth to further accelerate in the second half. The strength is reflected in our guidance for the third quarter of fiscal 2027, where we expect total company revenue of $3.15 billion at the midpoint, representing growth of 15% sequentially and more than 50% year-over-year. We expect growth to further accelerate in the fourth quarter, both sequentially and year-over-year. As a result, we now expect overall Marvell revenue in fiscal 2027 to grow approximately 45% year-over-year to roughly $12 billion, up from our prior outlook of approximately $11.5 billion just one quarter ago. The increase in our revenue outlook continues to be driven by our data center business, which we now expect to grow by approximately 60% this fiscal year, up from our prior expectation of approximately 50%. Importantly, this growth remains broad-based. Interconnect continues to lead the way, while our custom business is expected to ramp significantly in the second half. For our communications and other end markets, the trajectory remains largely as expected. Despite typical quarter-to-quarter lumpiness in these businesses, we currently expect fiscal 2027 growth to approach our 10% target. Looking ahead to fiscal 2028, aggregate demand continues to accelerate, and our operations team is doing an outstanding job securing additional supply despite pervasive industry-wide constraints. As a result, we now expect Marvell's data center revenue to grow more than 60% year-over-year in fiscal 2028, driven by strong growth across all of our key data center businesses. This includes custom more than doubling, as we indicated last quarter. We look forward to providing a deeper dive into the specific drivers of our longer-term growth at our Investor Day in New York City on October 6th. But the key takeaway for today is clear. The strength of our data center business continues to exceed our prior expectations. Putting it all together, we now expect fiscal 2028 revenue of approximately $18 billion, up $1.5 billion from the $16.5 billion outlook we provided just one quarter ago. And importantly, even as our revenue base becomes significantly larger, our growth rate is accelerating. We now expect fiscal 2028 revenue to grow approximately 50% year-over-year, compared with approximately 45% in our prior outlook. With that, let me provide color on our current business, beginning with data center. In our data center end market, we delivered record second quarter revenue of $2.17 billion, representing 18% sequential growth and 46% year-over-year growth. Both sequential and year-over-year growth accelerated from the first fiscal quarter, when data center revenue increased 11% sequentially and 27% year-over-year. Now, looking ahead to the third fiscal quarter, we expect this acceleration to continue, with data center revenue forecasted to grow more than 20% sequentially and roughly 75% year-over-year. The drivers of this growth remain very broad-based as AI demand for our products continues to rise. We are seeing strong tailwinds across each of our data center businesses, including interconnect, switching, and custom. Connectivity continues to be a critical enabler of AI performance, driven by robust demand for both our interconnect and switching products. Thus far, the largest driver of growth for these businesses has been for scale-out applications. Here, Marvell's market-leading franchises in optical DSPs, switching, and broadband analog components continue to see significant demand. On the optical DSP side, 800 gig demand remains strong, while our 1.6T business is ramping rapidly, a trend we expect to accelerate further in fiscal 2028. Within scale-out switching, our business remains on track to more than double this year, driven by a strong ramp in our 51.2T products across a broadening array of customers. And within broadband analog, demand for our industry-leading TIAs and drivers continues to exceed expectations. Now, moving beyond scale-out, we expect this connectivity strength to broaden as hyperscalers build significantly larger AI clusters that increasingly span multiple data centers. As we've discussed on prior calls, aggregate bandwidth requirements for these scale-across networks are projected to be more than 10 times greater than those of current front-end DCI networks. Marvell is ideally positioned to address this opportunity through our leadership in coherent DSP-enabled 1.6T ZR and ZR+ DCI modules. Finally, we continue to expect the adoption of scale-up networking and AI infrastructure to create a massive new TAM for Marvell. Scale-up domains are expected to become significantly larger, requiring high bandwidth interconnects closely coupled with high radix, low latency switches. Now, while customers are initially deploying copper interconnect for scale-up networking, as cluster sizes grow, the reach and bandwidth limitations of copper are increasingly driving customers towards optical interconnects, as well as purpose-built UA-Link, ESUN, and NVLink scale-up switches. As a result, we are investing aggressively to lead the industry in next-generation scale-up optical interconnect and switching technologies. On the interconnect side, pluggable modules remain the primary form factor for scale-out networks, and we do not expect that to change. However, the significantly higher bandwidth density required by scale-up networks is best served by bringing optics much closer to XPUs and switches. While the transition in scale-up networks from copper to optics is expected to take several years, with both technologies coexisting, customers are aggressively planning scale-up optics deployments starting as early as next year. Given how early we are in this transition, customers are evaluating a broad range of potential solutions with multiple technologies under consideration, including NPO and CPO packaging options, with both leveraging advanced silicon photonics as well as 3 different modulator technologies, MZM, EAM, and MRM. Each of these choices has different considerations around cost, power, and technology maturity. Importantly, given the breadth of our optical portfolio across modulation technologies, fully supported by our broadband analog TIAs and drivers, Marvell is uniquely positioned to help customers move towards the optical scale-up architecture that best meets their needs. The full spectrum of Marvell-developed solutions is reflected in accelerating design activity with a broad set of customers. In addition to our ongoing success in CPO, we are also seeing a strong adoption of our NPO solutions at multiple customers. As a result, our fiscal 2028 revenue outlook for scale-up optics has increased meaningfully compared to prior expectations, positioning Marvell to be one of the largest enabler of NPO and AI infrastructure. Moving to scale-up switching, we are seeing similar momentum. Marvell is uniquely positioned to support all 3 purpose-built scale-up protocols through our internally developed UAL and ESUN switches, as well as our expanded partnership with Nvidia around NVLink Fusion. Our scale-up switches leverage decades of experience developing large reticle-sized switch silicon, combined with our in-house, best-in-class, high-performance SerDes technology. The close coupling of optics and switching in scale-up networks provides another important differentiator for Marvell, given our market-leading positions in both technologies. This allows us to deliver highly optimized scale-up solutions designed to provide customers with exceptional performance and reliability while accelerating time to market. As a result, we are engaged in multiple deep discussions with Tier 1 customers across our scale-up switch portfolio, with each engagement representing a multi-billion-dollar lifetime revenue opportunity, given the expected size of the scale-up TAM. Taken together, we are extremely excited about the continued acceleration and broadening of networking demand as AI architectures require ever-increasing performance across scale-out, scale-across, and scale-up domains. Okay, now let's turn to the custom business within our data center end market. As I mentioned earlier, we are seeing a significant acceleration in custom demand in the second half of this year. We remain confident that this business will more than double year over year in fiscal 2028 and accelerate significantly in fiscal 2029. We expect this growth to be driven by both our XPU and XPU attached products. In XPUs, we continue to make strong progress across current and next generation programs at multiple hyperscalers. And in XPU attach, we are benefiting from increasing demand for both CXL and custom NICs. Looking further ahead, we expect our custom business to continue to deliver strong revenue growth as we see ongoing robust design activity with hyperscale customers. The most recent example of this momentum is the 8K we filed last week, disclosing an expanded commercial agreement and associated warrant with a key hyperscaler, one of the largest adopters of custom silicon. The warrant agreement encompasses custom programs already in execution that were awarded to Marvell over the past several years, new design wins, and future potential programs. The warrant structure reflects the scale and long-term potential of the relationship and further aligns common interests as our work together expands. It spans a broad range of custom silicon programs, including those that attach to the TPU ecosystem, such as AI inference accelerators, storage controllers, network interface controllers, memory interface controllers, and near memory compute. We look forward to continue working closely with this customer to enable the next generation of AI infrastructure. This expanding range of attached products and the scale of this agreement provides significant validation of the XPU attached category that Marvell has pioneered. We are excited to see both the use cases and attach rates for this.
Is that Ren's call starting now?
Continue to broaden. These
It
products
is not
are built
live
upon
yet.
a rich portfolio of Marvell IP and perform specialized functions designed to significantly improve the performance and efficiency of the overall AI data center. This is another strong confirmation of Marvell's leadership in connectivity, compute, and memory technologies, and the increasingly important role they play in enabling our customers to design more advanced AI infrastructure. In terms of the impact of the new warrant agreement, revenue from programs covered by the agreement through fiscal 2028 is already reflected in the overall custom revenue target we have previously provided. Looking at fiscal 29 and beyond, this agreement, along with several additional programs, gives us even greater confidence in our ability to grow the custom business to a significantly larger scale in that time frame. We look forward to sharing more details on the long-term trajectory of our custom business at our upcoming Investor Day. Turning to our communications and other end market, we delivered second quarter revenue of $568 million, down 3% sequentially and up 10% year over year. Going forward, we expect revenue to remain somewhat lumpy on a quarterly basis, given the mix of businesses in this segment. For the third fiscal quarter, we expect revenue to decline in the low to mid-teens % range, both sequentially and year over year, followed by a solid sequential recovery in the fourth quarter. To summarize, the momentum across our business remains exceedingly strong. In the near term, that strength is reflected in the significant increases to our outlook. Compared with the expectations we provided just 1 quarter ago, we have increased our fiscal 2027 revenue outlook by approximately $500 million and our fiscal 2028 outlook by approximately $1.5 billion. The center of this higher outlook is our data center business.
The IREN call is not live yet, so there's nothing I can switch to. This happened last time. It didn't start till 5:15. It should be starting now, which is what it says on the website. But as you can see here, there is nothing that is live. So
IREN's capex for fiscal 27 is $25 to $30 billion. That's quite a significant amount.
Was it similar to that last time?
I don't know if they gave us last time a fiscal 27 capex number, but it's a big one.
Okay, it just flipped live. Don't hear anything yet, but
hopefully it's a little bit louder than the frickin' Marvell call was quiet.
Yeah, dude, these companies, they need to get microphones, like multi-$100 billion companies with horrible audio.
So what are we thinking? Did anything interesting other than Nvidia buying Hugging Face that also came out of nowhere? And then Hugging Face released a robot, a tiny, like a cute robot I saw.
Oh, I didn't see that.
Wait, what robot company?
Hugging Face. I think Hugging Face released like a tiny robot thing. Wait, where was it?
Nvidia did buy them, which is cool. Oh, you know, Kevin Durant put in 250 grand into Hugging Face, and now it's worth 60 million.
Yeah,
it was in their seed round, right?
Yeah.
So Hugging Face, $399 open source duck robot called Micro Duck.
Okay. All right, I think call is live.
Star 11 again. Please be advised that today's conference is being recorded. And I'd like to hand the conference over to your first speaker today, Mike Power, Vice President, Investor Relations. Please go ahead.
Operator, good afternoon and welcome to IREN's FY 2026 results presentation. I'm Mike Power, VP of Investor Relations, and with me on the call today are Daniel Roberts, co-founder and co-CEO, Anthony Lewis, CFO, and Kent Draper, Chief Commercial Officer. Before we begin, please note that this call is being webcast live with a presentation. For those dialed in by phone, you can elect to ask a question through the moderator after our prepared remarks. I would like to remind everyone that certain statements made during this call may constitute forward-looking statements. Those statements are based on current expectations and assumptions and are subject to risks and uncertainties that could cause actual results to differ materially. Please refer to slide 2 of the accompanying presentation and our SEC filings for more information in that regard. With that, I will turn the call over to Dan Roberts.
Thanks, Mike, and thanks everyone for joining us. So Will and I started this business on a pretty simple observation. The digital world scales almost instantly. The physical world does not. Power, land, data centers, these things take years to permit, finance, and build. And this was the year that stopped being a thesis and became the defining constraint of the whole industry. So if we look at the chart on screen, across 8 models tracked by Open Router, weekly token usage across large language models increased nearly 17 times in 8 months. Every one of those tokens runs on physical infrastructure. It is very difficult to serve demand shape like that with infrastructure on 3-year lead times. And this is the start of the cycle, not the end. Cheaper compute doesn't make existing things more efficient. It makes new things economic. Infrastructure enables applications. Applications create demand for more infrastructure. Every build out in history has worked this way. And that's the structural disconnect, and it's only getting wider. So let me walk through how we're set up against that backdrop. So we operate across 3 layers from the bottom up. So first of all, it's the data centers, the land, the power, the substations, the cooling. Arguably the hardest layer to build, and that's where the shortage begins. Then the compute, the GPUs, storage, networking that go inside the data centers. And then finally, software on top, the managed services and enterprise support. That's where Mirantis lives for us. And just today, Mirantis was named an inaugural NVIDIA certified hypervisor. So we've now got NVIDIA validation at the software layer as well as the hardware. Why own all 3? Because each layer makes the one underneath it worth more. A grid connection is worth more with a data center on it. Worth more again with GPUs inside. More again with services wrapped around the customer. Most of this market rents at least one of those layers. We own the entire stack. So here's how the year went. Just move on to highlights, please, operator. Thank you. 4 things to take away from this update. And I'll be quick because there's more detail coming a little bit later. So firstly, customers. New multi-year cloud contracts, including Cohere, Prometheus, Perplexity, Figure AI, Fowl AI, Higgsfield AI, and separately, a leading frontier AI lab whose name we're not able to disclose just yet. Revenue, $4 billion of ARR is now contracted for our 2026 capacity. And 1 billion of that is operating today. This does not include revenue expected to ramp in 2027, such as the $700 million of ARR associated with our NVIDIA cloud contract. Delivering, Horizon 1 was delivered to Microsoft this month, the first of 4 50-megawatt deployments, with Horizon 2 through 4 targeted for the December quarter. And finally, funding. $6.5 billion of GPU financing now in the past 3 months. With prepayments, that's more than 100% of the associated GPU CapEx funded. And 2.8 billion of it needed no investment grade offtake and still priced in the single digits. So let me start with customers because everything else follows from them. Our 2026 capacity is largely sold out. So the questions we get now are all about 2027 and 2028. We're continuing to contract future capacity deliberately. Every contract opportunity gets weighed on three things. Firstly, who and what does this counterparty add to the platform? The strategic merit, not just the revenue. Second, what are the economics? Price, prepayment, term, etc. And thirdly, what might it open up longer term for managed services and software? We've been saying this for a while now. Signing deals is not the bottleneck in this market. Bringing GPUs online is. We also don't need an investment grade offtake to fund GPUs anymore. So we're not chasing headline announcements. We're making long-term decisions about where we want this business to be. And when we'll sign, we'll tell you. We're in late-stage discussions with a range of new customers over a significant portion of 2027 capacity, and 2028 conversations are well underway too, both on customers and financing. Longer term, we want to keep building a deep, diversified base of customers across the AI ecosystem, all who have master service agreements with IREN. Every megawatt we build is scarce. Before every new cluster switches on, we want it in demand from both existing customers and new ones. So not dependent on any one customer, any one negotiation, or any one point in a pricing cycle. And here's who's on the platform today. So as I mentioned earlier, the headline is the new multi-year contract with a leading frontier AI lab. And to be clear, this is a new contract. It's separate from Prometheus, who we can now name as the unnamed AI developer from our July announcement. The most sophisticated buyers of AI infrastructure in the world keep choosing us. It also shows the strategy is working. We started concentrated because big customers with immediate demand were the fastest path to scale. As the platform's grown, we've deliberately broadened. Hyperscalers, enterprises, AI developers, now frontier labs across both training and inference. But honestly, the part we care about most is the third bullet point. Existing customers keep coming back. Together AI and Fireworks AI have both renewed and expanded. New logos are proving demand, whereas renewals continue to prove ongoing delivery and ongoing execution. Once we've deployed with a customer, we grow with them across sites, GPU generations, and service levels. And in terms of who is signing and growing with us, Prometheus and Figure are building products for the physical world, robotics, real-world automation, and they're contracting our compute to do it. AI is moving well beyond chat. This is the thing we keep telling people. You cannot size this market of today's usage. And that is exactly why the market keeps getting caught structurally short of compute. Now let's move on to pricing. So pricing has moved a lot. 3-year contract pricing is up about 125% since November. 5-year is up about 70. Recent 3-year contracts are pricing in excess of $20 million per megawatt of IT load, paying back the compute investment in around 2 years, while active discussions are now at around $25 million per megawatt. Recent customer prepayments are funding 45 to 55% of the GPU capex. What's behind that? The market's tightened, no question, but it's also who we're signing, how the deals are structured, and what we attach on top in managed services, which Mirantis keeps expanding. Shorter duration and on-demand sit above that as further upside in due course. Revenue per megawatt is shorthand, by the way. We look at the whole return: price, term, prepayment, utilization, customer quality, and expansion opportunity. And to be clear about what we're not doing, we're not sitting on capacity to time a spot price. We allocate capacity to build the customer base and the platform as we see fit. The pricing follows that. Okay, so from customers to what we're building. The targets, roughly 300 megawatts of IT load delivered in 2026 and another half a gigawatt in 2027. That'll take the platform to around 1.2 gigawatts in 2027 of gross capacity. And we're continuing to build across Texas, British Columbia, Oklahoma, South Australia, and Spain. And right now, today, there are more than 4,000 people mobilised across our active sites. The best example of that today is Horizon 1. So, as we announced earlier, Horizon 1 was delivered to Microsoft. First of 4 50-megawatt liquid-cooled deployments at Childress, and it achieved NVIDIA Exemplar Cloud status on GB300 NVL72, which matters because it proves we can integrate and operate the full platform, hardware, networking, and software, not just build the shell. The delivery matters, but the template matters more. Every Horizon uses the same design, the same supply chain, the same site team, and each phase carries the lessons of the last. Horizon 2 is in the process of working towards commissioning. 3 and 4 are in late construction. So all 3 are targeting delivery in the December quarter. And that approach is running at every site. So quickly on 2026. At Childress, retrofit work and GPU installs are running in parallel on the air-cooled cools. At Mackenzie, GPUs are being racked across the first 2 buildings. At Prince George, the air-cooled fleet is now fully commissioned and liquid-cooled installation is underway. All of that remaining capacity is targeted for the December quarter. Then 2027. Sweetwater 1 is in full swing now. First building is going up. The primary substation is progressing. At Childress, Horizons 5 and 6 civils are now moving and underway. And another 250 megawatts of air-cooled conversion progressing. And it's also worth mentioning in terms of Canal Flats, we've now decided to convert all of that to liquid cooling for GB300s. And that will deliver more value from power and a site we already own. But beyond that, the pipeline steps up again. 2028. Sweetwater 2 and Kiawah in the US, Bundy in South Australia, and Badajoz in Spain, roughly 300 megawatts, and the flagship of the Nostrum portfolio of sites we closed during the quarter. All up, more than 5 gigawatts announced, with a multi-gigawatt development pipeline behind it, including more Texas power, where a tighter interconnection process should favour real and well-capitalised projects. And then a quick word on design, because it answers a question we're starting to get a lot. So the bear case we hear on this industry is that AI data centres get rebuilt in 10 years. We've spent this year making sure that ours don't. Sweetwater 1 is becoming the reference design for Sweetwater 2, Kiawah, Bundy, and what follows after those. Common layouts, common equipment, more modularisation and prefab. Each project is inheriting the last one's lessons instead of starting from zero. And the design is built for successive GPU generations, evolving cooling, including 800-volt DC, all of which has been developed in collaboration with Nvidia. So we know compute changes faster than buildings, and ours have been designed to adapt to that. But we're also getting more out of what we already own. Our existing sites have spare power beyond current deployment plans. That headroom can support more GPUs and more revenue without the need for any new grid capacity. And new grid capacity is the scarcest input in this entire industry. So revenue that doesn't need it is about the highest quality growth there is. First up, new liquid-cooled installs at Mackenzie, Canal Flats and Prince George in 2027. And over time, tools like Nvidia Max LPS, which smooths GPU power draw, let us safely run more compute inside the same electrical envelope. But none of this happens without people. Our headcount nearly tripled in FY26, including hundreds of colleagues who joined through Mirantis and Nostrum, and we expect similar growth again in FY27. 5 C-suite appointments across development, product, marketing, innovation, and information security. People from Nvidia, AWS, Oracle, Google, and other leading data center operators. So building our organization ahead of the revenue is obviously deliberate. It costs money before it makes money, but this is where we're going. One last piece before I pass off to Anthony is how we're funding this growth. So GPU financing first, because now the model is proven at both ends of the credit spectrum. For the Microsoft contract, we raised $3.6 billion of investment-grade GPU financing at a weighted average of about 6%. With customer prepayments, that funded about 96% of the associated GPU CapEx. Now, here's where it gets really interesting. For non-investment grade deployments, so the rest of the AI ecosystem, we just closed $2.8 billion of equipment financing. That includes $2.4 billion at a 9% fixed rate for Mackenzie, led by Blue Owl and funds managed by PIMCO. A delayed draw term loan alongside senior secured notes, funding 90% of that GPU CapEx. Add prepayments of 45 to 55% on recent deals, and total funding well exceeds the cost of the underlying GPUs, which is good because that excess is now helping to support data center CapEx on those same and future deployments. And to date, talking about data center CapEx, we have deliberately kept 100% of our data centers unencumbered, which is a growing asset base we can finance when the timing is right. So on that note, Anthony will take you how that funds the plan and the results. Thank you, Anthony.
Thanks, Dan, and good evening, everyone. Over the past 12 months, we have secured circa $19 billion in funding, nearly $16 billion across customer prepayments, GPU financing, and convertible notes, alongside equity of approximately $3 billion. The vast majority of this funding is either in cash or yet to be drawn down, giving us significant capacity. For FY27, we're guiding CapEx of approximately $25 to $30 billion. Included in that estimate is delivery of the contracted Microsoft capacity, the other deployments to deliver on 2026 ARR, and GPU and data center CapEx for air-cooled deployments scheduled across calendar year 2027. It will also support new liquid-cooled data center capacity at Childress and Sweetwater 1 for delivery in the second half of calendar year 2027, as well as earlier stage investment for 2028 and beyond. Of course, the actual CapEx for the year will depend on a range of factors, including final costings, construction schedules, delivery timelines for GPUs and long lead items, the overall contracting environment, and the overall fundraising environment. Within that CapEx estimate, we expect data center and CapEx GPU requirements to be up approximately 15 to 20% for ongoing and new deployments, with revenue increases expected to ultimately outpace those increases. In respect to the funding plan, as noted earlier, we have a strong starting position. Approximately $14 billion of existing cash and committed GPU financing and prepayments. That includes $7.6 billion of cash on the balance sheet at 30 June, of which $1.7 billion is restricted, with most of that $1.7 billion set aside to fund Microsoft GPU CapEx. We're targeting roughly an additional $8 billion of GPU financing and prepayments in support of GPU CapEx requirements, noting the healthy prepayments that we are seeing in recent contracting and the growing market for GPU financing that Dan has spoken to. The balance of the requirement we expect to meet through data center financing, operating cash flows, and corporate sources. On data center financing, as Dan has spoken to, our entire data center portfolio is unencumbered today, including Horizons 1 through 4. So there is obviously a significant and growing asset base to raise asset finance against. Alongside the growing market for GPU financing, attractive customer prepayments, we feel well placed to scale our fundraising efforts to support the rapid growth of the platform. Now turning to the Q4 results and outlook. The quarter's results continue to reflect the ongoing transition to AI cloud. For the June quarter, revenue was $137.2 million, including AI cloud revenue of $70.5 million. This was down $7.6 million compared to the prior quarter as we decommissioned mining hardware ahead of GPU installations, partially offset by AI cloud growth. Cost of revenue also fell $6.6 million, mainly as a result of lower electricity usage from reduced mining activities. Net loss was $684 million for the quarter, largely driven by non-cash impairments of $450.4 million, mostly on account of decommissioning mining hardware, plus a $102.1 million decrease in fair value of mining hardware held for sale, both reflecting costs of transitioning our existing sites to AI cloud. We currently expect mining operations to be effectively decommissioned by the end of December 2026. We expect first quarter cash SG&A to increase approximately $40 to $50 million sequentially as we continue to invest for growth across sales and marketing, R&D, development, site and cloud operations, and other functions ahead of significant revenue growth over the coming periods. Which brings me to ARR. We exited Q4 at roughly $500 million of ARR. It's $1 billion today following acceptance of Horizon 1 by Microsoft, and that will carry through to the end of the September quarter. And we expect more than $4 billion of ARR by the end of the December quarter, which is already under contract and includes delivery of Horizons 2 through 4. A significant amount of the December capacity is expected to come on late in the quarter, so we will see the reported revenue effect come through predominantly in the March quarter. With that, I'll hand back to Dan.
Thanks, Anthony. So just one slide to close on. 2026 is largely sold out with the $4 billion of ARR now contracted. 2027 and beyond is deliberate runway for us. So this is capacity we're continuing to convert into a broader customer base and, of course, a richer service mix. Revenue per megawatt is rising, both on structural demand as well as site optimization, and that $4 billion comes from less than 10% of our 5 gigawatt plus portfolio of secured grid connections. So 8 years ago, we set out to solve the gap between digital demand and physical supply. I think it's fair to say the gap is here. We own the power, we own the land, we own the data centers, we own the compute, we own the people, the software, and we have the people to service it. So for Will and I, this is only the beginning. But operator, let's open the line for questions, please.
As a reminder, to ask a question, please press *11 on your telephone and wait for your name to be announced. To withdraw your question, please press *11 again. A moment for our first question. And our first question comes from the line of Mike Ng from Goldman Sachs. Please go ahead, Mike. Your line is open.
Hey, good afternoon. I just have two questions. First, I was just wondering if you could talk a little bit more about Mirantis and how it helps facilitate the commercialization of your compute. Was Mirantis used or helped to enable any of the signed or in negotiation deals today? Do you think you'll eventually use Mirantis to help sell some capacity into market aggregators like OpenRouter? And then I have a quick follow-up. Thank you.
Yeah, happy to jump in there. Thanks for the question. In terms of the Mirantis service offering, I think there's a few elements to that that help with our business today. Firstly, as you identified, it opens up effectively new customer classes to us. As we've spoken about at length previously, very large hyperscaler or frontier AI lab customers generally like to take compute on a bare metal basis, but smaller AI developers, labs, enterprise customers value having an orchestration layer offered over the top of bare metal compute. And so the Mirantis service offering, as it relates to that orchestration layer, can help open up that part of the market to us. In addition to that, it does give us the ability to provide compute in a different manner. So not only can we provide reserved managed services clusters, but it also opens up the potential for us to provide on-demand compute, as an example. In addition to the orchestration layer itself, Mirantis has a long track record of servicing enterprise customers in the cloud computing space, and they bring a number of other areas of expertise, including enterprise support, monitoring and deployment capabilities that can help us monetize our platform more quickly and continue to provide very high levels of customer service. So those are a few of the areas where Mirantis adds to our existing platform.
Great.
And I think
Thank you, Ken.
maybe
And
just
then,
just to add to that, I think we're now the only NeoCloud certified hypervisor from Nvidia as a result of today's announcement. So that kind of vertical integration, that full stack, is playing out live time.
Thank you, Daniel. And I just wanted to follow up on the CapEx outlook for next year, $25 to $30 billion. Is that all to support the 800 megawatts that you expect to contract next year, or is it beyond next year? And then could you maybe just talk about the financing plan beyond the $14 billion of cash, GPU prepayments, and other debt financing that I think you talked about?
Sure. Just in terms of the, and thanks for the question. Just in terms of the first question, so the 25 to 30 billion is obviously covering the financial year to June 27. So that covers all the CapEx requirements for the 2026 deployments that contribute towards the 4 billion ARR target. It covers expected data center CapEx and GPU CapEx for sort of air-cooled, the balance of the air-cooled deployments expected to come over the course of 2027 calendar year. And it also covers a significant portion of CapEx required for the liquid-cooled deployments in the second half of 2027 calendar year. It doesn't include CapEx requirements for the GPU compute for those new liquid-cooled facilities, which will be part of the following year's capital plan. In terms of financing, obviously we spoke to the 14 billion, so that's secured. I also spoke to 8 billion estimated of additional GPU-related CapEx, so that will be supporting the GPU deployments included in that 25 to 30 billion. Obviously, we've seen a very strong fundraising prepayment environment, which obviously contributes to that $8 billion number. And we've seen strong conditions, obviously, in GPU financing. Obviously, Dan spoke to the results that we've seen in the recent transactions, but there's obviously also been other transactions in the market, both for investment grade and sub-investment grade clients. We've also had the recent announcement by Nvidia alongside 6 of the biggest capital allocators in the world, announcing JVs, partnerships to support further financing of AI compute as an asset class. In addition to that, we obviously have 1 to 4, substantially built and being delivered over the course of the year. That's obviously unencumbered, as well as other opportunities we're looking at, both asset-backed and other group-level initiatives as well.
Great. Thank you for the clarification.
Thank you. We will now take our next question. And our next question comes from Paul Golding from Macquarie. Please go ahead, Paul. Your line is open.
Thanks so much for taking the question, and congrats on all the tremendous progress. I wanted to first ask about the British Columbia liquid cooling pivot, and wondering if you could unpack that decisioning process a bit. Sounds like there's excess power available, and there's obviously a revenue opportunity, but was wondering how you were thinking about the relative return there, and if that was organic or from demand that you've seen, or speculative. And then I have a follow-up. Thanks so much.
Primarily, Paul, it's driven by demand that we're seeing, and we do have a design that is very effective for the conditions that we see in British Columbia for liquid cooling. It is something that increasingly, as customers are looking towards future workloads, we do see the vast majority of customers over time looking towards liquid-cooled GPUs. And so we are certainly reflecting that in terms of the mix within our portfolio.
Great. Thanks so much, Ken. And then Anthony mentioned that the compute costs that are rising are being more than covered by revenue increases. I was wondering if, given the continued march upwards of compute cost, what the calculus is and your thought process and strategy around taking some of the excess liquidity from prepayments and the financings that you've done and allocating that towards data center build out versus maybe longer dated compute purchasing, given, and maybe on a speculative basis, given that price trajectory we've seen in compute. Thanks.
Yeah, I think in short, we're doing both. So as Dan mentioned, this is, you need all the layers in the stack in order to be able to sell compute. You have to have the data center capacity, and we continue to see extremely strong demand within the industry and a lack of capacity available to satisfy that demand. And so we will continue to build out data center space. We will continue to make compute purchases over time and continue to add that software layer over the top to be able to expand our addressable market and secure better economics over time. So we expect to see a mix of purchases on spec, as well as some purchases that may be tied to customer contracts. But as Dan said, contracts are not the driver in this industry. It's getting the compute online. And so that is what we are heavily focused on the execution side of the business.
Hey, Ken, for Paul, I might also just add to your CapEx question around that revenue, and it adds a little bit more to what Anthony said earlier. So if we step back and look at this revenue CapEx trade-off, the contracts that we're announcing now and the pricing per megawatt relates to GPUs that were ordered quite some time ago. So arguably they're reflective of natural price increases beyond CapEx inflation on those GPUs. Now, future generations of GPUs and costs are going up, but we didn't have to pay the cost increases on the revenue per megawatt that we've announced today necessarily, because they're the older generations, if that makes sense. But there's also a bit more nuance to our CapEx needs. So yes, we've guided total CapEx of $25 to $30 billion for FY27, but that we deliberately don't split it in or attribute that to a specific number of megawatts of IT load coming online, because the reality is that data center CapEx is running a year or two ahead of delivery. But that's the nature of substations and steel. So the mix in any given year is really a function of what we're delivering that year versus what we're building for the next one. So I think we are working on how we stagger data center CapEx and how we finance data center CapEx. As we mentioned during the presentation, 100% of our data center portfolio today is unencumbered, which creates a future opportunity. And when we're receiving prepayments equivalent to 50% of the GPUs, that's roughly equivalent to 100% of the data centers, because GPUs are roughly 2/3 of your fully loaded cost for the data centers plus the GPUs. And if you're financing the GPUs at 90% gearing already, then you can see how you've got this funding flywheel that's emerging that requires arguably little equity over time to finance it. But we've then got to overlay our ambitions are growing. We're building at a higher cadence to what we've done in the past. So those funding needs continue to grow. But we've got flexibility around growth based on optimizing the funding that's available to us at any point in time.
That's great color, Dan. Thanks so much. Maybe just a quick housekeeping question on the back of that, if I can sneak this one in. Just on the 2/3 compute versus data center CapEx, is that shifting at all with the increased cost of compute, or is the labor market being tight and other inputs on the data center construction side keeping that equation relatively stable? Thanks.
No, it's staying pretty stable. I mean, we're seeing inflation and costs across various components continue to tick up. So at a material level, I would assume that ratio stays relatively consistent.
Great. Well, thank you both.
Thank you. We will now move to our next question. And our next question comes from Brett Kuplock from Cantor Fitzgerald. Please go ahead, Brett. Your line is open.
Guys, congrats on the quarter. Great to see kind of demand trends around 26 and certainly 27 and 28. I'm curious, kind of following into Horizon 1 build out. We've seen a lot of deals recently with maybe lower PUEs. Are you seeing any design changes that might allow for lower PUEs at other sites that you guys have coming online, or other buildings coming online in 27 and 28? Or should we kind of think of that PUE with the Microsoft deal being somewhat static?
I mean, PUEs are never entirely static, but they are largely driven by the nature of the ambient conditions in which your data centers are operating. We've spoken before that we use a highly efficient closed loop liquid cooling system. And that means we have very effective PUEs relative to the broader industry. We do see some continued improvements over time, and part of that is driven by items like Nvidia's DSX reference architecture, where they have looked at how you can operate chips at higher temperatures without giving up any performance on the computing side, but allowing you to direct more of your overall megawatts towards the IT load. And away from cooling, but those are around the edges rather than being really material drivers of decreases over time.
And I think just to add, we've been deliberately conservative on the headline PUEs that we've advertised. We even had a slide dedicated into the deck to this thematic, which is we have spare power beyond our current deployment plans, and some relates to optimizing this PUE over time. The reality is the average PUE for a year is substantially below the maximum PUE that you require. So there's a few little tweaks that you can make that free up quite a lot of power capacity alone. We've then got the Nvidia DSX Max LPS opportunity, and we're aware others are using power management tools to oversubscribe megawatts as well. Like, there's a lot of flexibility within that envelope, and to date we've kept it simple. 200 megawatts of IT load for 300 megawatts of gross capacity, but we are also making it clear today that there is a reasonably sized opportunity in the portfolio to free up some of that spare power.
Awesome. And then maybe I could just follow up on some of the pricing commentary that came across quite strong, I think, in prepared remarks and the release. Kind of $20 million deals is what you're saying, or what you've signed. Now it's kind of somewhere around $25 million. Is that over what duration? Could you clarify? And is that more one-off, or do you think like that is kind of like the ballpark of maybe the average you're seeing across all the conversations you're having with customers?
No, we're seeing that consistently across live conversations with customers at the moment. And there are a variety of things that go into it. As Dan mentioned, we look at term length, prepayments, nature of the customer, likely growth requirements over time. But the pricing that we're seeing is relatively consistent at the moment. It continues to show an upward trend. We're seeing very strong competitive tension for near-term megawatts. So we certainly think that those numbers that we put out are indicative of where the market is currently at, with upward pressure over time.
And to be clear, they're 3 to 5 year deals, not 2 year, not spot capacity. There is a substantial opportunity if you wanted to optimize near-term quarterly P&L to go and sell spot on demand. And that is something that we might entertain as part of the portfolio approach over time. But today, we are loving just building the customer base, diversifying across the AI ecosystem, having longer-term contracts, getting really accretive financing back in those contracts. And over time, that'll buy us a license to dabble more into on-demand, shorter-term contracts, introduce software leveraging Mirantis and other capabilities for higher revenue profiles.
Thank you, guys. Appreciate it.
Thank you. We will now take our next question from Michael Donovan from Campus Point. Please go ahead, Michael. Your line is open.
Hi. Thanks for taking my question. Just go back to the 25 million in revenue per IT megawatt. How do the economics you're seeing in the US compare with what you're seeing with initial conversations in Spain and Australia?
I think very consistent. At the end of the day, this is largely a global market for compute. A number of the customers that are accessing compute out of North America are based overseas, and so it does drive a genuine global market for compute. And there may arguably even be additional scarcity factor in some of those other locations where it relates to things like sovereign AI, for example. So I think that pricing that we're seeing in North America is very indicative of global conditions.
Thank you. And then one more follow-up, if I may. I wanted to get clarification on the Nostrum acquisition. So it's my understanding it brought roughly 490 megawatts. In your prepared remarks, you mentioned Badajoz accounting for roughly 300 megawatts. For that difference, is the 190 megawatts across a couple of different sites, or how should we think about that?
Yeah, so there are a number of other development sites in the Spanish portfolio where we have capacity secured, but Badajoz is the key site that we chose to focus on today, as that is the nearest term build out and the largest site within the portfolio.
Thank you. Congrats on the progress.
Thank you. As a reminder, before we move to our next question, please press star 11 if you wish to ask a question now. Next, we have Nick Gels from B. Riley Securities. Please ask your question, Nick. Your line is open.
Yeah, thanks, operator. Good afternoon, guys. Just wanted to ask one about Texas. I know it's not a fun topic, but was just curious if you could touch on what some of these dynamics have enabled from a commercial perspective, just given that you already have 2 large-scale energized sites there. Thank you.
Hi, and by the dynamics, are you referring to Governor Abbott's directive or something else specifically, Nick?
Yeah, Ken, exactly. Just the directive and just given the uncertainty around some of the kind of earlier stage sites there, if that might have pushed some potential deals more towards your corner.
Yeah, I think as it relates to Governor Abbott's directive, if you look at what that is targeting, it looks at things like transparency, grid reliability, water usage, issues in terms of impact on local communities. And these are all things that we've had a specific focus on from day one and have always been important to us. So if you take Childress as an example, we funded all the required grid upgrades for that project. As you know, we're located a number of miles outside of the main town area there, where we don't have residential neighbours and we're not impacting neighbours or the local community from an operational perspective. We use a highly efficient closed-loop water cooling system, which has very minimal ongoing water usage over time. So I think everything that we've done in setting up our sites and our portfolio, is in line with what Governor Abbott came out with in his directive. So I think in that sense, we actually welcome the additional transparency within the market. And then, as you mentioned, we do have 2 very large sites already energized in Texas, which I think positions us extremely well outside of just those dynamics that I mentioned as we move forward here.
No, thanks, Ken. That's helpful. And then maybe just as a follow-up, we've seen a lot of deals where there's kind of initial contracted capacity, but then there's an expansion option, maybe with exclusivity for some period. And I can't recall IREN having, with any of those expansion options embedded. Is that something that you're considering in future deals, or have you kind of intentionally strayed away from those options?
Yeah, we've intentionally strayed away from that historically, but it's obviously part of the bespoke conversation with each customer. As you would guess from our thesis, which Dan outlined again earlier in this call, we see very significant value in infrastructure and compute moving forward. And so if we're going to give up an option to somebody over that, we need to be compensated for it. So it really just comes down to that dynamic. But yeah, we've generally shied away from it previously because we see more value typically than the counterparty.
Understood. Well, thanks, guys, and keep up the good work.
Thank you. We will now take our next question from Mike Colonnes from H.C. Wainwright & Co. Please go ahead, Mike. Your line is open.
Hi, Dan and team. Thank you for taking my question, and congrats on all the strong momentum here across the AI cloud business. Just one for me. I was hoping to get more color around how you plan to allocate future uncontracted capacity here. Really the specific customer segment you're most interested in pursuing heading into 2027, and how you guys are thinking about balancing pricing with financing costs when evaluating larger versus smaller customer contracts. It feels like you're trying to monetize a little bit higher on the stack with the acquisition here. Just trying to get a sense of how you guys are evaluating these deals.
Yeah, I think Dan touched on a lot of the elements that we look at earlier in terms of the earnings overview. I mean, we look to the type of customer, the industry they're in, their planned growth rates over time. As you would have seen with our customer mix, it has been shifting towards direct end users of compute. We now have added additional names in the AI native space, a large leading frontier AI lab, as well as some of these physical infrastructure related AI developers. So we see a lot of very attractive profiles across the sector, and for us, as Dan mentioned, we've been aiming to diversify our customer base over time. We have a range of attractive long-term contracts within the portfolio that now set us up for very attractive economics as we move forward here, and that in turn buys us some additional flexibility to be able to look at different monetization methods, whether that is selling on a shorter term basis in terms of reserve contracts that drive additional economics, whether it's looking at true delivery of on-demand compute, whether it's managed services offerings versus bare metal. And one of the nice things with the position that we're in today is we have optionality over all of those different areas, and particularly with the development of the financing market for sub-investment grade counterparties, which is something that we always expected to develop, and we're now really seeing the proof of that. It means that we can still continue to get very attractive financing for a range of different customer types. So we're certainly very excited at the prospects as we move forward here, being able to monetize the platform in different ways and get additional economics over time.
Appreciate all the great color, Kent.
Thank you. We will now take our next question from Ben Summers from BTIG. Please ask your question, Ben. Your line is open.
Hey, yeah, thank you guys for taking my question. So I wanted to ask a bit on the conversations we're having for 2027 and 2028. It makes sense that we're maybe not exploring some like the really short duration stuff now, but as you think about what you're hearing from customers in terms of the window from 3 to 5 year contracts, kind of where are you seeing most customers heading from within that time range, and what's the ideal, if there's any time length in your guys' perspective?
I'll jump in, Ken. I think we're starting to see longer term conversations, conversations around longer term than just the 3 to 5 years. But this is the balance, right? We're running it essentially as a portfolio. Anchor tenants like Microsoft give you the scale, the duration, and cheap capital with the 6% GPU financing, whereas AI developers in the broader market give you slightly higher pricing, good prepayments, and a lot of where the growth is. So we want to remain flexible. At the end of the day, the framework for assessing new customer contracts is, as we have outlined on this call, it's who and what does the counterparty add, what are the economics, and what does it open up longer term. And yes, there's a trade-off. The investment grade anchor gets a 6% money, non-investment grade gets 9%. So it sounds like the investment grade wins on that until you start looking at the pricing, until you start looking at the prepayments funding around 50% of the GPU capex. And I think those prepayments are probably the most exciting part for us, when they're funding half the GPU capex up front on top of the 90% financing we're getting already. These guys are sending a pretty clear signal. It's not just about contracting capacity. They're starting to finance our build out for us. And I think that tells you a lot about demand, more than any pricing chart in a presentation.
Super helpful. And then just one more, if I could. If you could just give any color on preliminary conversations around potential data center financing. I know you guys talked about potentially pursuing that down the road. So just wanted to ask around any preliminary conversations you've had there.
Yep, lots of preliminary conversations, and we'll let you know when we close one. But we've been busy. There's lots going on customer side, lots been going on the GPU financing. That's been the lower hanging fruit. We've previously mentioned we'll look at refinancing effectively horizons as they're commissioned, as it makes sense to wait till they're stabilized to get a better financing package. We'll look to finance data centers as they're commissioned, but potentially also in advance of commissioning. And one of the challenges we have, and the opportunity associated with being vertically integrated, is you've got this staggered GPU capex, which starts a couple of years out from commissioning. Sorry, not GPU, data center capex, which starts a couple of years out from commissioning, because you need to order the steel, you need to order the transformers, you need to order a whole heap of long items. And yes, a lot of those payment milestones are back-ended, but capex is incurred in the lead up to commissioning, and find efficient ways of financing that to allow us to scale into that 5 gigawatts really quickly, let alone the multiples of that sitting behind it in our pipeline. Like, that's the big unlock for us. Like, the customers, they're there. Like, I don't think anyone's disputing that anymore. So for us, it's all about that capital flywheel and managing it efficiently to get us in a position where we can meet that market demand, because we are in a really, really unique position, because we started 8 years ago. We locked up all the land and power. We've aggregated the team, the expertise, the partnership and collaboration with Nvidia to build and operate these things. And capital efficiency is a really big part of the next unlock. And GPU capex efficiency is now here. Like, objectively, the data we've published today, what we've closed, that is efficient, and it will only get better. In terms of the data centers, that's the next frontier, and we're pursuing it, and we're excited about it.
Super helpful. Thank you for taking my questions.
Thank you. We will now take our next question from Joseph Vafi.
All right, guys, I have to go. Tanner will continue streaming it. I gotta get out of here, but I'll see you guys when the market opens tomorrow. Bye, everybody.
I don't think his mic was there, but he's got to go at 6, and I got the stream here. So
we're having a lot of discussions on financing. Obviously, you've got a lot of resources available at your disposal, but it's a big industry, and a lot of people are doing a lot of financings out there right now as well. Just some high-level thoughts, maybe Anthony or Dan, on the financing environment, sustainability of the industry to continue to finance this broader build out at this pace. If there's anything that you're worried about there, how IREN may have some advantages, given its different pieces to the business, and then a quick follow-up.
Cool. Thanks for the question. I guess we've touched on a few of the sort of fundamentals at the moment. I guess we're seeing, if the evolution of the market has been on the GPU financing, we've seen it started as a private credit-led product at sort of mid-teens returns, and investment grade cost of capital now is sort of in that 6% area. We've obviously seen the market open up in terms of the pools of capital participating in GPU financing. So private, public markets, investment grade, sub-investment grade. That's all positive. We've obviously, as I touched on, also had the other considerations, such as the big announcement by Nvidia with 6 of the biggest global allocators, which will provide more support to the market. We've also spoken about prepayments, which are obviously a big part of the overall funding position as well. We've obviously also seen the data center financing market evolve as well to support the infrastructure to build out, both in the high yield and the investment grade space. And obviously there's obviously very strong conviction in capital circles in terms of the sustainability and outlook for I guess this fundamental shift that we've had in technology and the investment that needs to be made, and also conviction in the returns that will ultimately come. So I guess it's really that conviction which I think will attract capital and continue to attract capital. Obviously, we need to continue to evolve our plans subject to market conditions, and obviously market conditions can go up and down, and obviously we need to be nimble and flexible in terms of how we adapt to that environment and adjust our plans accordingly.
We hear this question a bit, Joe, which is, can the financing keep pace with the asset class? But let's just look at what happened. 12 months ago, GP financing barely existed as an asset class. And then in the last 3 months, we've raised $6.5 billion of it at both ends of the credit spectrum. So that's not us getting lucky with financing. Like that's a market forming, and markets, they form the same way every time. Think about real estate financing. Like no one asks whether an office tower with a signed tenant can get a mortgage. There's a whole capital stack that exists for it: construction finance, term debt, institutional money, because the cash flow is contracted, the collateral's real. And that stack took years, probably a decade, to build for property. And it's building for AI infrastructure in months and quarters because the same ingredients are there: the hard assets, the contracted revenue, the institutional counterparty. You know, Blue Owl and PIMCO, like they're not bit part players. They're the largest infrastructure lenders in the world. And they've now underwritten us, and we've got a dialogue at the highest levels there. But I think the analogy actually undersells it a bit, because a building leased for a few decades at a few % yield, like our contracts are paying back this compute investment in around 2 years, with customers prepaying half the capex up front. So lenders can see their money back in really short timeframes. And property finance never had economics like that. So I think whenever there's a new emerging market, like if the demand is real, the financing follows. It always has, whether it's for railway, for telecoms, for property, for power. And in terms of whether the demand is real, I think the customers are proving it. They're proving it with prepayments. They're proving it with their end markets and their results and their revenue and their customer market traction. So the layer that hasn't really started and developed as much as the GPUs are the data centers. But in traditional speak, the data centers are actually the easier ones because they're more closely aligned to property and real world infrastructure. And there is cash there. We know that. And it's waiting for us to pull the trigger. And we'll look more closely at that over the coming months.
Great. Thanks for that color, Dan and Anthony. Much appreciated.
Thank you. That was our last question for today. I'll now like to turn the conference back to Dan for his closing comments.
Thanks, operator. Thank you, everyone, for joining. So the short version of FY26, 4 billion of ARR contracted, 1 billion is operating today. Horizon 1 has been delivered to Microsoft. And as we've just touched on extensively, a funding model that's working efficiently at both ends of the credit spectrum. So all of this achieved on a fraction of the platform that we've got today. And I guess shout out to the IREN team around the world and everyone who has joined us in recent months with Mirantis, Nostrum, a variety of broader players in the market. Keep doing what you're doing. The plan doesn't change. We keep delivering capacity. We'll keep converting it into durable customer relationships, and we'll keep funding it with discipline. Thanks, everyone. We'll see you at the next result.
Neil, that was IREN's quarter. I don't know. I don't think you're a shareholder today. But how did you feel about that? It seems to me that this was the last quarter before a real inflection in their growth. Do you think that it's a lot of just... I'll just let you speak. I don't want to bias your commentary here.
I'll just say this was a painful call. What was mentioned, just first of all, the guy at the start just kept on saying how we are looking at things is not the correct way to look at things because we are doing this way, we are doing this that way, and the way we're calculating things makes a lot more sense. Like, dude, like, shut the F up, start delivering some results. Thank you. And like even the ARR numbers, like every time I look at the little number 1, the little number 2, and it's always the same. Like even the calculation for ARR, the $1 billion operating one turning into $4 billion, it's not truly turning into the traditional ARR numbers. So many things, like just keep it simple. Like when we look at CoreWeave, when we look at Nebius, it just makes a lot more sense that they're not talking about, oh, we have this and we have like it's at almost the end of 2026. Stop already with your we have this energy and land and blah blah blah. Like companies are deploying gigawatts now. It's nothing new. Like you don't have some magic potion that nobody else has.
Mhm.
So can we just stop with this BS? I don't know. It wasn't the greatest quarter out there. Plus this whole, oh, we've signed a frontier lab, we cannot disclose this just yet. Then you shouldn't have written anything.
Right. You
we're
may
being
just be in
honest.
talks or something like this.
Like, oh, we can announce it in the press release, but we cannot tell you yet. So what? Is there an agreement? Is there not an agreement? You're going to spend $25 to $30 billion in CapEx next year. How are you going to fund that fully? I don't know. And if you are planning on growing that much, why? I'm not seeing any revenue that justifies $25 to $30 billion in CapEx. If I look at CoreWeave, I see $100 billion in backlog. If I look at Nebius, I see gigantic deals and backlogs as well. So, like, what's going on here?
I think even going into this quarter, like, I think they might have missed revenue but not by a lot. It really came in how much we thought it would.
That's fine because they had a good Bitcoin mining business, which was very profitable for them. So that's fine. I was expecting revenue to be a bigger miss than this, but that's okay.
But next quarter is expected to inflect. I think we're expecting practically double the revenue next quarter than what we just saw this quarter.
Well, I sure hope so, right? Because you have to reach your own targets that you have been setting, and if you want to go to that $4 billion in ARR, it needs to go up significantly.
It needs to start going up.
Yeah.
Yeah, it's a tricky one, right? The stock currently, and I can pull this up, the market is not liking the reaction. However, it's not the only company that's down in the after hours right now. Although IREN is down, we're seeing Nvidia down roughly 0.8% as well. Some of the other neoclouds also down 0.5%. These are companies that haven't even shown off earnings. This is just the reaction overnight, down 1% on Nebius. So there is some of this that's baked in, but down 6.3%. Is there a possibility or is there a price where you would look to start a position in IREN? At some point, is the energy and the assets that they have worth a certain amount that, maybe under different leadership would make you want to be an investor?
And I've written this in private, but I mean, if they cannot execute, then I guess someone can come in and buy the whole thing. And then they can deploy things quicker because you buy the whole permits, you buy the whole land and all of it and all the contracted power, etc., etc. Maybe that's a success story, but I have Nebius, I have CoreWeave. They are executing, they are growing. I mean, Nebius is led by people that built Yandex, by computer scientists and mathematicians, not by finance dudes or Bitcoin dudes or whatever. So,
I mean, CoreWeave is Bitcoin dudes.
CoreWeave is Bitcoin dudes, but CoreWeave has been moving very quickly away from just Bitcoin dudes to being very, very close to Nvidia and very close to every other AI player out there. So they've made the switch, I guess, that IREN wanted to make, but as of right now, cannot.
Yeah, man, I think that one thing that they say, and he doubled down on it, and it almost makes me sick, is the commentary about it's not just about any customer. We're trying to find the right customers. And it's like, okay, well, I mean, the whole time that you're looking for the right customers, CoreWeave and NVIDIA are getting paid. Or sorry, CoreWeave and Nebius are getting paid.
NVIDIA is getting paid regardless, but yeah.
Yeah, they're getting paid. And you know what? 25 to 30 billion or 20 to 25 billion in CapEx. They're getting paid a lot. That's a huge amount of CapEx, which does make me think that they do have customers lined up if they're going to spend that amount. It doesn't all add up. 25 billion of CapEx on $100 million of revenue. Something must be inflecting.
Well, yeah. Otherwise, the dilution is coming, and
an unbelievable amount of dilution.
Yeah, it's a big one. Yeah. So either they really are signing a big contract with a frontier lab that could explain the $25 to $30 billion, and then okay, fine, I'll take everything back. But as of right now, it doesn't look great.
Yeah. I don't know if you were taking a look at Marvell's earnings, or Gap right now is up 14.5%. I think that's the big winner of earnings today, surprisingly.
I saw that Build-A-Bear was down 27%.
Is it really?
Yeah.
Wasn't Michael Burry long on that name?
I don't know why Michael Burry shorted Nebius and not IREN. Like, out of all of the neo clouds, he could have chosen this guy.
Their ticker is BBW?
Correct.
Okay. Down 27% today.
Yeah. I think they fired their CFO because sales growth was down or something like that. But it was previously a very performing name.
Okay, he's not... Michael Burry's not going to be happy. Today was not a great day. Nvidia up 9%, Build-A-Bear down 27%.
What? He owns a position in Build-A-Bear?
I think he's really long on it.
Well, he did buy Nvidia calls, so
he hedged it. He hedged it. Because even he knew they were going to do well.
Yeah, he doesn't trust his gut anymore. This guy's crumbling down, rightfully so.
Okay, is there anything else that you want to say to the IREN folk out there before we end up wrapping up this live stream today? I've been live since 1, so.
Yeah, I saw. No, nothing really. I mean, if I were a shareholder, I wouldn't be happy at all, because if you look at the other companies out there, everyone's executing, everyone's growing, everyone's coming with results or with big deals. And here only I hear explanations and how they're doing this and that. And like, you talk as if you are talking from a position of strength, like, hello, you are not the only one that can sell power and land and whatever. So I
don't know. If it continues to sell off and opens up much lower, I'm going to have a hard look at this. It definitely doesn't feel like the other names that we're invested in, but it's getting quite cheap. And as a trade, that does make me a little bit interested. If they can start to inflect and show real growth, and they have the backing of Nvidia, and they have, the power, obviously, you can turn around that ARR quite quickly. Like they talked about the $4 billion of possible ARR based on contracted power. So I don't know. Definitely one of the higher speculative names in the neocloud space, which is already speculative enough. So I guess.
So you would buy this as an energy play, not as a AI cloud play, or indirect.
Yeah, I mean, I think we're going to get to a point where, and Nebius kind of highlighted this, that they will be able to work with partners to give them the software and the customers what they need is capital and GPUs. Well, that's what IREN does have. So I don't think that any company in this space, in this constrained of a market, is going to go under. They might need to pay other customers in order to get situated. Maybe that's Nebius. Maybe they end up partnering with another company. But they have a lot of very valuable assets in this AI space, and that's what people are betting on right now. If it continues to sell off, at some point, that's going to get ridiculously cheap.
What's the market cap now on?
14 billion, but tomorrow it'll open up. Around 14.
Okay, so potential acquisition target for someone that needs all of it is not that expensive. Someone did say, like in the chat, just speculation that Frontier AI Lab could just be IREN doing.
Problem is they won't be able to get, like, because IREN's been at much higher prices very recently. I don't think you can buy this company in full for 14 billion. You have to put a $30 billion offer to get it.
Why, if it continues to go down or go sideways for a while, why would you put it at double the price?
Well, because management won't take it. I don't know. All I'm saying is if I do believe that an acquisition is going to come in, there's likely a premium on that unless they just continue to sink. But I think that they do a deal with. I think they do a deal with Nebius before that happens. And then if that ends up happening, I'd rather buy it today at 14 or slightly lower, depending on where it opens up at, for that $20 billion repricing.
Fair enough.
But I don't know, man. We're now down 7.2%. Very different than the other neoclouds. CoreWeave and Nebius ended up growing immensely. I think both went up double digits after their earnings. Nscale looking to go public here soon. That's another major neocloud. And then there was another one that was looking to go public. FluidStack. FluidStack's looking to go public as well. So there'll be a lot of players in this space to compare and contrast against for IREN, which either is going to make them look even better or, much worse.
Yeah. I mean, people think I'm just disappointed because I was going into these earnings and I said it yesterday. Like Nvidia gave the perfect layup for IREN, and I thought they would come out with much better, maybe not better results, but just some better news regarding the business, maybe a big announcement or something like that. So it's more about a disappointing side of things than me just trashing this company. Maybe I might sound like this. That's completely fine. It's past midnight here, so sorry about that. But yeah, when you see the results from all the other ones, and also when you look at like Hut 8 or White Fiber and things like even these types of names somehow managed to get some deals here and there. Sharon AI managed to get one also out of nowhere. Like suddenly, poof, that name pops up, Anthropic. Like, how?
Yeah.
So
Nscale just signed a $45 billion deal with Anthropic yesterday.
Yeah.
Incredible. I think that's like 3 times their market cap. Incredible. That said, those comments, a couple people have been saying it in the chat, absolutely true. Wall Street Journal just recently reported that Nvidia is stopping their revenue sharing deal with some of the smaller AI clouds. In the article, they highlight that might bring on some antitrust scrutiny, telling businesses how they can do business. So I'm sure they might have got a little bit of a warning, and this was never going to be a large part of their revenue streams anyway. So they just said, probably better to not be under the scope of some potential SEC probes. So maybe we go about this a different way. Who knows? That's not direct commentary. This is just a Wall Street Journal article. Maybe Jensen or some of the other spokespeople for NVIDIA will come out and give us some more color here. So that happened while IREN was on their call. But unless you have anything else to add, Neil, I think we wrap it there.
You can wrap it there. You've been live long enough.
Ladies and gentlemen, thank you so much for watching, sticking around for IREN's earnings, whether you come from my channel, Amit's channel, or Neil's channel. We thank you for watching. Until next time, guys, thank you all so much. Bye for now.